is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Are we?
Good morning, you knuckleheads. Happy Tuesday to you both. First day back. It's Tuesday. I'm all messed up.
You've been messed up. Like that's not a new development.
You've been messed up. I agree
Yeah,
with
that's
her.
not.
You guys didn't tell me. You guys are my friends. You're supposed to tell me I was messed
I
up.
tell you every day.
This is true. This is true. I will give you that. You do that.
Yeah.
I'll do that. You do that. Saj, you didn't get the green memo?
No. I don't own a green shirt.
Do you own green panties?
Maybe.
Oh no.
That went away.
How was your long weekend? You famously hate long weekends.
He loved it. He had a great weekend. I saw him on Instagram with a little baby. Everything was beautiful. It was wonderful. The weather was out freaking standing all weekend long. It was beautiful.
Was one for the record books.
It was.
It
Perfect
was good.
weekend.
I actually did go to the beach all weekend.
You went to your Michigan house.
Yeah, we were on the beach.
How was that?
We're on the beach all weekend.
How many people did you kick off? Was it a successful?
We patrolled the beach.
You patrolled the beach. You got.
My wife does.
But that house is under construction, so
I know.
it's like a rom-com where like the enemies to lovers romance where they have to go to this place but there's only one bed.
I don't think it's anything like that, to be honest with you.
I don't think it's anything like that.
It's a trope. It's a trope in the romance genre.
But it was really nice. This weekend, the weather was great.
Okay.
The weather was great. It really was great.
I came back that way yesterday. I rode past your
How far did
past
you
your
go?
cottage. I took US 12 all the way back
yeah.
yesterday.
Yeah.
So the
did
traffic
you
was
go
backed up
back
in
from
front of
where?
Redemax. It was back, and the traffic was really bad in New Buffalo.
Yeah, that's right where we are.
Yeah, yeah.
That area's gotten out of control.
Yeah, it was like on steroids. Luckily, I was on a motorcycle, so I just cut around people and went.
Yeah.
Anyway, it was
That's
fine.
very dangerous. You have to stay
They
in
were
your lane.
standing there, and the bike was getting hot, and I
I
just
know,
went
but that's
around.
very dangerous.
Okay,
You have to
thanks,
stay
Dad.
in your lane.
Yeah, you stay in your lane.
You know I'm right. You got to stay in your lane.
It's filtering. So wait, but did you swim in Lake Michigan?
No,
Okay.
no. I touched the water a couple times
You
with
touched
what?
it. Very nice.
with my toes.
Okay.
But I wouldn't go in. But I
Did you grill? Did you get your grill or working?
Yeah, I grilled all weekend. Yeah, I went in, I threw the dog, threw the dog a bone. I mean, a ball.
You threw
Stick.
the dog a bone.
Threw the dog a
Very
stick.
nice.
What's your over under on that throw going more than 3 feet?
It didn't go far.
Right? Yeah.
It didn't go far. I'll give
Yeah.
you that.
Threw the dog sticks, bones, balls.
What did you cook?
I cooked some steak,
Okay.
some pork chops,
Wow.
some shish kebab.
That's a lot.
Yeah, we cooked all weekend.
Okay.
Wow.
Yeah, just barbecued the whole weekend.
But there's not a single photo of any of this.
Oh, Case posted a bunch of photos.
Oh.
She did. She did.
I didn't.
The little guy takes up a lot of the picture, though. He's what
Wait,
you would
your
call-
grandson was there too?
Yeah. What we would call a load. Like he's just he's a big Cabbage Patch doll.
He's a round mound to rebound right now.
Aw. You know what? But that's fun because you were both wearing your
Healthy.
water.
In my neighborhood, they would call the kid healthy. He was very healthy.
He's healthy.
He's healthy.
You guys were both wearing your water diapers. That's
Oh,
nice.
that's so sick and wrong.
That's nice. Well, I don't judge. It's gonna happen to all of us.
It's gonna happen to all
So
of us.
twins.
God willing.
I'm
God
not
willing.
quite there yet, but close.
Close enough. Close
right.
enough.
Well, that's
Did
good.
you see what I built this weekend?
I did. I saw your sauna.
Yes.
Does it work?
completion.
I gotta get the electrician. Only got halfway with the stuff. I can't do this. I can't wire the 220.
Oh, it's not live though yet. Like
Not
so
live
you
yet,
need
but
power.
standing alone, it was 120 degrees in there yesterday.
Why?
Just from the sun,
From the
south
radiant
facing,
heat.
it gets sun all day long. So it was 120.
It's pretty impressive.
Yeah, it was 120 degrees in there. Just
Okay, I'm gonna make a market on number of times you use this.
there's already people saying there's gonna be mold growing on the inside before I even start.
Can
to
that
use it.
happen?
In the
gross.
first month,
No, I'm gonna use it.
In the
We use
first
the hot tub a lot. We use the pool a lot.
in the first month, you're gonna do.
It's my second hot tub. I mean,
In the
I've had a
first
hot tub
month-
now for almost 15 years.
Okay, in the first month, you're gonna use the sauna maybe 4 or 5 times.
Oh no. We're
I think
getting
it would
there.
be nice in the winter. I think it'll really be nice.
In the winter, they won't go to it once. They won't use it once.
No, you're so wrong.
You're gonna run outside in your bathrobe and then run in there.
That's exactly what you want to do. You want to get cold and hot.
Oh, sure.
Yeah.
I'm gonna sell you at. I'm gonna say you go to more Cubs games and use the sauna. Okay.
How much does it weigh? That whole
About 1,000 pounds.
That's it. Wow.
I humped that thing from front to back all by myself as my son was playing golf at the club.
Okay, well, that's
My
on you.
15-year-old was going to help me.
That's
but
on
he got
you.
an offer to play golf.
Did you call your son-in-law?
I could call my. Yeah, he's got a kid and another one on the way. He's got his hands full right now. I don't want to be part of their.
You don't want to get in the middle of that.
Yeah, I don't want to be a part of their.
Wait,
story.
Sasha's pregnant?
Yeah.
Oh,
Yeah, she's due
congratulations.
in-
Oh, I
thank you.
didn't
Thank you very
know.
much. Yeah, she's due in December.
Oh, that's wonderful.
She
little
gets
girl.
and she gets to make the calls, not him.
Yeah.
Oh, it's a little girl?
Yeah.
I hope she's born on December 13th, which is Taylor's birthday.
So does Tony.
For sure.
Oh, I bet your wife is having a ball. She gets to buy all the pink stuff.
Yeah, she's.
Oh,
excited.
that's fun.
Yeah.
No Florida for you this year.
No. So we have that.
If you go, you go by yourself.
Always.
All right. Well, that was
weekend.
good. You were working.
I worked hard.
Working hard to put that thing
worked hard.
together.
I worked hard.
What do you need to put that together?
You
Is
called
it
me. You
just
should have called me
slat?
yesterday. I had some time. I could have helped.
You know what?
Does it just slat in, or they're like?
It's like a big
screws, or
Lincoln
like-
log for those that are
Okay,
old
I was
enough.
curious. Yeah.
Those who are old enough. It's like putting together a Lincoln log house. It was quite easy actually. It's about 6 hours. I did it by myself, but
Right.
6 hours.
How do you get to the top of it though? Like the
Ladder.
Oh, okay.
Yeah.
Well, that's dangerous though.
Nah, only
Tell
like
me about dangerous.
6-foot ladder. It wasn't
Okay,
that bad.
well.
It wasn't that bad.
More accidents from middle-aged men falling off of ladders than.
Your dreams did not come true. I'm here. I'm fine. Nothing's
I don't
broken.
wish that on you.
I know.
I don't wish that on
Maybe
you.
just a little hurt, so I don't have to come in for a day or two.
I kind of wish you had fallen off just for fun.
No, you
Fun of
don't
it.
wish that on
Not like
somebody.
get hurt, just like,
No, I didn't have any.
like a small partial tear or something.
You don't wish
a little
that.
limp.
Just a little.
All right.
I could see that. I would wish the same on you. Not really hurt, not like
Choke,
permanent
monkey, choke.
damage. Just a little.
Yeah.
Right. I
Just a
get
little
it.
tear.
I get it.
All right.
The meniscus or whatever it's called.
So as I rode my bike home, I know you guys don't care about what I did for
We
Labor
do,
Day weekend.
we
You
do.
don't really. But
do.
I rode my bike home to Indiana, and I got to see my mom and dad, which is always great. But the weather was perfect. It was great riding there, riding back. Sadly, Notre Dame lost to
Watched it.
Miami.
I watched it.
Jamal was happy though.
Jamal was happy. I watched it. I thought it was. I thought it was definitely a good game,
Yeah.
but
I think all the games were good. Like I like how they're not just cakewalking it for the
well,
first.
first of all, Notre Dame blew that game because Notre Dame has a better team than Miami. They
Evidently not that day.
had a horrible game plan, horrible coaching for that one, and I like their coach.
Okay, I like to look at their coach.
I like
That
him
is
a
a
lot.
fine
That
man.
didn't take long.
That is a fine man.
I think he's the best coach in college football, but he wasn't on Saturday.
Really?
Yeah.
Wow.
And then, the other games were all okay. I think the talent level.
What do you think about Arch Manning? Is that a historical flameout, or just it was a tough game? It's like,
I mean, it's tough.
what side do you fall on?
Well, there's not a lot of people that go down to up to Ohio State, and
Around to Ohio State.
On the road to the horseshoe.
that place is intimidating.
Sure, yeah.
And Ohio State's good.
Well, Michigan wins there. Please don't write me.
I mean, that was another.
No, it's intimidating.
That was
Yeah.
another crappy game. All the games were. I mean, it was close, but it was crap.
Would you want them to bring back Appalachian State for week 1? Like, what? You're going to complain either way.
I'm not complaining. I'm just saying
You literally are complaining.
all the games were like the talent level was just so bad. I don't know if it's because all the transfers and everything else.
Yeah.
It just seemed like Then last night, the North Carolina game. Oh my God!
There was a game last night? I
Yeah, it
didn't
was
watch.
Belichick's debut.
Oh.
Yeah, it was
How
not.
do you do? I didn't.
How did Jordan do coaching?
They scored in their first drive, and I don't think they scored again all night.
Oh, no. Who did they play?
TCU destroyed.
Oh, Texas Christian.
They destroyed them.
Oh, Okay.
in North Carolina.
Yeah. All right.
But
That's the start of the Belichick era.
they have 70 new players. Okay, how do you have 70 new players in college?
That's the whole
Yeah, and this
roster.
whole
Aren't
team.
there only 70?
Basically the whole team. I mean,
Yeah, that's the whole. Aren't there only 70 on a roster?
At home games, I think you'd have more.
Oh, okay.
But there's 70 new players.
That's a lot.
Every single store. I mean, how could they possibly be good?
Can we talk about for the first time in 60 years, my Indiana Hoosiers have a mascot? It's a bison. I think it's super cute. He jumped out of a plane into, I think it's still called Memorial Stadium. It was when I was there. Anyway.
it's a bison?
It's a bison. I follow him on Instagram now. His name's Hoosier the Bison. We have a mascot now.
Bison?
A bison.
They won.
60 years.
I think they won their game.
Yeah, I was not paying attention to the game. I was just looking
Why
at
a
the bison.
bison?
I don't know.
Perplexed by this.
I don't
It's
hate
not
that.
problematic.
I don't hate it.
I know, but it's Colorado's like your bison, isn't it?
I don't know.
There could have been bison in
I'm sure there were all
Indiana.
over the plains, but
The college was founded in
Like-
1820. There were probably bison. I don't know.
should have been one of those prairie dogs.
The Indiana prairie dogs.
Yeah.
Okay, that I don't know.
I think a bison's a better mascot.
It was cool. He's tough. Like he parachuted into the stadium and like stuck the landing.
That's the first
Watched
time
the
a
video.
bison's ever done that.
Yeah, it was impressive. Like it's like Benny the Bull level.
Isn't there a bison? Isn't there already a team that the Bisons?
I think Colorado.
Yeah.
The Colorado.
Colorado Bison?
Yeah.
Yeah. And then they have like, there's also.
And I think Howard University, which is a historically black college, which you do not care. I think they are also the Bisons.
I do care.
Okay.
Bison once roamed the grasslands and prairies of Indiana, though they were eliminated in the early 19th century.
Okay, well, this state was founded in 1816, I believe. College founded 1820.
I'm fine with the Bison.
So, look,
I get it. I just think
we just never had a mascot. Like, I always wanted a mascot
I think
to
you're
be.
infringing on the Colorado mascot.
I just always wanted my school to have a mascot
Colorado
so they
is a
could.
buffalo.
Buffalo
Yeah, I
bison.
get it,
Where the
buffalo bison.
buffalo
But there
and
is a bison, like,
roam.
it's like North Dakota State or something, or somebody like that's
Yeah, but here's the thing.
Colorado's the Buffaloes.
I always wanted my school to have a mascot so they could be in one of those ESPN commercials.
Yeah. I don't blame you.
It's always, did you see the Oregon Duck? His head fell off. So,
Oh, that's good.
did you not see it?
No.
And he had to like run back into the tunnel like this, and his head was just.
I guess
on the
it used to
ground.
be the bison up until 1969.
I said 60 years ago.
Yeah.
You were not listening to the first 60.
No, not a
It's
word
been-
you were
okay.
saying. No,
It's
but I
been
just
60
read it right
years.
now. 1969,
It's
lack
been
of
60
interest. That's why they
years.
got rid of the bison.
Yeah. So he's back, baby. Anyway.
Well, they won, I think.
Yeah, well, it's good. That's a good job. Well, a little birdie told me. So anyway, when I was on my motorcycle, I was listening to the new Sabrina Carpenter album, Man's Best Friend. It's great. It's
great.
a bop,
Amazing.
bop after bop, bangers after bangers. She's so sad, but the music just makes you want to shake your ass. It's great. But you were gonna see another
I would love to
pop
see Sabrina do
princess.
that.
You were gonna see another pop princess. I hear. What?
Dua Lipa.
I love Dua Lipa. She's for the girls and the gays. What are you doing to go see Dua Lipa?
I'm being a good
Can
husband.
you name one of her songs?
No.
Oh my
I
God.
think he would, because we ask him this every time he's going to see somebody that he
Where
really
is
doesn't know
she?
anything
Where
about.
is at the United Center? Where's she gonna be?
The United Center.
When?
Saturday night, I think.
Can I go? I want to go.
I might give you my ticket.
Yeah. Oh my God, I'll call my girls. Let's go. Do a peep. Because you have to, you have to dress up, right? You know you have to serve face.
Oh, yeah, Brittany's already got an outfit for you.
You
It's gonna be
know
good.
you have to serve face, honey.
Yeah. Yeah, you're going to look good.
Yeah.
Just
I
got
don't
to
know
paint
about
your
dress.
nails and then you'll be
I'm
fine.
not sure about dressing up for this.
You have to dress up.
You have to. It's part of it.
That's what the.
Otherwise, you'll look weird.
I'm
that's
more
what the
concerned about where am I going to go for dinner beforehand.
You're not gonna eat at the arena?
No.
No.
Okay. All right. Fine.
I wouldn't wish that on my worst
I thought
enemy.
the food was good. I thought they fixed it. I thought it was good.
No, they can't fix. You can't fix that.
Oh, okay. You can't fix it.
Can't fix stupid.
No.
Okay. All right. Well,
I'm going to do a little bit Saturday night.
I'll make you a playlist. You should at least know some of her songs.
Yeah, I'll listen beforehand.
Yeah, I like her. I do sincerely like her.
Yeah, it'll be fun.
Yeah. You gonna dance? You
I
can't.
got a Dua Lipa and then followed by the Bears game. I got a busy weekend.
Oh, that's right.
Yes.
That's right, because you'll be hobnobbing
We'll be
and
in San
rubbing
Francisco.
elbows.
I'll be in San Francisco on Friday, Dua Lipa Saturday, Bears game Monday night.
Wow.
Sunday night I have to go out to dinner with Tony.
Luckily that Bears game sneaks in there to break up that homosexuality.
You couldn't even get it out before you started laughing.
I mean, San Fran on Friday, Dua Lipa on Saturday. That's pretty strong.
That's strong. That's strong. You're gonna be
Dinner with Tony on Sunday.
We're gonna disown you.
I love that for you, though. I'm jealous. Hey, we got a great show for you today. We are back at full strength. It feels like a Monday, but it's a Tuesday. We love to see it. Sorry, Bat, it is Taco Tuesday.
I know.
I know. I'm
Oh,
excited.
what kind of tacos today? Who?
Sabroso.
Oh, I like Sabroso.
I like Sabroso.
Yeah.
It's not bad. And
They
then
got the
your
good-
favorite, one of your favorites tomorrow.
What is it?
Gross. K-Fire.
I love that place.
It's gross. It's not enough.
You gotta put
meat.
all the. You gotta put all the side
I
dishes.
need more
on.
protein. It's not enough meat.
No, you gotta put all the little side dishes on there with the hot sauce. It's really good.
Oh, it's too
Good,
spicy.
good.
Too hot.
Yeah.
Hey, at the top of the 8 o'clock hour, we got an options jive. 5 ways to short a trade. Part of a series had really good success. We teach you sort of 5 ways last week to get like long, right? An underlying, right? It was gold. And then this week we're teaching you 5 ways to short a trade.
Or what?
I don't know. It doesn't say.
5 ways to get long gold, but 5 ways to short. Well, it's a good day. We're down to 60 almost.
Okay. That's going to be at 8 o'clock. And then at 8:40, we got Let Me Explain with Chris Veio. What are you going to talk about with Chris today?
We got a lot. We talked, actually, Chris and I did the show last night.
Oh, how was that?
It's good.
Okay.
When even the S&Ps were basically unchanged up small. I mean, they really didn't do too much.
They were up about
7, something like that.
They opened Sunday night up about 10, and then they were about 4 or 5 last night. It was pretty quiet, and then overnight they sold off. But there's some stuff to talk about.
Okay. And then maybe there'll be some more. You can continue your conversation.
Well, there's definitely, with down 60, there's more to talk about than if they're unchanged.
You bet your pippy there is.
The expected move for the week was only down 68.
Oh, no. We are
Very tight.
overachieving.
So we're down 58 right now. So we only have 10 more points.
Similar to what we did last week when we
We only have 10 more points to move all week.
All right. Pack it up, everybody. We're done for the week. And then 9 o'clock, it just says market measures, and it doesn't say what the market measures is.
Oh, I have it.
That's right, but it's a market measure.
It just says market measures.
Yep.
I got it.
Okay.
I got it.
Just talk amongst yourselves, everybody.
I don't have it.
You don't have it. Nah, you thought you had it, but you don't. Well, then at around 9:20 or so, we're going to take calls. Scott's out of the office. So Tom and Bat are taking your calls. If you have questions, if you'd just like to say hi, tell us how wonderful we are. We'd love to hear
Yes,
from you.
sure.
That's at around 9:30. We will be opening the phone lines. And then, of course, 10 o'clock, no days off. The lovely ladies, Liz and Jenny, are live from the floor of the SIBO. Always
wait.
electric when the ladies are broadcasting live. And they are headed to Munich, Germany quite soon. That's exciting.
Yeah, they are.
Yeah.
Exciting for the
Why would I
Germans.
make that up? You're like, yeah, they are. I'm like, yes.
They're going to Oktoberfest it.
Yeah, that's awesome. They bought dirndls. That's the traditional
Well, they
dress.
both used to work in a German restaurant. So
Yes, they used to be beer winches.
yeah, so they're professionals.
I would have
Yes.
paid to see that. Although I think I saw a picture back in the day.
Yeah. Anyway, that is our run of show for today. In the meantime and in between time, you guys want your daily dose?
What do you call them?
Sure.
Drendels?
Drindles, yeah. That's
Drindles.
Yes. It's like DIRNDL. It's like a bunch of Scrabble tiles.
Yeah. No. My Wordle, I'm back on a new Wordle streak right now.
Okay.
So my word, my
Hello?
word expertise
Not so good. You don't talk good.
off charts.
No, not even a little bit. But you did give a shout out to another New York Times puzzle, Connections.
It's very frustrating because it's very hard. Have you
Yeah.
played it? Ever played it?
No,
It's really hard. But I got it this weekend.
I don't torture myself like
I
that.
got it this weekend for the first time in a while.
And you felt so SMRT?
I felt so SMRT.
Yeah,
But
good for you, girl.
I had to put a different version of the cherry bomb.
Okay, get it, girl. Hey, do you want your daily dose? You can't stop me. Hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking news.
headlines.
Across the wire. Our leading story. Top story. Just in.
In today's headlines,
This just in.
Breaking news.
Breaking news.
All right, everybody. Today is a terrific Tuesday. It's September the 2nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. It's officially pumpkin spice season. Deal with it. Are you ready for
It is, because at Lowe's, they have all the inflatables up and everything else like that for Halloween.
They've had those. Oh, yeah, they've been up. But
So definitely.
any earnings on the horizon, Mr. Bat?
Dollar Tree?
Ah, gross.
Yeah.
All right,
That's
well,
what I said.
nothing good about that. But hey, first headline of the day, only a really big jobs report could stop the Fed from cutting interest rates. Don't count on it. The big economic matzo ball that's dangling out there coming Friday is the jobs report. Last time the jobs report came out, the lady lost her job. We'll see what happens this week. But what are your thoughts? Like you said, the whole expected move for the week, we've already done it. What are your anticipatory moves in bonds or volatility for what's going to happen Friday? And will you believe the numbers that come out on Friday?
Well, what do you mean what I believe? Yes, I do believe the numbers.
I don't know.
Yes,
I believe.
I don't believe the numbers. I don't believe the numbers are fake.
Okay, well, that's good. That's a start.
I have a little more confidence in America than some people.
Well, but we already made our whole move, though, for the week.
Well, we already, yes, according to the expected move.
Yeah.
Of $69, which we talked about. I think it was $69 yesterday.
Nice.
According to Mr. Vecchio. But last night we talked about kind of just what we thought for the week. I thought the market would be down.
Who called for down 60 this morning?
Nobody.
Nobody.
I think the expected move today was maybe 25 or 30 points. But I did call for down pretty big this week. I thought we'd get to 6,400.
But does that hurt that you're down so early in the week?
I don't know. We'll see.
Call?
I thought I said last night I think we can get to 6,400 this week. It wouldn't be surprising. But I also said that I thought bonds were cheap, and so we were
Cheaper.
They're cheaper today, so we were right on the market.
Down a full point.
I know we were right on the market and wrong on bonds. I did not think you'd see bonds getting back down to 13 level, Tony. Not at all.
What are you looking at for your indicator for rate cut probability?
Well, it just went down. I mean, it just went down substantially.
Okay.
The rate cut possibility.
Because bonds being down a full point.
Well, yeah, and 10-year notes being down a half a point.
Okay.
I would say that the rate cut possibility prior to this week, I want to say it was like 85%.
Oh, wow.
It was very high, wasn't it, Tony?
Yes.
It was really high.
Yeah.
Maybe I'm wrong. Maybe it wasn't 85, but I thought it was 85%. I would say with bonds down 102 here, approaching back in the 112 handle, and notes, if they get under 112 or down near 111, man, I mean, maybe they cut the short end, but the long end, oof. This is not good for the market.
Well, this goes to my next headline. I don't know if you talked about this with Chris. September is historically the worst month of the year for stocks. Is this month going to be different?
That is not even remotely true.
Why? How is it not true?
It's only true for the last 5 years.
Okay, then how does that make it not true, though?
Because historically, September has been one of the best months.
Okay.
Because it's triple witching.
But that's not the new reality, though. Like, doesn't 5 year, like half a decade, doesn't that mean a paradigm shift?
Well, I mean, I wish they would say for the last 5 years.
Okay, but then it's not enough to this theory run out of tweet space. I don't know.
I mean, when we used to trade on the floor, September was a death month for us because it was always the month where they triple witched you up your wazoo. But now it's a little different.
Okay.
And so the last 5 years, triple witching in September has been down pretty significantly.
Yeah.
But historically, over the last 25 years, expiration in September, I think it's one of the most bullish months of the year.
So if you had to go up or down for this September triple
This September, I think it's down.
What do you say, Bat?
I mean, down is probably the least path of least resistance.
Well, I mean, we got a head start today. It's like
60 handles.
your 60 handle head start.
Right. Yeah. Okay.
I mean, it just felt to me over the last week or so
that they've been heavy.
Yeah.
Yeah.
I mean, there's no earnings this week. I just felt like the market was.
How dare you?
I mean, all of
use Dollar
August
Tree.
felt like that, to be fair.
It felt heavy, but they went up.
They went up. Yeah. I'm not saying that we.
I mean,
that,
you
I'm not calling it a
definitely
60-point move.
You definitely did not get paid
No.
for being short in the month of August.
No.
It was painful.
We
Yeah.
got down to around here 6,400 back in the middle of August when we had those 3 or 4 down days to write. We got up to around 64.70 something and back down to 64. Where we are right now, 64.09. So we'll see how we behave today. Probably close under it.
if you hated this headline, you're gonna hate this one even more. World's long-dated bonds face a traditionally terrible month. Longer maturity bonds may be in for a treacherous September if history is any guide. Over the last decade, government bonds globally with maturities over 10 years posted a median loss of 2% for September. Are you listening?
Yes. I don't know what it means.
No, he's reading. He's trying to glean it.
World's long-dated bonds
Nope.
face a traditionally terrible month.
And this is over a decade. This is a decade of historical data. So maturities of over 10 years, median loss of 2% in September.
Let's see, 2% move. Well, I was going to say you almost have it today, but you have 1%.
Okay.
I'm not sure that matters.
What do you mean it doesn't matter?
I mean, only because bonds are already down on their butts.
Yeah, but I'm saying this is historical. This is a decade's worth of data.
Okay, congratulations.
Okay, all right, I knew you were gonna hate it. All right, I'm gonna keep it moving because that's what I do, everybody. Let's talk about gold. Gold hit a new all-time high on rising uncertainty while the stock market fluctuates. Now, of course, the market is down. But gold futures hit a new all-time high. Silver also, I think, ticked up for a little bit. But what are you doing in gold?
Gold for the last 2 weeks been on like a 200-point run.
Yeah, gold's been on a tear. And last night, it was about, I saw it up over 50. It's only up 30 now.
35.78. So you are correct.
It was $30 higher. It was up 60 last night.
Wow.
And I saw silver over 42, but I don't know what the high was.
Silver did not get over 42, 41.995.
Really?
So close.
Yeah, that's correct.
Missed it by that much.
All right, one tick away. I mean, but silver
Is this a flight to worry or whatever?
No. First of all,
flight
silver-
to safety? That's it.
in the past, silver's been, I don't know, as high as 60, I think.
Yeah, you're going back sometime.
Yeah, definitely in the 50s, maybe it's in the 60s. But I don't know. I don't think it's necessarily a flight. I don't think it's a flight to quality, because if it's a flight to quality, bonds will be up.
Flight to safety.
If it's a flight to safety,
Yeah,
bonds
but
will be
you
up.
can't balance this against the fact that people, like, can I get my sentence out? The fact that the question of the dollar as a reserve currency is weakening, and then that is what's being offset by the
because
rising
the
gold.
dollar's up huge today, gold's up huge, and bonds are down big.
Okay.
None of those correlations would make any sense. Like, I mean, it doesn't.
Doesn't have to make sense. Hey, Japan Post Bank is going to launch the digital yen by the end of fiscal 2026 to make it more convenient for its depositors to make digital financial transactions. What say you, digital yen?
What say you, digital yen?
Japan Post Bank to launch digital yen in 2026.
This is not going to work if you're going to be on a 30-second delay.
No. I think this is old news.
Okay. I saw it come across the wire September 1st, 6:56 p.m.
Yeah, I know, but they've been talking about this for quite some time.
Okay.
The yen's actually down pretty big today.
Maybe these were meetings that I was not invited to.
So the yen's actually down big today, but
over 1%. This is a level it hasn't.
yeah, it's under 68, right?
That's a big move.
Yeah, 67, 2.
Yeah, it's
3.
I only know because I'm short the 68 puts.
Yeah.
But this is the beginning of what's going to be. You're going to see digital dollars, digital
euro,
Sosnovs.
digital pound,
There's going to be digital everything.
didgeridoo.
Digital tacos.
I don't. It makes total sense. Why would anybody want to let anybody else digitize their currency when you can just do it yourself? Yeah,
Okay. How are you adjusting your yen this morning?
I'm not. But if the yen goes any lower, it just broke 68.
Okay.
It's been trading between 67 and 70 for pretty much the whole year. If it gets down to the 66 level, I'll sell more puts.
Okay.
I think you sell yen puts on every single down move in the yen. It's worked the
Now,
entire
we
year.
did say the same thing about bonds, and that hasn't worked out.
No, it's worked the entire year in bonds.
I know.
Okay.
It's worked the entire year in bonds. My two best trades of the year,
Yes.
taking no heat and making basically no adjustments. Selling puts in the bonds every time the bonds go down.
A little heat.
Selling puts in the yen every time the yen goes down.
Okay.
And they've been probably my 2 best trades in 2025 for not having to do anything.
Hey, shifting gears to commodities for a quick hot second. Oil settles higher on weaker dollar and Russian supply disruptions. Global benchmark, Brent crude settled 1% higher. What are you doing in oil?
Well, it's up 2% actually. And the thing with oil
Okay,
is,
you know,
Two and a quarter percent. I will correct
You know, there
for
comes a time when I have to turn the stories in
but
to the
what's
producer,
funny about this
so-
headline is oil settles higher on weaker dollar. Actually, the dollar is super strong today.
Sure.
So oil settles higher on stronger dollar, which means
Okay.
my only point is
Right.
these headlines are ridiculous.
Okay.
But dollar is super strong today, and oil is very strong today.
Okay.
It's not a flight to safety. It's not a flight to quality, but they're buying commodities today.
All right. Hey, does the hot IPO market mean we're in a stock market bubble? The IPO market may be hotter than any time since 2021, but what does that mean for other sort of activity? If the year-to-date pace continues, the number of IPOs for all of 2025 will come in around 100, about half of the average since 1980.
What do you have to say about that?
I think the hot IPO market is one of the biggest red flags out there. So like,
Why?
Because stocks that are coming out at $30 are opening at 100.
But that's not their fault.
I didn't say it's their. It's obviously not the company's fault.
Okay. Well, the headlines are obviously my fault. Then why?
True. I see the analogy there.
Right. Yeah. So why?
I drew a direct line to
Right.
this.
Yeah. Why wouldn't?
It's not the company's fault, of course.
Okay.
It's not. And in a certain way, it's a little bit of the hype that the investment bankers do
Yes.
put on it because it's good for their business. Mm-hmm. And because they want to bring more companies out and they want people to go public.
Right.
So it's good for their business and they like it when they come out a little bit low and then have all this, hype to the upside. But I think from a consumer side, from the public side, you don't want to miss an IPO at $33 and have the stock open at 110.
Right.
And then 3 days later, it's trading at 55.
Well, I love a sale.
I just don't think that's healthy.
Hey, a European regulator says tokenized stocks risk investor misunderstanding. So that blockchain-based assets, which provide exposure to equities, could lead to investor misunderstanding because they typically do not make the buyer a shareholder in the underlying company. The EU says this presents just difficulty in understanding exactly what the investor is participating in. What are your thoughts?
I agree with the regulator who said that because when you buy a token, you're not a shareholder. You're not an owner of the company. You're an owner of the token.
Right.
The token itself owns the shares, right? Because if you're buying a token in something, then something has to collateralize the token.
Right.
So what's collateralized in token is the actual shares.
Uh-huh.
So who's ever putting together that token, they control the shares.
Okay.
Not you. But the difference is if I'm Tony Batista and I live in Chicago and I want to trade a European stock, let's just say, it is a pain in the butt. It's actually not a pain in the butt. It's impossible.
Right. If you want to buy some SAP or something.
I would never buy SAP.
Okay. Well, name another European company off the top of your dome that has a large market cap. Go ahead. I'll wait.
If you wanted,
Go ahead. I'll wait.
Somebody hot.
But if you wanted to buy some SAP.
Thank you very much.
You wanted to buy SAP, for example.
Yes.
And you didn't want to deal with currency conversion.
Right.
And you didn't want to deal with clearing, opening a brokerage account, doing all that kind of stuff.
Right.
Sure, you can buy a token. Why not?
Okay.
Gives you the play 1 for 1.
Well, speaking of blockchain, I don't have a crypto-specific story, but this is kind of a gateway into crypto. What's Bitcoin doing to start the week?
One of the rare things that's up, Bitcoin 110,000 right on the nose.
Nice.
I'm talking about the futures up 1,200 and change. After trading under 108, they're back to 110. The only thing besides other commodities like oil and silver, it's one of the few things, gold, it's one of the few things that are up. Bitcoin.
What are you doing in digital assets? Ether, Bitcoin, Coinbase?
Ether's down 1%.
Nothing.
Oh.
Nothing. No, we didn't do any trades there.
Okay. Massive move overnight from Alibaba. Alibaba shares jumped as much as 19% on news of a new AI chip and acceleration in their cloud computing division in the June quarter. Alibaba is investing in China's cutthroat instant commerce market and also pushing into new areas. What did you do in Baba?
We sold naked puts and it worked out perfectly.
Nice. Look at you. Where are the donuts?
We covered on the opening on, was it Friday? We covered on the opening on Friday.
Yeah, but this was an additional move up, though.
No, it's not.
Oh, well, what's it up today?
Baba's a bucker, up about 70 cents or so.
70 cents.
Okay, well,
And this is Friday's move.
okay. So you took your profits.
Yeah, this was the earnings move on
Took
Friday.
your winners. Okay.
Stock was up like 14 or 15 bucks.
That's pretty good. Hey, to fuel AI's insatiable appetite, NVIDIA and big tech are doubling down on nuclear power. NVIDIA joins Google in backing a nuclear fusion startup, Commonwealth Fusion Systems. AI is notoriously power intensive, and NVIDIA's venture capital arm, InVentures, participated in an $836 million Series B2 fundraising for the nuclear fusion startup Commonwealth Fusion Systems.
Yeah, it's interesting.
That was easy for us to say, wasn't it?
I know. You say nuclear fusion system 10 times. It's hard.
It's an interesting direction to go back to nuclear just because they need power.
Yeah. Well, you're old enough to remember several disasters.
Yes, you are. Yes, you are.
So
Yeah.
do with that what you will. What are you doing in NVIDIA? Let's talk about that.
What are
Chip
you doing
stocks.
in NVIDIA?
Chip
We have
stocks.
no position on NVIDIA, but the stock is super weak.
Ivy rank of 9. We'll see what happens today. 169 and change. He's right, down $4.5, $5.
What about Google?
Google, I'm going to say, is down also, trading 208 and change. It closed at 213, maybe 209. So let's just call it down 4.5. But Google, unlike NVIDIA, has not had a downtick. This would be the first downtick in Google in quite some time.
What's the IV in there?
33?
Oh, that's pretty good.
not
Hey, it's
bad, is it?
Tuesday.
Option trades today, every Tuesday and Thursday. Maybe you'll be in Google, Sosnoff.
Hey.
What does this mean?
Just disgusted. Meta has appropriated the names and likenesses of several celebrities, including Taylor Swift, Scarlett Johansson, Anne Hathaway, and Selena Gomez, to create dozens of flirty AI chatbots without the women's permission. Be less creepy, Zuckerberg. This is so gross. They were created by Meta to get engagement for their AI, to make chatbots, and so then they went into making celebrity chatbots, and then, of course, but look here, Gary in Nebraska, Taylor Swift does not want to have sex with you. She never will want to have sex with you. No matter what the AI says. This is just gross. You have to admit this is gross.
It's not good.
Not something I would use.
It's gross and inappropriate and crosses all of the lines. But of course, they're not going to get penalized by this any way, shape, or form. So, whatever. What are you doing in Meta?
Let's not give it the time of day since you think it's so gross. But since you mentioned it, Ivy rank is only 9. It's down around $14, $15.
Good. See you in hell, Zuckerberg.
And since you mentioned it, I mean,
$7.24.
Scarlett Johansson has been writing me.
She has not been writing you. I promise you. I promise you. With
She
my
has
whole,
been. She has
I
been
promise
writing
you with
you.
my
That is
whole heart.
definitely-
Maybe it's not her. Maybe it's the bot.
I promise you with my whole heart, she has not been.
No,
writing
it's
you.
hit. It's definitely her.
I think it's her.
Hey, Tesla's sales route in European markets extends to its 8th month. Tesla numbers are coming back from overseas, and they are not good. Sales continue to be down across the board. Tesla registrations of new Tesla cars in France were down 47.3%. The registrations fell more than 84% in Sweden. Oh, that's a big meatball. I don't know. I'm sorry. I couldn't think of something. I panicked. What are you doing in Tesla?
No position.
Okay.
Tesla trading, let's just call it 326 and change, down around $7-8 too. You have a little
Yeah.
bit of a little
What's
bit.
funny is when we were in Mexico, there's definitely more BYDs on the road than Teslas.
Yes,
Definitely.
Yes.
Yeah, but we don't. that's not an option here.
No, I understand that, but you said other countries.
Sure, yes, that is true. But hey, if you are looking to buy an EV, the Biden era tax credits end at the end of this month. So some states you can, double, triple all of the incentives or benefits. It also works for leases of cars. I heard on NPR this morning in Colorado, like you could lease an EV Volkswagen for like $100 a month. And I was like, what? Just because of all the incentives, the tax incentives. But those are going away. So if you need an EV, now is the time to do it. Okay, end of rant. Hey, UK's Revolut is kicking off a secondary share sale that values the fintech firm at $75 billion. They've emerged as one of the most successful of a handful of European fintechs founded in the past decade with a digital-only model, going to be offering employees $1,381 a share. That's a lot.
Oof.
Why are you looking at me like that?
No.
Why are you
saw
looking at
this.
it? That's kind of creepy.
Okay,
I
yeah.
don't own any Revolut.
Okay,
I wish I did.
okay.
I thought at $5 billion it was too expensive.
Well, now it's $75 billion.
Yeah.
No, it's really expensive.
So they were valued at $45 billion last year.
I know. I remember when they were $5 billion.
Okay, well, coulda, woulda, shoulda.
I remember. Never mind. Mini S&P down 69, making new lows.
Spirit Airlines has filed for Chapter 11 bankruptcy protection for the second time in a year. I found this graphic online. They should just become Spirit Halloween. I thought that was pretty good.
Not
What?
bad.
No, yeah,
Not
that's
bad.
good.
Not
That's
bad.
funny.
Not bad.
Spirit
I don't hate
Airlines
it.
filed for Chapter 11 bankruptcy protection for the second time in less than a year on Friday. The company had avoided bigger changes to cut costs, like getting rid of planes or more dramatically shrinking the airline's footprint. But it was too little, too late, and they had to file Chapter 11 for the second time. Wah wah.
Yeah.
I think it's SAVE.
Yeah, something like that.
Yeah.
But it's so weird that you file Chapter 11, you kind of know what you've got to do. Like having filed 2 Chapter 11s seems kind of crazy.
Well, the doctor told you to lower your cholesterol. You know what you got to do, but yet here we are again.
Wow. That escalated. Oof.
I'm just saying, where's the lie?
No doctor ever told me to lower my cholesterol.
Oof.
Let me call your cardiologist right now.
You can call him. Good luck trying to reach him.
Are you doing anything in any of the other airlines, UAL, DAL, Love?
UAL is trading 103, down around 2. Love, my sister's gonna be very disappointed, 32.72, down small.
Okay.
I'm a concierge client, just so you know.
We're flying United this. You got no status.
I know.
Just like
I have
me,
no
you're
status.
Oh, you need me because your girl has status on United.
I know. What's that deal? What's the deal with that?
You need Premier 1K JJ.
Bring him back. Calling the lefty.
Hey, Wegovy's trial result gives boost to Novo Nordisk amid U.S. market woes. Trial data released by Novo Nordisk last week showed a significant reduction in the risk of heart attack, stroke, or death in certain patients on its blockbuster weight loss treatment Wegovy, sending shares of Novo higher.
Yeah, we don't trade Novo.
Did you trade Lilly?
Yeah, but what difference does that make?
Okay,
Lily's-
I don't like
Lily's
the
down about
attitude
12
this
bucks.
morning. I am doing
What is it?
the best that
Lily's
I can.
down about $12.
Yeah. Novo, we don't really trade.
All right. Hey, we got to get our man on the inside to give us the scoop on this. A homicide investigation rocked the final days of Burning Man after a man was found dead lying in a pool of blood at the Nevada Desert Festival. A woman also gave birth at the festival, later claiming she didn't even know she was pregnant. What is going on in the... No, this is sad. No,
That one always gets me. Like,
right?
they don't know they're pregnant.
It was a
one? That's
TLC
good
show.
one.
I didn't know I was pregnant. It was a whole series. But some dude died. It's a homicide. I can't wait for the podcast for this to come out. The victim, described as a white adult male, doesn't narrow it down, whose identity remains unknown, was found by a festival participant who flagged down a deputy. That's crazy.
Cray.
You gotta ask Jacob.
Like, he wasn't there this year.
That's what he says.
What happens?
No, he
That's what he
wasn't.
says. That's
what
his
he
excuse.
says, yeah.
That's his alibi. He's got an alibi.
In 2017,
Maybe he's a
a man
murderer.
died by throwing himself into the burning effigy. There have been other deaths from motorcycle crashes and vehicle accidents that occurred since the 90s. But this is, I think, the first like homicide. But the baby was named Aurora. So
Aurora.
happy.
Who has a baby that doesn't know they're pregnant?
Look,
That's a tough
let me explain. Can you name the phases of the menstrual cycle? Because if you can't, then don't pop off. Go ahead. Why don't you tell me all the phases of the menstrual cycle. Go ahead. I'll wait.
Extreme agitation. It goes from nothing to extreme aggravation to I don't like the way you chew your nuts. I've heard that one from my wife. Yes.
There are physiological
I don't like the way you
ways
breathe.
sometimes.
Yes.
Yeah,
There are
she told me once, I don't like the way you
physiological
chew
ways
your
in some
nuts.
ways that women may not know or may dismiss some symptoms as being attributed to something else. It does happen. Look, you're going to blame a woman for claiming to be pregnant when she isn't, and then you're going to get mad for claiming that she's not when she is. Pick a lane.
I'm not mad. I just said, how does it happen?
Sounds
Well,
like you're
again,
mad.
the master of women's anatomy, Mr. Tom Sosnoff, everybody.
All I did was say, how does that happen?
Hey, shifting gears to sports, this is cool. Chicago Blackhawks first round draft pick is playing high school football this fall. He's a double team athlete. He plays, I think, for Edina, Minnesota. Well, he threw 4 touchdowns in his season opener. So congrats. That's
Who's this kid? What's his name?
Hold on. Mason West.
Oh yeah, Mason West.
He's a 2-sport athlete. So, but he plays football. He's the pride of Edina. That seems risky, though. You'd think there would be like a clause.
He's a high school kid.
No, but if he's drafted by the Blackhawks, you would think there would be some sort of clause to prevent injury or to protect their investment.
Oh yeah, but he's drafted, but he's not going into the NHL.
I'm confused. Where's he going?
They would go to like some junior hockey. He's too young.
It still seems risky, though, to have him getting tackled by very large Minnesota
He's
teams.
a quarterback. He'll be fine.
And they also have no control over it.
Because quarterbacks never get sacked? What?
Yeah, but
Have you seen the size of the kids in Minnesota?
Yeah, but you gotta understand something. They can't control it. He could play any sports. He's in high school. He can do anything he wants.
I know. I just thought it was crazy. That's all. Hey,
I'd have him in a box, just in a plastic box.
I'm happy that the kid threw 4 touchdowns because he's probably an
he's
unbelievable.
like Al Bundy. That's great.
Like Al Bundy.
Al Bundy's like our Chris Grace.
Chris Grace, yeah, Polk High. There you go. Hey, Americans are expected, speaking of football, to bet a record $30 billion on the 2025 NFL season legally. Sportsbooks, FanDuel, and DraftKings are getting ready for the biggest opportunity of the year, even as they face growing competition from BetMGM and Caesars. Any play in DraftKings that you can do?
No,
Okay.
I don't think so.
Okay.
But just
What do you think about the whole Micah Parsons thing?
I don't like it.
Well, his back is still all
I don't care.
cattywampus.
Still have to play him twice a year for the next 5 years.
Sure, yeah.
I don't like it.
That's true.
$30 billion bet legally, which is exactly the equivalent of maybe the first 5 minutes of how much
Trading
food goes
today?
through Tasty.
Yeah, I know. That's wild, though.
It's insane.
That's wild. Anyway. Hey, finally today for my viral video of the day, can you do any, card tricks? I watched F1 over the weekend with my mom and dad.
I'm just saying he cannot.
But
he likes
so
them.
Brad Pitt has a thing where he has, his lucky card, and he keeps it, in his pocket, and then before a race, he throws...
You're talking about the F1...
F1 movie. Yeah, so with Brad Pitt. So Brad Pitt can throw the cards, and he can, land them in a bowl. Can you do that?
Land him in a bowl.
I used to do that when I was a kid.
Yeah. So can you throw a card and have it?
We used to throw baseball cards, but I've never thrown playing cards.
Oh,
You would
okay.
flip baseball cards.
We'd
to
also
win them.
throw them,
No,
Okay.
You never threw them.
Yeah, we did.
You never threw them.
We threw them and we see if we could land them standing
Boomers.
up, all these different things.
Boomers,
Yeah.
I'm trying to get out of here.
Eaters.
Well, this is the most impressive card trick I've seen in a while. Watch this. This is real.
I'm watching. I don't believe he did it.
No way, he did it.
I don't believe he did it.
What did he do?
He threw a card and he cut his friend's banana in half.
Is that what you and your friends did without the banana, though? Is that what you guys did? That's pretty good.
That's impressive.
I kind of believe him by the guy's reaction, but that's
Yeah,
pretty good.
see?
It's impressive.
See?
Did you do that, Saz?
You're gonna all right, well, we're going to get you some cards, and you're going to try at lunch. I'm going to film it.
That's impressive.
Bat, what's coming up next?
We're going to take a quick 90-second break as even the S&Ps make new lows. They just traded under 6,400. We'll be back in 90 seconds. It's Tasty Live. They're down 73.
Do you want me to keep talking?
Yeah.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. It doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P saw the biggest move of the century. Down $69, 64.03. They were just under 6,400 a moment ago, taking out the last 5 or 6 days of up move. NASDAQ down 300 and change. One of the leaders in the clubhouse with the Russell down 32. Dow down 380. They're all down, let's just call it around 1 to 1 1/3%. Volatility up 94 cents. Big move in volatility, sound off back over the 18 handle after being under 17. 1670 is the low. It's $18 up 92 cents, a big 5% move. Bonds down 1, sound off. I'm surprised. Bonds 1308. They got down to 1302. A big 1% move. Notes moving half as much as that, down 15 ticks. Bitcoin surprisingly higher. Well, some other commodities are higher too, if you consider a Bitcoin currency a commodity. 109.5 up only 700. It got over 111 and under 108, sitting at 109.4. Ethereum down $50. Oil up 79 cents. That's off of its highs, significantly off of its highs. Traded over $66. It's under 65 now to 64.8. Remember, a point in oil is $1,000. Big move in oil. Gold up 33, is about $28 off of its highs, but it's still up 34. Silver up 59, and nat gas down 11 cents after raising its head the last 3 or 4 trading days. It's now down. Sadnov, I'll leave it up to you.
That's a pretty big down move, actually.
In that gas?
Yeah.
Yeah, very big down move. Yes, after catching a bid the last 4 or 5
I'm
days.
going to offer some puts in the 10-year notes.
Your putty?
Yeah, it's weird. They weren't that weak last night, and then all of a sudden they gave it up. They look ugly. You ugly.
Yeah, I saw them basically unchanged for most of the night.
I'm Tom Sosnoff. He's Tony Batiste. This is Tasty Live. Thanks for spending your morning with us. It's 7:55. We are in Chicago, and these are emails that came into us over the weekend, the long weekend. It's Tuesday, September 2nd. Cannot believe we're in September already. Tony and I'll be out in San Francisco this week, so if you haven't signed up, well, I guess got filled.
Sold some putties, 111 putties in the notes.
Sold the 111 puts in the notes.
16 ticks.
I'm offering more at 17 ticks.
16 ticks is about 220 a quarter, right? Like a quarter?
Yeah.
Right.
We'll be out in San Francisco this week. Well, the good news for us is that we're waitlist now. The show is full. So it's awesome. Thank you, guys.
Sign up. Somebody always cancels. Would love
Yeah,
to
but
have you
still,
come.
go ahead and sign up because usually waitlisters get in. In fact, always waitlisters get in, but we have to limit it to a certain number of people. Just
Fire
because,
Marshal Bill.
Fire Marshal Bill. But it'll say waitlist, but you can still sign up, and hopefully, you won't have any problem getting a ticket later this week. But thank you all for signing up. We're excited. We haven't been to San Francisco in a long time. We're going to the Regency Ballroom. I've never been there, but Ilya last night on First Call said it's an awesome place.
Yeah.
Yep. So looks like a fun venue.
You may show up tonight and around.
No, Ilya will be there
Yep.
for sure. Anyway, doors open at 8 a.m. Show starts promptly at 9. Goes for about 90 minutes. You'll be back at work by 11.
Love it.
There you go. See you in San Francisco this week. Let's go to the first emailer.
Confirm and send.
Do you ever use a stop limit order for the 0DT SPX trades, especially after a number of consecutive winners? Wouldn't that help to mitigate one loser from erasing a number of winners?
It could also prevent another winner happening too. I mean, this is, it's a flip side.
I think that's an important point because I think people think that, putting a stop order in is only about risk mitigation. It's also about a winner mitigation.
Sure. How many times the trades start out not well and ends up great? So I know. So for me, the answer is no here. But I would, if you wanted to put in some sort of alert to roll down the untested side or something like that, you certainly could.
Listen, if you want to do this, don't let us stop you. The fact that
Have you ever done it?
No. The fact that Tony doesn't use the stop limit order, the fact that I don't use stop limit orders in the 0DT, part of the reason is we're always watching the screen.
It's fair.
And part of the reason is we just don't like using stop orders.
It's also fair.
But if it makes you more comfortable, go right ahead. There's nothing wrong with it. We just don't like it. I know that sounds kind of weird, and maybe it sounds a little different than the rest of the industry, but we've always been that way. Let's go to the next slide. I've noticed when I rolled my micro gold, it doesn't matter whether you use micro gold, MGC, or gold /GC. Gold today is up to $35, so gold's in play at record highs. I noticed when I rolled my gold position August contract, it defaulted on your software to the December contract instead of the October contract. Also, when you search for MGC, it also defaults to December instead of October. Is there a reason why the platform skips over October for gold futures?
Is there a gold future or not?
Yes. So let me actually, because I had to research this question. Very good question. And I did not know the answer. So the first, because my buddy Pete Momat was unreachable the night this came in.
Are they going to come out after this one?
No.
Okay.
So I had to Google this on the and look at the CME website. And what the weird thing about gold is they don't have monthly expirations. They have like 6 expirations a year. 6 expirations, which makes kind of no real sense. But what happens in those 6 expirations is a couple of them have no volume. I'm not exactly sure why they have 6. I think it's for hedging purposes and stuff like that for hedgers. But the October contract basically doesn't trade. So rather than get people into an illiquid contract, we basically use the quarterlies. And so we go from, it's not exactly quarterly because go from August to December is not quarterly, but the contract goes August to December because that's what we consider to be the front month or the active month. That's the whole reason. On Tasty, we default to the active month. That's it.
Makes sense now.
Yeah. And so I did not know that either. So it's a great question, but that's why we skipped over the October. If you look at the October gold futures, there's no volume at all. If you look at the December, it's where all the volume is. Let's go to the next slide. I'm bullish for the remainder of the year. And I want to set up positions reflecting that. You can get longer, better prices today. If I wanted to have short put positions in the SPY for October, November, and December, how might I do that? Would you sell the 30 delta put each month, or would you structure it using different deltas? How would you ladder out puts for October, November, and December is the question here, Mr. Batista.
I would, and the way that we do it, I would pick your strike. Let's just go with the 30-ish delta. If you go with the 30-ish delta in the first month, as you go down to each different month, you'll be able to go another strike 2 or 3, depending on the amount of time lower than that. And that's how I would do it. So for argument's sakes, if I was in SPY and I was, selling the 625 put, I'd probably be able to do the 620 put, the 615 put, 610 put as I go further out in time.
So that is exactly how I would do it as well. We won't ladder using the same strike all the way out. Like I wouldn't do if I wanted to do the 30 delta strike for October, let's just say, let me just see for a quick second.
You're looking at SPY?
SPY. And if I go to October and I went to the 30 delta
620 put.
Okay, it's the 620 put. That means I would probably do the 620 put in October, but then in November, okay, I wouldn't do the 620 put. I would probably do the 615 or the 610 put. And then in
615 put would give you about a 30 delta.
Yeah, I would try to line it.
You can blast all 4 of them at the same time.
Oh, yeah, you could do it as a single trade.
Yeah.
But I would go down a couple strikes. So, in other words,
you're going down 5 strikes.
Whatever. October, you do the 620. November, you do let's just say you do the 610. Mm-hmm. And December, you do the 600. That's how we would ladder it out in time. Mm-hmm. That's the proper way to ladder. And you're going to collect more money in those back months anyway. Mm-hmm. And you can do it as a single trade. So you don't have to give up edge more than once. Let's go to the next slide. We call that is a true ladder. And by the way, one more thing about that trade. Go back for 1 second, Beth. If you are going to do that, let's say you normally trade a 10 lot. You don't trade a 10 lot for each month. You do it like 4-3-3. Okay? Do the same number of contracts total. Let's go to the next slide. I was looking at an underlying where I'm interested in selling premium. The problem is the IVR is under 10. However, the IVX is over 80. Is there a time when the IVX is more important than the IVR?
They're a derivative of each other. I mean, it's not more important. I mean, it's better and good. I mean, you want to look. IVR is the first thing that you look at next to the symbol. So that's the most important one to me. So you look at IVR. That's high. It's going to imply that the IVX or the monthly implied volatility is high relative to itself. Now, it still might not be something you want to trade because it might be too low. You don't like the premium, whatever, blah, blah, blah. But it's high relative to itself if you look at IVR. So IVR would be the one I would look at.
Okay. If the IVR is under 10, the only time that the IVX would be relevant to us is if it's a new listing. In other words, there's a lot of times when a new listing doesn't have enough history. If it doesn't have over a year of history, then we'd be concerned that the IVR is not that accurate. Mm-hmm. But if it's a stock that's been around a while, no, the IVX over 80 would not move us at all. If it's a new listing or if there's some kind of interesting binary event going on, or if it's a very short-term option like an earnings play or a daily, that's different because the volatility doesn't mean much. The IVR doesn't mean much there. But if it's a normal trade, no, we're going to default to the IVR.
Good.
Let's go to the next slide, Beth. I've been long a stock for a number of years, and I've sold covered calls against it to the point my cost basis is now 0. Congratulations. In a situation like this, would you consider selling covered calls, or since the basis is nothing, would you just let it ride?
No, I sell the covered calls. Look how great you've done up to this point.
Of course.
So now your cost basis is 0. Get it negative a number. Why not? It's amazing.
Yeah, what
Good
if
job out of you.
Imagine
Showing
if you,
off. Keep doing it.
Imagine
you knew the answer before you sent this email. I know who you are.
No, you don't.
I don't know what it is.
Imagine if you had, imagine if you owned the stock for a $5 credit.
Yeah.
That's even cooler.
$100 credit.
Yeah, whatever. Absolutely. Keep doing it forever. Why would you ever stop? Let's go next slide.
Can't stop, won't stop.
And the last one. Is there a limit to the number of 0 DT trades that you'll do in a day? Should there be?
There's no limit, but remember, if you're trading an SPX, the big product, so watch your numbers. There's 10 times what you're normally used to if you're trading an SPY or something else like that. So no, there's no number. I mean, it's usually a limited amount for me, a couple, but again, no limit.
Okay. So let me give you the actual limit. There is a limit.
There is a limit? Wait a minute. What do we live in, a communist country now? There's a limit I can do?
You talk to FINRA. There is a limit. The limit is 390.
Oh my God.
I'm just saying, you can't do more than 390 trades. You can't average more than 390 trades a day. Otherwise, you're considered a professional.
Okay, but you can still do more than that.
Retail customers, actually, you can only route 390 orders a day. And believe it or not, we have to keep track of that stuff. There's plenty of people that get to that number, but you can't average higher than that. But is there a limit to the number of 0 DT trades that Tony or I will do in a day? Yeah, that number is usually 1. I mean, maybe 2, but it's 1, 2, or 3 at max. I mean, sometimes I'll make 4 or 5 adjustments, but opening trades, it's usually 1.
Right.
Maybe it's 2. Should there be a limit? I mean, not if you want to trade it all day. Go for it. We've had some rising stars on that trade all day long in the 0 days. If that's what turns you on, that's what you want to do, you want to manage it, go for it. We tend not to. That's all I'll say. But it's completely your call.
Very good. So you know what call I have to make right now? Well, I got to tell you first, the E-mini S&Ps are down 73, but they were just down 10 handles more than that just a moment ago. Volatility 18, 17. We're going to come back.
They don't look too good.
No, we haven't had an uptick all morning. We got to come back. We got an option jive next. And then we got the opening bell. Stay tuned.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. Tomas, we are back, my friend, and that's right. It's time for an option jive. Give me the S&P's down 73. What gives, Sosnoff? What happened?
I don't know.
I don't know. Are we going to send
Yes.
Vanetta? Oh, we are? Okay, good.
No, I'm just kidding. Send Vanetta where?
I don't know. There's a Powerball worth $1.3 billion somewhere. I think we should send
Oh,
Vanetta.
nobody won?
Nobody won.
Oh. Well, according to Chris Veio, just so you know, what number do you think you have to, according to Chris Veio, after taxes and everything else, he claims that he did the math, and as long as the Powerball exceeds, the payout exceeds $950 million, the pot odds are in your favor.
Better than relative when the number's smaller than that, you're saying?
Yes.
Okay, because they're not in your favor.
Oh,
you're not destined to win.
No, they're literally in your favor. There's like a 1 in 290 million chance of winning. I thought it was 1 in 189 million, but he told me it's 1 in 290 million or something like that. But since it's $2, you double it, and then since there's a tax consequence on the lump sum after we win it, we only get like 500 million, 700 million now, whatever. So at over 930 million, we should buy tickets. All right, what time you going?
Sending Vanetta. I just said that.
What?
We're sending Vanetta. I just said that.
Well, she's going to demand to know what her cut is.
She's gonna demand to know for sure. Up front too.
Yeah. I say we send her, we give her 10%.
We could do that. Give it to her. Why not?
You know, quick little story. So a bunch of our buddies on the trading floor, they played the daily lotto, right? And they just pulled their money, and every day they bought some, stupid lottery tickets. Well, one day they won.
I remember. It was like
it was 100 and something thousand.
Yeah, 110,000.
They never looked at any of the tickets.
Right.
They were just, they were just a bunch of idiots. So, they had a clerk.
They were not a bunch of idiots.
You know who I'm talking about?
Yes, I do. The whole crew were up by your area there. I know.
No, they're by your area.
Our area, whatever.
Anyway, so they were a bunch of idiots. I've known these guys for my whole life. They're a bunch of idiots. And they never looked at the tickets. But they had a clerk that they gave the tickets to every time to look at the tickets.
Right. She went and bought them. She went and held them.
Yeah, they gave her the money. She bought them,
right.
Held them, checked for winners, blah, blah, blah. So she notices that they won once. So but they don't know. So she goes down to cash the ticket and take the money and then quit. And somehow they figured it out because they had it all on video.
Yeah.
And they got her arrested and she went to jail.
Yeah, she should.
Yeah. Crazy story. 100 grand. I think it was 100 grand. But anyway, I didn't get any of that trade, just so you know.
I didn't get any of that trade either.
I didn't get enough. I didn't get all I could eat.
Mm-hmm.
Let's go. Let's see what we got today, Beth. I didn't get any trade. And those guys, when they were telling me this story, it was unbelievable.
Yeah.
5 easy ways to short a trade. Today we're diving into 5 effective ways to go short in the market using various strategies. When you're looking to hedge your portfolio, speculate on a downside move, or diversify your short delta exposure, this segment gives you a breakdown of smart, capital-efficient alternatives to just selling stock. The problem with just selling stock is it's expensive. It's just like buying stock. Markets don't go up forever.
No, they do not.
And knowing how to position for a pullback, it's how we trade.
Yeah.
So let's explore it. Let's see what we got, Beth. Next slide. So, for starters here, the team's using the QQQ. And there's a bunch of, on our platform, there's a bunch of different information right on the trade page. I usually go over it when we're doing kind of like a live show and stuff like that.
I go over it when I do my option trades today, which lucky for you is every Tuesday and Thursday. Today happens to be Tuesday.
But
wherever you find your podcast.
When you sell stock outright, your pop is going to be 50%. That's what it is. And your delta is going to be pure. It's minus 100. But the problem is your the amount of capital that you have to put up to trade stock is usually similar to without borrowing money, it's similar to most account sizes. And when you start to borrow money, it gets, the numbers start to add up with the interest cost. So it's not the most effective way. You can see the top line there. Let's go. That's just 100 shares of stock. Takes almost $29,000. So let's go to the next slide. So we're going to get a little bit more creative here. And the first thing that they're going to do, Tony, and hopefully that you can see this, is they did a synthetic short.
Sure.
They sold a call and bought a put of the exact same strike. Now, it's the same thing as selling stock.
Yeah, it's a 50-50 shot, same amount of delta.
The pop's 50, the delta's the same, the profit's the same. The buying power goes from 28,600 down to 12,783. And the other nice thing about doing a synthetic short is you don't have to make it 100 deltas. You can move by just dragging on the platform, you can move your short calls up a little bit or down a little bit. You can move your short puts. You can make your long puts a little bit lower. Mm-hmm. You can do it for less deltas, costing less money, but you can do it for slightly less deltas. So you can adjust the delta. So you can basically adjust the number of shares.
Yep.
It's a very cool way of doing it. So rather than doing 79 shares, you can make it the equivalent of 79 shares by just adjusting the deltas. Let's go to the next slide. So now we start getting into different things. In this case, this is a skewed iron condor. This is where you have a call spread and a put spread where you're short both, okay? But you're short a call spread that's closer to the at the money, and you're short a bigger call spread. It's the simple answer.
Mm-hmm.
In this case, they did it equidistant away from the at the money, but they sold it doesn't look like it on the screen, but they actually sold a wider call spread than a put spread.
Yeah, it's $10 wide strikes to the top side, $5 on the bottom side. Yep.
So you can see here, the pop is going to be a little bit less because you're taking more risk, but the delta is negative, and your max profit, max loss, and your buying power, it's
significantly less than short.
Much more. This is
more.
This is very capital efficient.
Yes.
Way to look at it. It's a way to achieve short deltas with some capital efficiency. sell a wide call spread, even though it doesn't look like it visually here, and a narrow put spread. And you get a very different set of Greeks down at the bottom. You get a different pop, you get a different delta, and you still have all the same potential. It's just using a lot less capital. Let's go to the next slide. Or you could just go with a straight short call spread. And by selling an out of the money call spread to get short, you can go up to where you have 68% pop. You still have a negative delta. It's only 5 deltas, but it's a negative delta. That's just for a one lot. And your max profit, your max loss is obviously greater, and because you have a higher probability of profit, and your buying power reduction is even less. Simple, straightforward, but just all on the platform, all on a single page, all right in front of you. Let's go next slide. If you decide you want a little more bang for your buck with a little bit lower probability of profit, you can go for a long put spread. You can buy an out of the money put, sell a further out of the money put. In this case, you can adjust the strikes to anything you want. It's the same 5.3 deltas. This one has a pop of 44. So why would somebody do this? Because your max profit is greater than your max loss. We just flip-flopped the max profit, max loss. And the buying power is only the cost of the spread, or at $158. So it's super cheap. You can make more than you lose. This is for the very bearish.
Very bearish.
Let's go next slide. Oh, so this is a summary page. We put this together for you so that you can go back to it as a reference guide. This is a summary of everything. This has the across the board. You can kind of see it, and you can break it down. Summary of every strategy.
I like it.
We did this just as a reference.
Yeah.
Because our research should be really, really good. We want certain things to be evergreen, so you go back to it anytime you want. So you're like, okay, just in case I had a bunch of questions. The strategy, high level, the bias, credit or debit.
They all have a gimme and a gotcha. They all have to, but
how to profit and trade management. It's just a lot of stuff on this page, but it's a really clean way to look at a summary of all the different strategies and kind of concepts that we talked about and what you need to do. Okay, let's go to the last slide. So when you short a trade, be careful with the risk of unlimited losses. That means just selling like kind of a naked call or shorting stock outright. I'm less concerned with, to me, there's no difference between selling a call outright or selling a put outright or buying a stock or selling a stock. I look at it all the same way. But we argue that there are certain things you can do to give yourself a better chance. Selling call spreads wins 70% of the time if you do out of the money call spreads. Buying put spreads you'll have lower wins, but you can make more money. Time decay is your friend when selling, your enemy when buying. Be the casino, not the gambler. I like that. Manage your trades early or take profits to 25 to 50%. Holding for max profit is where accounts go to die. The last half of the potential profit carries 80% of the risk. Small wins compound into wealth. The only strategy you need when bearish is selling the 20 to 30 delta call spreads 45 days out, manage close to 50% profit. I'm not so sure that's the only thing because we do lots of other things, but our research shows that that's kind of the cleanest, the best bet for the money.
Never thought I'd see it. A public service announcement by Sosnoff. This was amazing. This was really, really good. Be careful selling puts. Be careful. Be careful. We're gonna take a quick.
I'm not a big
honestly.
guy.
I don't explain yourself. I'm embarrassed for you. We're gonna take a quick 90-second break and come back. We got more Tasty Live with the opening bell next. We're back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Veio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tomas, we're back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, the opening bell is imminent here in about a minute and a half. Stop.
Imminent. Even the S&Ps have staged their first rally, about 10 handles off of the highs. Don't call that a rally.
They're down a little over 1%. They're down 75 handles on a 65 handle expected move for the week. That's big, Sadnov. Volatility also up 1820, up a full point and change. You can see it here, how it's taken back everything over the last week plus. Bonds down 27. That's actually 10 or 11 ticks off of their lows. Bitcoin 110 and change, up 1,200, one of the commodities that's higher, with oil up just about $1, gold up just about $30, and silver up just about 45 cents. Silver making a big move higher. Nat gas, another move lower, Sadnov. It's off of its lows by about 6 cents or so, but still down just about 7 cents. Sadnov, that's about $700. What do you think here for the market itself?
It's a lot uglier than I even could imagine.
Thank you, Mr. Obvious. Appreciate that. Well, we got the opening bell here in about.
I mean, I'm short, so I'm not complaining.
Oh, it's all about you.
It is all
See how
about
I'm
me.
flipping the cards. See how I'm flipping the cards here. I could make you look bad no matter what I do. There's the opening bell. You got saved by that, Sosnoff, and the opening bell is here.
I'll take it. I'll take it. I'll take it, take it, take it.
Even the S&P is down just about 80 handles. Wow.
Bondolini's no bueno.
No bueno. Bond's down big.
I did make one mistake. Ooh, I made more than one mistake. I have a couple of mistakes. That stupid
How many
Marvell.
mistakes do you make?
I don't know, but that stupid Marvell from Friday.
Oh, you dummy.
Dummy.
You dummy.
Dummy. Dumb arse.
Dummy.
I forgot to get out of it.
Oh. Rookie move.
Rookie.
Rookie move. Very rookie move.
Very.
What? Very rookie move.
Yeah, I agree.
What are you thinking? What do you hear? What do you say?
I'm not sure. Hang on one second. Down 84. Did not expect this.
No.
Bum. Ooh, there's some ugly. Hey, by the way, Lucid.
What's it doing?
Well, it reversed split.
Yes.
It's showing down 240 at 1740 on a reverse split. I'm bringing that up just for.
What's it mean to you?
What?
What's it mean to you?
I'm not sure. I don't know if it means anything to me at this point. It will mean something. Let's see what else we got going on here. 87. Wow, 89. Did not see this coming.
Down 87 to 89. Even the S&Ps. That's even the S&Ps. Nasdaq's down 425.
Yeah, thank God I had some short delta because I need it. I need it. Needed it. Hated it. We got a few positions here we're going to have to be a little aggressive on.
Okie dokie.
I'm trying to figure out which ones, but I think there's going to be a couple longs in here, which I don't like. Me no like, as they say. Nothing bothers me more than to be caught long Reddit. It's a stock.
Let's see what's moving this market lower, Sosnoff. Even the S&Ps down 86. Netflix down 19. APP down 20. Meta down 13. Reddit down almost 9. You mentioned it. Microsoft down almost 8. SMH down 7 and change. Coin down 6. Tesla down 5. It's all out. Let's see what the buckers are here. Pepsi is up almost $7. Nothing says flight to quality like Pepsi. All gold and volatility products. McDonald's up $2. These are not the stocks you want to see higher, Sosnoff, when the market is moving like this.
I don't have a single stock that's up here this morning. And I am looking around and I do not have a single stock that's up.
No, you do not.
Yeah, this is an ugly opening. This is one of the ugliest openings we've had for quite some time. Bonds rallied back about 10 ticks, but that's about it.
Yes, they did.
Man, everything.
Surprising with bonds down like this. It's not really a flight to quality in the market. What gives?
I do. Weird. Oh, I got filled in Marvell. That's surprising. I got stuck long some Marvell stock that I forgot to get out of on Friday. That is what we would call bad position management.
Bad juju.
Bad position management. Yes, I did not. Very bad juju. What else you got here, Mr. Batista? What do you see?
Not 100% sure. I don't see anything going on except bonds capture. Nothing. This is an all-out sellout in the market right here, right now.
Is this the start?
I don't know, but I usually when we have this kind of move pre-market, like a big move down on overnight action, it doesn't hold. Like we usually get a little bit of a bounce back. We'll see. We'll see.
Yeah, this is definitely not what I thought last night, but I'm not upset about it because I think we needed it. I thought we'd get to 6,400 this week. We've already exceeded all of the weekly expectations.
Yes, we have.
Yeah.
Yes, we have.
I don't have much to do here this morning. I think we can start to put on some new positions today.
Well, let's do that. Even the S&P is down 79. You ready to take a quick break here? Because we got Let Me Explain with Chris coming up.
Yeah.
I don't see you doing too much. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Beth, I forgot you used to go on the road.
Oh yeah, she was on the road for 2 years.
And then she had the Bellagio written into her contract.
No, but it was. I think Beth, were you at the Flamingo with us?
Never. No, we would just go there for dinner.
Don't worry, Nikki. They put me in the Barclays across the street.
You're a camper. You could rough it.
Yeah, you're a camper.
Right?
Now.
Yeah, you're a camper
guy.
You're a camper.
Hold on, honey. You're a camper.
Oh my God. Is there anything up? Don't stand up. Is there anything up there?
I have no clothes on underneath my shirt. I'm not in the office.
Oh no.
Oh no.
Oh, can you put that leg up again?
No.
No. Do not.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move. Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
I did not like the close yesterday in the NASDAQ or the S&Ps for the good kids. I hung in there all day until right at the close.
I am not an animal. Don't I know that? Don't say I'm.
We're live, dude.
Is this good for the good kids?
But generally speaking, when we're talking about risk-free returns, they're 1 or 2% around the globe right now.
The U.S. government has filed. Do you not care about what I'm doing over here?
I care.
Ignoring the person speaking to you. That's at 7:53 on Friday, and I don't want to say it, but I got bingo! Sazlo bingo! I won, John. Can you come in and validate this, please? I would like to have. I have the times and the references.
Yeah!
Good for the good guys.
Woo! We got a winner.
Pounds and claps
chicken
on his
dinner.
desk. You get the free square of the bat in the middle. Accordion hand gesture. You take it right here, John, and then ignores person speaking to him.
All right, who do we need to fire for this?
My friend, you know what that means? Time for a little bit more Tasty Live. That's right, with this man. Let me explain with Chris. Chris, how are you, my friend?
I'm well rested, Tony. It's a nice week off.
Per K, why are you well rested?
I didn't. You guys know we didn't have a segment last week because I wasn't here.
Wait, you weren't here? I missed you. I missed you is what I meant to say.
I missed you too.
I missed you too.
And I already did this with Tom last night, so I'm not going to.
I did miss you.
Who else is going to send you annoying stats about seasonality towards the end of the month? But now you get that here. So
September, typically a bad month, and we're starting off bad. Even the S&P down 78.
Yeah, we haven't really.
It is a bad
month. We're standing right in the same range. At least bonds have rallied back a little bit. Not that
they have. You know, September was a really comes as an interesting time because last month you see with U.S. equity markets touching those all-time highs. Institutional traders, hedge funds, they weren't really participating. They were net sellers. They were reducing leverage. They were moving more into Chinese equities, foreign equities than their U.S. counterparts. I was looking at the seasonal stats for September here. Just what does September look like at face value? S&P average return of 0.62%, downside, negative, over the past 20 years, but it's positive 55% of the time. It's a similar outcome for the NASDAQ. Average return is negative 0.3% in September over the past 2 decades, but it's positive 50% of the time. So this is a weak month, but with the up percentage not being so terrible, coin flip odds at worst, this really means that when you have a bad month, it's going to be bad to the downside. You got to keep climbing, slow and steady, or you're going to fall off. And with how we're starting today, it appears it's going to be, well, more of a fall off kind of month. Are you guys surprised? Does September scare you the way it scares me?
Considering we haven't had any vol, and considering this is the first time we've even shown anything, like even a hint of, volatility expansion or even a hint of something that's made somebody nervous, it can't scare you yet. I mean, you can see all the red flags and you can be scared just because nothing's happened for so long. But I mean, I would think it'd be crazy to assume anything this early. Let's see what happens.
Well, we did get a question here coming in via Frank through the chat asking what happens in September after such a strong period of performance in the market. And we do have some of those data points. When you have a August that's up more than 1% and produces 5 or more all-time highs, it's actually a bad sign for September. Of those occasions going back to 1950, the average return for September is minus 2.3%. If you have a summer return that's positive, though, June, July, August produce positive returns. September tends to be better than otherwise. Average return for September is 0.5% after a bullish summer, whereas in all years it's, down minus 0.62. So this is actually really mixed. September should be scary if you're a superstitious person who hates the months of March, September, and October, because those tend to be the ones that produce a little bit more wonkiness, as it were, for equities. This is a mixed bag. It's not just a straight shot. September could be bad here, but the start of the month obviously is not encouraging. I'm leaning long Delta still because volatility has been so low. We may be crossing a threshold when you consider what's going on in crypto as well. Sentiment is just not off to a strong start.
It's funny, today is a weird day because there's kind of a flight to quality everywhere. No, I shouldn't say flight to quality. I hate that term.
Yeah, because
there's
bonds
kind of
are down.
Yeah, it's not a flight. It's definitely not a flight to quality. It's more of a flight to commodities today. Crypto's up, gold's up, crude oil's up. I mean, something spooked the
Which
market.
typically run in tandem with the market, don't they?
Yeah, so something spooked the market today.
Mhm.
Not exactly sure. I don't know what it is, but something spooked the market today. And it's kind of weird to me because the scariest part about spooking the market is when you don't have any idea what it is.
Sure.
Like
Kinda
it's
when
the
you least expect it kind of thing.
Yeah. When it's an unknown, that is the weirdest. That is the weirdest thing. So, yeah, I think today's probably the strangest day we've had in a long time, Chris. And I don't think that anything that's happened in the past cares about seasonality or summers or what's. I don't think any of that matters. I think we've been waiting for a little bit of a, maybe a message from the market, a little bit of an end to this complacency. I mean, personally, I would love to see us kind of, end this insane complacency that we've seen for so long.
With some two-sided action,
Yeah.
right? I mean,
Yeah, for sure.
Sure.
For sure.
Agreed.
So, yeah, I'd like to see it. Earnings are over. Yeah, let's see what we got.
See what the
What do you
market's
guys
made
make of? Sorry, Tony, go ahead.
No, just to see what the market's made of. I was just making a comment. Yep.
This is also one of these weird seasonal windows where we have this quirk: sell Rosh Hashanah, buy Yom Kippur.
No.
Tom, is that something you pay attention to?
No, I'm not going down that path because we've had arguments in the past. Is it
Buy Rosh Hashanah, sell Yom Kippur, sell Rosh Hashanah, buy Rosh Hashanah.
Yeah. I hate everybody using the Jewish holidays to make up something.
Blaming it on the days, no matter what happens, up or down, it doesn't matter.
Tired of blaming it on the Jews. No, we're not doing this. Don't you and your little Italian friends over here.
This is not where this is supposed to go.
Buy St. Anthony, sell St. Peter, whatever that crap is. Same thing. No, I'm not doing that. Nope.
Yeah,
not going there.
Buy Easter, sell Christmas, right? Isn't that the expression, Tony?
I've never heard either one of those.
Yeah, no. We're not doing it. We're not going. No, this is just, listen, the market's been in a lull state for quite some time. And, whenever you're in a lull state for that long, you need something that scares the market to get you out of that lull state. I don't know if this is it, because I don't even know what this scare is.
You don't know what a scare is?
No, I don't even know what this scare is today. I don't know how everybody got in the same bandwagon, but it's kind of global. It's not just here. This is kind of like a global move. I mean, all markets are down, and it's clearly a little bit different.
I mean, it's about freaking time.
Yeah, I mean, I'm agreeing with you. It's about freaking time.
You are agreeing.
Yeah.
September just tends to be bad for everything. I was looking at the returns here. Equities average down, bonds average down, gold and silver average down, oil average down. Every currency versus the dollar averages down. Even crypto. Is it just something about September, people being done with the summer, kind of resetting their books? Is it the mutual fund season coming to an end? People having a window dress to get
I like to blame it on the Hampton crowd myself.
Is it more of just, hey, you know what, we had a good year, let's lock something in?
Mm-hmm.
I don't know.
Right?
Yeah, I mean, honestly, I don't really know. I've never thought about, I don't think about the world in those terms, because when you're kind of when you trade every day and that kind of stuff, you just don't, you just don't think about things like that. So.
Well, explain to us what you do with bonds here, because we have a Fed rate cut that's priced in. Of course, there's a non-farm payrolls report later this week, which
I don't think it means anything. I think that we're way past non-farm payrolls and unemployment reports and economic numbers and earnings and all that kind of stuff. We are way past that in the bond market. The bond market is it takes a bold trader to step up, buy them on every dip, but I think you have to. But the bond market's not signaling the same thing that the stock market's been signaling. That's for sure. There is a disconnect. I don't know how that plays out.
How do you reconcile that difference, though? Who do you believe?
I think you stay long bonds, and they offset each other, but bonds are cheap relative to stocks, and stocks are expensive relative to bonds. I mean, that's the only way. That's how Tony and I reconcile it. I don't know that there's another way. So
do you guys find the narrative that bond traders are the smartest people in the room, and so you should pay attention to them most?
I've known so many bond traders in my life. And if they're the smartest people in the room, we're doomed as a society. Literally doomed. We're going to hell. If bond traders are the smartest people in the world, then the world has an IQ of 80. So no.
Just like when equity traders freak out, everyone goes, oh, well, they're just, they're tape junkies. Or when crypto goes crazy, everyone goes, well, it's crypto. But when the bond market goes nuts, everyone says, oh, gosh, something really must be bad. It's those bond guys. Those guys are supposed to be the pencil pushers, the Poindexters. They're not exciting folks.
I mean, I only know from my own experience, trading over the years. And bond traders, I mean, to be fair, bond traders are no different than any other trader in any other space. You could throw.
They're knuckle draggers, just like the rest of us.
They are
different degree of knuckle dragger.
They're knuckle draggers, the same as stock traders, the same as S&P traders. They're all the same. They're just, it's the wild, wild west. And I mean, the institutional traders are different because institutional traders have the institutional space is just, they have customer orders that they're leaning on. And so they trade differently based on customer orders. But the traders themselves, they've got nothing. They're just trading off order flow. And I don't think they're any different than somebody that's making a market in Tesla, Nvidia, or somebody that's making a market in the S&P futures.
Mm-hmm.
Let's pivot here. I have an interesting story that I read this past week in my time having to just go across the world and, well, at least digitally, and find things that would interest me. I came across a study from the National Bureau of Economic Research, which, no, it's not about economics. It's how AI-driven trading bots are unintentionally colluding, which is leading to increased trading costs for individuals.
Wait a minute, they can talk to each other already?
How are they unintentionally colluding?
Because of the data model, the models and the data that they're trained on, they're all ultimately kind of winnowing down into the same pattern of behavior. And so as more of these models are being deployed into the market, more of them are ultimately reaching the same outcome for what they should do. And so they're all doing the same thing.
It's how are they all programmed the same way? That's what I want to know. Because I don't. Well, it seems so weird. But yeah, regulators apparently at FINRA and the CFTC are thinking about legislation that could be making its way through Congress. Preventing Algorithmic Collusion Act is what it's being called. There's a flash crash here in my head going back to 2010. Echoes of that when algorithmic trading was this whole new big thing. Of course, you get Michael Lewis publishing Flash Boys and yada, yada, yada. Is this something that we need to be worried about, gentlemen, as retail traders? Colluding AI robots taking our money? Well, if you go back to 1987, they blamed the crash on program traders. And I never understood that, okay, because there was no way to program trade in 1987 effectively. And then in the flash crash, they tried to blame it on high frequency traders, but the reality is they realized afterwards that high frequency traders is the only thing that keeps the market together. So I think that you fast forward to 2025, and I don't actually, they've always been plenty of bots out there. I don't know how effective they've been. I don't know anybody that's, there's automated high frequency market making, no question about that. But I'm not sure you would consider that an AI bot. An AI bot, the way you're suggesting it, is something that makes a decision based on how it's trained, and it makes a directional bet. It's not trying to arb out something in the market. It's trying to essentially make a directional bet. And I find that really strange that all of those things could be, programmed the same way. I don't know. You, Tony? I don't know.
No. I mean,
anyway, I
6 cancel crash.
Yeah, cancel crash. But I just don't see that as being the I don't know. I don't see that as being the risk. Let's put it that way. That's not I don't lose out on any sleep at night because that's the risk.
What was interesting about this paper is that they said that the AI systems have two distinct types of collusive behavior, one that they're calling artificial intelligence collusion, which is algorithms are learning to use price signals as a monitoring system. When one bot tries to undercut the others, the rest automatically punish it by reverting to aggressive competition until the cheater falls back in line. But then there's the artificial stupidity collusion, which they say is an accidental kind where learning biases cause bots to systematically avoid aggressive strategies. Aggressive strategies by their nature are more exposed to noise trading shocks, making them especially vulnerable to this asymmetric learning dynamic. So basically, all these bots are doing the same herding type of behavior because of the constraints they have in them. And they're doing the same thing, maybe not because they're smart, but just because they're being so risk averse and dumb, which we're going to have to deal with this over the next few years. But it's just like what you said. We've heard about this in the 1980s. We heard about it in the 2010s. It's a new market participant or way that people are participating in the markets. Nothing new.
Yeah. I do think it'll be interesting to see how that plays out. I'm not too concerned about it personally, because the markets are so efficient. So I'm just not, concerned. But it'll be. I don't know how you're going to pass legislation against that. I just don't even know how that would work.
It would be a tough one. It would be a tough one.
It'd be impossible to monitor.
Yep.
You'd be putting such pressure on exchanges and exchange regulators and oversight. I just don't want it to increase costs. So, that's my challenge.
As we go out the door here, I read another story over this past week that we're getting closer to 24/7 trading in markets. Is this a good thing or a bad thing?
It's a good thing. How could it be a bad thing? I mean, how could any advancement in technology, how could anything that opens up more markets be bad? Like, what's the downside? Is there going to be a little less liquidity at 2 a.m? Of course. But you already have a decentralized world that's open 24/7. Why can't a centralized world be open 24/7?
I'm all for it.
I mean,
do you think it makes it less volatile being open 24 hours?
No.
Well, it's made it less volatile being. Remember when we would close?
Yeah.
And then we had overnight futures.
And you think it's
trading?
less volatile? Because
I'm just asking.
No, because I thought about that for a long time, but I remember days when we were trading in the OEX where we had volatility as low as 6, and we were closed overnight.
Yeah, but that was one little blip. I mean.
Okay, fair. But I'm just saying, I think that 24-hour trading will not make it less volatile. In fact, I think 24-hour trading will engage more people because it will open up our markets to potentially more participants. So no, I just think that people will focus on the primary hours because that's where there'll be the most liquidity, and that's where there'll be the most derivative liquidity. You know, in the last 25 years, they've been unable to build up futures options liquidity overnight. And for that reason, I don't think there's going to be a lot of overnight activity, but 24/7, you know, just to give you an idea, Bitcoin digital assets are open 24/7, right? But we'll do 1/10 the amount of volume in digital assets during non-trading hours. 1/10.
So you're talking like 5 p.m. at night to 8 a.m. the next morning?
Right. So or on weekends when the market's closed.
Sure.
You know, we'll do 1/10 as many digital asset trades. So it's nice to have it, but it's not a game changer. And it's going to be very competitive, and there's going to be, you know, we've invested in an exchange. There'll be lots of different exchanges. So that's it. You know, that's what I think.
Thanks for the explanation.
Beautiful.
That's my 2 cents.
Rounding out the show there with Let Me Explain title, right? Okay.
Yeah.
All right, let's take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. Back in 90 seconds, Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that, because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC style?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with the market measure. Before we do that, let's take a quick look at the markets. Even the S&P still down just about, well, a little better than 1%, less than 1%, down 57 handles after trading down to 83.83. There are 64.15. NASDAQ down 200 and change. But remember, the NASDAQ was down around 400, close to 400 just a moment ago. They're down 1%. Leading the clubhouse to the upside, even though it is lower by $13, is the Russell down 0.5 percentage point, the Dow down 286 and change. Volatility up 93 cents at 18, got up to 18.55, sitting steady here, up 5.5%. Big move in volatility. Bonds down 22 after trading, flirting with 113. They got down to 113.02, flirted 114. They're down 22 ticks. Bitcoin 111.6 off on the futures right now, up 2,900. Decent sized move to the upside, a little over 2.5%. Ethereum up much less, only 16, although it was down $100 lower than where it is right now. It's up $19, so a big move in Ethereum. Oil off of its highs of 66, under 65, just by a skosh, up $1. Gold up 41, silver up 62. So now some of the stocks that are leading us out of the down move, Ulta, up $18. MSTR up 7.
Ulta had I think it had earnings, but I couldn't. I'm not 100% sure.
I don't know about that. I think it had earnings already, but I'm not sure. MSTR up 7 and change. Pepsi up 4. All gold and volatility products. Boeing up 280. McDonald's up 2 and change. Your beloved Baba up 2. iBid up $1.70. On the downside, you're looking at Crowd, CRWD down 11. Lilly down 6 or 7. AppLovin down 6. Reddit down 6. Affirm down almost 6. Meta down 5 and change. That's all I got.
Yeah, it's kind of.
Yeah.
I mean, to be fair, I hate to say cancel crash.
So soon?
So soon, I know. I liked him better down 83.
Because you're short.
Yeah, because I'm short. And not in actual. People say when they see me live, like, hey, you're a lot taller than Tony makes you out to be. Yeah, I'm 6'5".
Yeah. And lightning bolts shoot out of your ass. Yeah, sure. You're like William Wallace, for crying out loud.
I am a little like William Wallace.
Sure you are. Sure you are.
Thank you. I like that William Wallace analogy. Really bad.
Immediately following this market measure, we'll be going to your phone calls, 855-238-2789 or 855-BE-TASTY. So I don't know if that's the phone call. That's the phone line to get to the phone calls, which gets you an answer from the great one, Mr. Tom Sadnoff, a.k.a. William Wallace.
I didn't hate Mel Gibson so much. I would still have to put that movie to be the kind of.
You know what? They're just actors, and they usually are not.
No, I understand. love that movie.
It's a great movie. I think it's awesome. They're just playing a part. You know what I mean?
No, I'm not mad at Mel
Not a
Gibson.
representation
I'm
of
not
them.
mad at Mel Gibson
There are
for
good
that.
people and bad people who had good roles and bad roles. They're just actors. That's why they call them actors. So you can still like the movie. Don't be so pigeonholed.
I do like the movie.
It's a great movie.
I got the movie up there in my top 5.
Mm-hmm. I agree with you.
Yeah.
I agree. It's a love story.
All dudes do.
It's a love story.
We love
It really is a love story.
Yeah. I got Braveheart up there in the top 5. I have Gladiator, the original Gladiator, up there.
Yep. It's pretty public.
Yeah,
Pretty public, you think?
Yeah, I don't like. And the Gladiator one didn't do it for me. Like, it was okay.
Okay, so who else is in your top 5?
The Godfather.
I mean, other than Godfather 1, 2, 3, 4, 5, and 6.
No, 3 was horrible.
I know.
3 was horrible.
Okay, every Italian has, and you probably have Rocky too.
Yeah, I was going
Hey,
to
little
say
tight
Rocky
boy.
1 you had to put up there. I mean, it probably doesn't stand the test of time.
It
but,
does
I mean,
not.
Right.
Rocky. Okay, so Italians: Rocky, Godfather 1, Godfather 2, Rocky 3. What's your 4th? Braveheart. There's your 5.
Yeah.
Okay.
I liked good Scarface too. Scarface was great.
It's great, but it's not in my top 5.
Okay. Top 10.
All right. Now that we're on top 5 down memory lane, what's funny is that we don't have anything that's even remotely recent. In those.
Nothing. And a matter of fact, I saw Weapons. Did you hear about this movie, Weapons, Beth? It's a scary movie. Got 97 on the Rotten Tomato meter. I don't give it a 9. It was horrible.
Weapons?
It was supposed to be a scary movie. It's with the who's the blonde-haired, curly-haired girl? She's a good actress.
Oh, Julia Garner?
Yes, and Josh Brolin, maybe?
Yeah.
Yeah, 2 good actors doing a horror film.
94%.
On the Rotten Tomato meter? Well,
Yes.
it's down 3% because I wrote mine and gave it a 9, okay? It's horrible. It's disgusting. It's stupid. Don't waste your money. It's ridiculous.
How do you really feel?
So bad.
How about the new?
And there were 8 people in the theater. Great seats, everything else like that. Movie theaters, forget about them. They're going to make them parking lots.
How about The Rock? Supposed to be his new movie.
Okay, I mean, they just showed you these had good actors in it, and then you're going to tell me about a Rock movie, right? I'm not going to go see that, okay? Because that's already going to be bad, just on the surface. Okay. Sorry, Vanetta.
No, it's a fancy one.
I don't know what it is, but
I don't want to hear it.
Anyway,
it's not going to happen.
I haven't been to a movie theater in a while, so we'll see. All right, now you got me all messed up. Anyway, it's 9:17. I'm Tom Sosnoff. He's Tony Batista. This is
he is.
I am, he is. We're going to be in San Francisco this week. I've said it twice today, third time.
Third time's the charm.
tastylive.com/events. tastylive.com/events. We'll be in San Francisco this Friday, and if you have a chance, we'd love you to come out. We are waitlist only right now, but if you get your name on the wait list, I'm pretty sure there'll be some cancellations by Friday. If you've signed up for it and you can't make it, just take your name off the list, let somebody else in.
Yep.
But we've got a full show in San Francisco. Can't wait to see everybody. Regency Ballroom. Doors open at 8. Show starts at 9. That means it'll be we're 2.5 hours into the market opening at that point. So makes the zero TTs a little harder, but everything else makes it a little easier.
Yep.
So it'll be fun. And I promise you, I will hold nothing back because it's Tony's money.
You will hold nothing back. You normally never do, which is great.
Yes. So we're going to have a lot of fun. We're coming locked and loaded.
Yep.
And we'll see you San Francisco this Friday, and then 2 weeks we'll be in New York City. 2 weeks after, so 3 weeks basically will be in New York City. And that event, that still has space. Webster Hall, New York City, same exact show. Everything's the same. The trades are different because we don't know what we're going to do yet. But whatever looks good the night before, that's what we'll do the next day. So we'll be at Webster Hall Friday, September 19th, and really looking forward to that.
Can't wait.
Yep. Back to the old stomping grounds. So San Francisco this week, and then 2 weeks after San Francisco, New York City. Hope to see everybody there. It's been a year since we've been in New York. It's been a year. 2 for 3 years since you've been in San Francisco. So anyway, tastylive.com/events, tastylive.com/events. All right.
Let's do it.
This week, the research team put together a piece where they looked at 3-day weekends. This was a 3-day weekend, Mr. Batista.
This was a 3-day weekend.
We have a lot of Chris Vecchios in our audience. Okay. We got a lot of seasonality geeks, number crunchers, people that look for some kind of historical kind of patterns or trends over certain times. And it's like a Vecchio special. So the research team decided to go and look at 30 years of 3-day weekends.
That's a lot.
30 freaking years of 3-day weekends. Let's take a look.
That's a lot.
How many 3-day weekends are there a year? How many 3-day weekends are there, Beth?
Oi, term. 1 sec.
I'm going to say.
Well, there's
3? That's a guess.
No, well, there's Memorial Day, Labor Day.
In 2025, there are 6 3-day weekends.
6? Oh, I know. I would have got that wrong. Okay. So how do extended weekends disrupt regular trading patterns? Holiday weekends can alter market dynamics, leading to variations in trading activity. Maybe they can. Do traders need to modify their strategies to handle the effects following that? And what insights can be gained from the market's behavior? Next slide, Beth. So we did 30 years of SPY opening and closing prices using 3-day weekends. We computed the general intraday open to close weekend, Friday close to Monday open, and weekly Monday open to Friday close % changes, and measured in basis points. 100 basis points is 1%. We contrast this to results that occurred over 3-day weekends on the first day back and on the week following, either 4 or 5 days. We further broke down the results by which 3-day weekend they applied to. MLK, I forgot about that. President's Day, Easter, Memorial Day, and Labor Day. 1, 2, 3, 4, 5. So you got one extra one in there, Beth. We're not sure which holiday you're celebrating. Oh, she celebrates her
her own holiday.
Her own birthday.
She goes on holiday.
Yes. Your own 3-day weekends.
Okay, boys.
MLK, President's Day, Easter, Memorial Day, and Labor Day. Those are the only official ones. All right. What do you think, Mr. Batista?
What do I think about what? What am I going to what?
What do you think about what? What are we talking about? 3-day weekends.
Do I do anything different?
Yeah.
I don't think I do anything different because I don't do anything different.
Okay. Do you think there's anything different? We're down today. Was that predictable?
No. You think it is?
I'm not saying
I'm looking
it
at
is.
your beady little eyes with
I'm not saying it is. I'm just saying.
Snow.
I'm just saying that Chris Vecchio might have said it is.
When's Chris ever been right? He's not on anymore, right? So I don't have to say I can say these things.
He's not on, but he's listening.
Oh no! Oh no!
All right, let's go to the next slide. Let's take a look. So over a regular weekend, up moves 55% over a 2-day regular weekend on the following day. On a 3-day weekend, only 51%.
Only.
After Martin Luther King, ooh, it's ugly. Only 45%. President's Day, 52. Good Friday, 48. Memorial Day is the best one. Okay. And Labor Day, 50-50.
I mean, there you go.
Okay. The mean move.
Thank you for your help.
When we start to look at buying power, I'm sorry, not buying power. Basis points. The mean move in basis points. The best one is right after Memorial Day. That's kind of interesting. Everything else is pretty much down. And the median move, the only one that's even tradable, according to all these statistics, Chris Vecchio is going to run around naked when he sees these things, is Memorial Day. 15.2 basis points, 20.9 basis points, and a 61% chance after that. Nothing else has any relevance, right?
Nothing else has any relevance. Totally agree.
Oh, Columbus Day is not a 3-day holiday. Columbus Day, we're open.
We don't even have Columbus Day anymore.
We don't even have Columbus Day
No,
anymore.
it's Indigenous People Day, but I don't think it's a 3-day holiday.
Let's go next slide. So now we're going first day back. Oof. This is general open to close, first day back, 53% up. After a 3-day weekend, only 45% up. So you should have known, Mr. Batista, that today was going to be only a 45% chance. The odds were in your favor to go home short over this weekend. After MLK Day, up moves.
I mean, there's nothing here. I mean, you're not going to take this to the bank, are you?
I need to.
After Memorial Day, look at this one.
Didn't like it.
We did not like it.
After Labor Day, it's usually up. It's only a 44% chance that we're up, but when it's up 10 basis points. No bueno today. Anyway.
It's not over.
It is not over, but there you go across the board, all the numbers. Seems a little strange. Let's go next slide. I don't think there's anything here. First week back, market seems to correct itself and go higher like it always does. First week back, seeing if there's any huge moves in there. After Martin Luther King's birthday, we usually go down. And after everything else, we usually go up. After Labor Day, we don't do anything. First week back is 0.1. It's a nothing.
Wah, wah.
That's this week, so assume we're dead.
Mm-hmm.
Median
dead, Mortimer.
Median move after these holidays, it's totally mixed for after a week. Up 25 basis points, only 0.25%. These are nothing.
Right, it is nothing.
After Memorial Day, up 0.5%. It's probably the most bullish. But nothing really. The takeaway from this is nothing.
Yep.
Let's go next slide. It was interesting to see, but there's nothing here. Over the past 30 years, long weekends have generally exerted a cooling effect on the market. Memorial Day stands out with typically positive market performance over the weekend, although these gains were followed by a challenging Tuesday. The first trading day after a long weekend tends to exhibit increased volatility and longer market movements compared to regular trading days. And the initial volatility is usually succeeded by a predominantly positive recovery throughout the week.
Oh, what do you think of that?
I don't like it. Although the efficient market hypothesis advises against overreacting to such patterns, traders looking to adapt their strategies for holidays might consider preparing for a weekend dip. Volatile first day back, just like today, and a series of upward movements thereafter, as suggested by the data. Wow.
That's good stuff right there.
Yeah.
What do you think of that?
I don't have an opinion.
And what will you do in the future about 3-day weekends? Anything?
Get shorter.
You know, maybe. You know what, Saz? We're going to phone calls. 855-238-2788.
This is a good week to call in. Scott's not here. He's at the U.S. Open on like his 39th holiday of the year out of 44 weeks.
You're horrible. You really are.
I think he's watching right now, actually.
You really are horrible.
But I think he's going. Have you ever been to the U.S. Open?
No.
It's right by your
It is.
stomping grounds.
Yes. No, but I mean, no. Sorry. We don't.
I had a chance to
cut
go.
from that cloth.
I had a chance to go to Forest Hills when I was 12 or 13.
Which went to Dix Hills instead?
No, I had a chance to go to Forest Hills. Except you know why we didn't go? The tickets were $10. Me and my buddies were going to go. We were like, $10? Got to drive all the way down there? Pay $10 to go see the U.S. Open?
Not going to do it.
Not going to do it.
Not going to make me.
$10.
Can't make
Which
me.
was, I thought, ridiculous back when we were in high school. I did see Wimbledon. I did see the finals of Wimbledon in 1988.
Good, probably.
I saw Becker Lendl. It was great. I think it was 1988. Becker Lendl, whenever they played.
You don't know.
And it was great. It was great. It was worth it.
Well, you know what else is going to be great, Saz? We take a quick 90-second break so we can get these phone lines going. I got 4 or 5 lines open. Give us a buzz, 855-238-2789 or 855-BE-TASTY. Phone lines are clear. Love to hear from you. We'll be back in 90 seconds. The more you call in, the more I can keep him quiet. We'll be back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you had to do is look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Traders. Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois at Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Damn!
Wow. Long live the trader nerd!
Man, you're a turd! Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with phone call. Sodnoff, 855-238-2789 or 855-BE-TASTY. That's the number to call in. I got 3-4 lines open, so give us a buzz while we wait for those phone calls to come in, Sodnoff. Even the S&Ps are up, down 54 handles. They are off of their highs by about 30-ish, off of their lows by about 30-ish handles. NASDAQ down 200 off of its lows by about 250 handles. Russell down 14, Dow down 200 and change, and volatility up by 82 cents. Every email I got is because they say that there's been some thing about Trump not being around, can't be found, blah, 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 all this other stuff. Do you buy that or no?
I mean, I'm praying to the option gods that he's been kidnapped, and
why would you wish that?
Why would I wish that? Because I hate the man. So I hope he's been.
I don't understand the like it's. I never wish.
Can I wish for somebody to be kidnapped?
No.
Oh
no,
come on!
Not the.
I'm not wishing death. I'm not wishing death. No. I'm just wishing kidnapped. I think it'd be fun. You know what a great story it'd be?
I don't wish that on anybody. If I like them or I didn't like their political views.
So they can't find. Views. They can't find Trump.
What's that?
They can't find Trump.
It's like
he's disappeared. Waldo? He disappeared in the White House.
He's hard to hide, I would think.
Hard to hide him. I mean, for sure.
I would think, right?
Well, don't look where Melania is because she's probably on the south of France right now. So,
855-238-2789 or 855-BE-TASTY.
No, I thought Trump's having a press conference today.
That's what I heard too.
Yeah, 1 o'clock. I think he's talking about. He's going to send troops into my neighborhood so they can protect the franchise.
It was not a good weekend. According to statistics.
Chicago's the safest city in America. I've been here for a long time. I think it's the cleanest.
In your neighborhood, in my neighborhood, yes. It was just like any big city.
Your neighborhood. You don't live in the city.
In your neighborhood, my neighborhood, and just like any big city, there are problems in.
Of course, there are.
In areas.
Who cares? Problems all over. We have problems in America all over. Problems all around the world.
Problems in the ocean. Yes, we have problems.
Problems everywhere. Let's pick up some garbage in the ocean. We got lots of things to do.
100%.
Okay.
I'm not saying that, but statistically speaking, this was a worse weekend than previous. That's all.
Who cares?
Just facts. Don't get mad at facts. 855-238-2789. What's that?
That's
A Bronx Tale, Casino. Also 2 great movies. That was from my friend Luis.
Yeah,
100% Luis. I don't care what he says.
I love Casino. I love Bronx Tale.
Casino was great, and A Bronx Tale was really good. Not probably a top 5.
Not in my top. Yeah,
but Casino was really good. Casino was really good.
Casino. Yeah, Casino was good.
Casino was really good.
I like Don Rickles in there.
Rest in peace, right? Don's got to be gone for a while.
Don Rickles, yes, he died.
He's got to be.
Yeah, but he was in Casino.
Yeah. He was the boss.
He was a pit boss.
Pit boss. Yeah.
Yeah.
He went 2017.
Yeah. No, he was great.
Remind me a lot of him. 855-238-2789 or 855-BE-TASTY. Phone lines are open. I got 4 lines open.
I got to put Blazing Saddles up there. I got to put a comedy in there somewhere.
I'll tell you, hanging in there. So enough 18.
Yeah, I don't like this. I this rally back doesn't do anything for me.
Illinois, Mark in Illinois. I see Norfolk. I see Tampa, and I see Michigan. We'll get to you in a moment. Mark, Illinois, what's up?
Good morning. I don't know if you've heard, there's a rumor that the Tasty servers have been kidnapped.
Yes, that was true.
We've had some issues here. It might be good if you could have your tech team inform the production staff on the video side when this happens, that you could interrupt and reassure the Tasty Nation that all is well or being worked on here.
Well, of course, we know if it's down, it's being worked on. I mean, that's a given. I mean,
sometimes there's vendors that make like we're connected to so many different exchanges and so many different people. Sometimes somebody makes a change on a weekend and it throws off one of the order routers, and that's just what happened this morning. So they just had to restart it. It took a second.
They rolled back.
Yeah. I mean, the quotes were
Hello,
up.
this is IT. Have you tried switching it off and on again?
We would have. That's exactly what Tony and I would have done. Like that's. Did I ever tell you about the time I called the a repair guy to come out on a Sunday because my refrigerator broke, and it cost me $380. This is about 15 years ago, and all that happened was the plug was out. So this guy's right. Yeah, Mark's right. Sometimes you just got to plug it back in.
It's kind of disconcerting. Yeah, when you log in and it thinks that you have a new account and there's no money there, and it's like, good. They're trying to hack into my Tasty account and take all my money and positions. Well,
yeah.
Easier than closing some of those, but still.
Hey, Tasty in 8 years has barely had 5 minutes of downtime in 8 years. But when we first built Thinkorswim some years ago, we used to have a light in our office that would flash if the system crashed. Because back 25 years ago, the technology wasn't as stable, and we used to crash every day. When we first built it, it was the scariest thing. I was like, it would just drive us crazy. We were on pins and needles all the time. Now this platform is amazingly stable. Amazing.
Although not this morning.
Okay, just wanted to.
All right, man. Thanks,
Make
Mark.
sure you guys are in the loop.
Yeah, we're in the loop.
Thank you.
I mean, we're in the studio, so it's hard for us to know what's going on. We really don't know. But thank you. Thanks.
I'm sure Beth knows all though. So.
Oh, Beth knows, but she doesn't like to scare the children, and we're the children.
Okay.
Thank you, my man. Goodfellas. How can we not mention that one?
It's not in my top 5.
Really?
Really? How come every movie in my top 5 has to be an Italian movie?
Because they're usually the best, or they were. They don't make movies like that.
It has to be about,
I mean, they tried to make it with the Irish guys, and it didn't work. Didn't work.
But
and I knew the producers,
all I'm
but I
saying
wanted
is-
that to work better than nobody.
All I'm saying is it doesn't have to be like Goodfellas or Scarface.
Goodfellas is a great movie. The vernacular in Goodfellas was amazing. They nailed it.
All right.
Somebody else who's nailing it, Norfolk. Mike in Norfolk, what's up?
Hey guys, how are you doing? I have a question about the reverse stock split about Lucid.
Say it again.
Yeah, what about it?
A reverse?
Yeah.
Yeah. So I have a leap call, buy to open call for January 2026. And the platform hasn't updated yet, so I'm curious, how does that work? So the call's at the 10 strike, and clearly it shouldn't be there because I'm showing some massive profit. So I'm not going to touch it, but what can I expect in the platform over time?
If you go, which call do you have exactly?
I have the 10 strike, January 16, 2026.
January 16, 2026. You mean you have the old Januaries, not the new leap, right?
It's 136 days to expiration.
Right, and you bought this a while ago, right? Is that what you did?
Yeah, like 3 months ago.
Right. So 3 months ago, when the stock was trading, let's say $3, you bought the January 10 calls of 2026.
That's right. And so in the platform, it's still showing at the 10 strike.
Right.
Which is awesome, but I know it's not real.
Right. So what's going to happen is, because the new options weren't listed yet this morning, so what's going to happen is
they'll
be there tomorrow, and there'll be 2 sets of options. So on the top of the page, it will have where under where it says deliverables. It's right above the quote feed. There will be the standard, and there'll be the non-standard. And yours will be on the non-standard. So it will show the market. I mean, there's probably, I'm guessing, what was the stock split? Was it 1 for 10, right? It was 1 for 10, right, Mike?
Yeah, I don't know, but sure,
Yeah.
something like that. Yeah.
Yeah, it was 1 for 10. So your 10 calls are going to be hundreds.
It was 1 for 10.
It was 1 for 10, right? So his 10 calls are going to be hundreds.
Yeah. Okay. So I basically just have to wait a day or two for it to update,
One day.
and then I can decide what to do.
Yeah. Tomorrow, all the new quotes will be there, and there'll be a standard and a non-standard quote. There won't be, the markets will be pretty bad, but you'll get the right P&L and the right quote tomorrow.
Yeah. I mean, I don't intend to close it or anything. It's just
No, you're just gonna
amazing.
You're just gonna hold it. You're just gonna hold it. You're still gonna be 80% out of the money.
Sure. Okay. Good to know what happens. Just an unusual situation.
Yeah.
Appreciate
It
it.
always
Thank you.
when you have a reverse stock split like that, they don't get the new strike prices from OCC until this morning, and they can't load them up until the market opens. We don't load prices during the day because it's too much of a risk to our quote feed. So we load them up overnight. So they'll be there tonight.
Okay. Really appreciate the explanation. Have a great day, guys. Thanks.
Thanks.
Thank you, Mick. Good job out of you. Apocalypse Now. Top 5. I got 17 in my top 5 right now. We're going to go to Dr. D in Tampa, Florida.
Apocalypse
What's up?
Now is not in the top.
Yes, it is. Dr. D, don't listen to him. What's up?
Hi, good morning, Tom and Tony. How are you guys doing?
Hi, we're good.
So I have a question about inverted strangles.
Okay.
So I currently hold several positions, some of which are $100 apart, with the stock price sitting roughly in the middle. I noticed they still have a significant amount of extrinsic premium remaining in 17 days until expiration. Would it be better to hold them until just a day or two before expiration to maximize, to collect the remaining premium before they expire, or to roll over to the next month?
Both sides are in the money?
They both, yes, they both are in the money, but they have a good amount of premium left, and they are like $50 apart from the call and the put.
And this is September expiration, right?
Yes.
Yeah, I mean, it's your call. We would because it's inside of 21 days, we would uninvert and roll to October. But if you want to keep what you have on, you can certainly keep it on. If you're right in between and there's nothing you need to do and you're not worried about any of the deltas or anything like that, then sure, you could just keep it on. But we would in a single trade, we would buy back the SEPs, uninvert into October, and recenter the trade. That's what we would do. If you want to just keep what you have on, totally fine. It's just not the way we do it.
Okay, and another question on top of this, since they are actually $100 apart inverted triangle, it's very hard to actually uninvert them for the next month. So do you actually collect the credit and keep them $100 apart, or you try to reduce the width of those inverted triangles?
No. It's not hard. What's the underlying? Do you know the underlying? What's the underlying?
So I have a lot of underlines. I have NVIDIA, 130 and 185.
Okay. Yeah. So Dr. D, though you have very liquid underlines. It's not hard. It's not hard to uninvert. What you're confused by is that you have to pay a debit to do that. Don't worry about that, because all you're doing is buying back intrinsic.
Okay.
It's not hard to do. It's super simple. Those are very liquid stocks, and if you keep them on, there's very little you can do with them now. Since they're deep in the money inverted, if you uninvert and roll to October and recenter, then those are in liquid stocks like that. Don't even worry about the debit. It means nothing. It's already priced into your account.
You're left with
there'll be no P&L change for you.
Oh, okay. All right. That sounds good.
Yeah,
Okay,
you think the
perfect.
debit's going to be a
so much.
P&L change, but it's not going to be.
That's correct.
Okay. All right. That's good to know. I thought that if I'm paying debit, then it's reducing my balance overall net liquidity.
No, not at all.
You're actually, we would think you're improving your base.
Yeah, I'm going to say that you're probably going to pick up some money because you're probably getting bad marks on those deep in the money options.
Yep.
Okay. Perfect. Thank you.
Thank you
so much.
Thank you.
Thanks.
I'm going to go to Michigan. I got Amanda. Amanda in Michigan. What's up?
Hey, Amanda.
Hey guys, how's it going? Good job in Chicago on that At Work by 11. That was so fun.
Awesome. I'm glad you liked it.
Thanks for coming.
Yeah, I must love you guys a lot because that traffic is no joke.
Thank you.
Anyway, so I'm doing something wrong with my strangle, and I'm not sure what. So I'm selling premium. For an example, I did Roblox, and I had the 95-130 strangle that I sold. And it's being an absolute jerk.
What strangle does she have?
So,
are you in September, October?
Well, I just rolled to October, but I know I didn't do it correctly because I think I left the money on the table. But So I'm trying to stay delta neutral. And so with something like Roblox, you know, it had a massive down move. So what did I do? I rolled down my call. And then what does it do? It turns around and goes right back up and touches the top strike. And
Typical
so
man.
typical
man. Go ahead. Mm-hmm.
Like herding cats, right?
Yep.
Like I'll move one side and then the other side gets hit. So what am I doing wrong? I know I probably need to roll up or down the other side, but I don't know when to do that.
So what do you have on now in Roblox in October?
So now I'm sitting at 105, 140.
Okay, so you have a little bit of short delta. You're short 16 delta on the overall trade. And if you're neutral to slightly bearish, you want to be delta neutral, but neutral to slightly bearish on Roblox.
I'm not smart enough to have a thesis on this one.
Well, here, if you want to reduce your delta by about half, you can roll the 105 puts to the 110. Just sell the 110, 105 put spread, and you would be left with, 10 short deltas instead of 16 short deltas. That's something I might consider doing with no opinion on the stock.
And you know what? That Roblox is so freaking hard to trade, Amanda. So, I completely understand because the markets that stock has done nothing but go straight up. It's been so difficult to trade. It's crazy.
Yeah, I think once I'm out of this strangle, I'm going to let that one take a big nap from my portfolio. It's not been a fun one.
Mm-hmm. Mm-hmm.
Roblox and Reddit have been the two most difficult.
Me too. Reddit's terrible.
I know, and the markets in Reddit are terrible. I completely agree with you. And the markets in both those stocks are mediocre at best. They're hard to roll. I'm right there with you on both of them.
No, I should have just stayed in my liquid underlyings, but I had some good success with Roblox in the past, and I'm like, oh, try a strangle. Yeah, no, I'm done with Roblox.
I hear you.
I don't blame you.
I don't blame you at all.
They have mine too.
Yeah. Some stocks just get your number, and Roblox, they're totally one of them. I completely understand.
Well, if you did it, then I don't feel so bad. Thanks so much, you guys.
Bad.
You should.
Look at him.
Yeah, look at me.
Good job out of you, though. Roll up those putties. You'll have less delta. California. Sing. VJ, what's up?
Hi, Tom and Tony. I generally trade 0DTE and sometimes 2-3 weeks, credit spreads and so on and so forth. So I note that on September 5th, the premiums are quite high. Generally, when you do calendar between, let's say, 3rd and 4th, September 3rd and 4th, there's about $3 difference. But in case of September 4th and 5th, there is a large difference of premium, about $7-8. So what will be the best strategy to do any trading for September 4th, 5th, and use that high premium?
What are you talking about first? What product? SPY, Qs? What are you saying?
SPX.
SPX. And you're saying that there's a big difference between which
September 4th and September 5th premium.
September 4th is 17.5 and September 5th is 19 and change. I'm going to guess that there's some sort of news coming out between the 4th and the 5th, and that would be jobless claims.
Yeah.
So if I was looking to take advantage of that difference in volatility, I would probably actually be looking for the 5th and the 8th. Let me explain why. Because I want to sell the higher premium and buy the lower premium. So I might look to sell the September 5th, 8th calendar spread or diagonal spread in there. Still a tough way to make a buck, being a very tight calendar spread, only a few days, the 5th being the weekend, Friday into say you'd be left with a position. I would probably abstain from that type of strategy. What's that?
Yeah. Sounds good. Thank you. I've been playing with those different dates, and but I thought, let me ask the experts.
You got it. I'm glad you did.
All right. Thank you.
Thanks so much.
My friend. Good one. Gonna go to San Diego. I got Gary. Gary in San Diego. How you doing, buddy?
Hello?
Yep. How you doing?
Hey, Gary.
Good. How are you guys?
Doing good, man.
Great.
Good to hear from you. Listen, Tom, let's talk about the bonds.
Okay. Let's talk about the bonds.
Okay. All right. So my first question is, like, they're going nowhere, and there's no juice. Are you, like, when you get in there, are you buying them or are you selling the puts?
Both. This morning
you're doing both.
This morning I bought bonds and I also sold puts in the notes. But you're right. Okay. There's no freaking premium in there. It stinks. I'm not selling both sides. I'm only selling puts because I'm just getting long. So I will do that, but I'm not doing both sides.
Okay, so I've been basically long too and doing that, and it's been okay. I'm up a little bit of money, but
yeah, sure.
It's, you know, like, I'm not getting killed in it or anything. But here's another question: should I mess with the notes and the bonds together, or should I just stick to the ZB?
The ZB is bigger, so it has a little more premium, so you don't have to do as many contracts, stuff like that. The notes, the notes are a little more liquid, but there's not as much juice in there. No, I'd stick with ZB.
Okay, so there's you're saying there's no advantage on the ZN, excuse me.
On the ZN, there's no advantage.
Yeah.
The reason we tell people sometimes to go to the ZN, there's two reasons. One because the 10-year notes have been stronger than the 30-year bonds, meaning, you know, there's definitely some skew to the front end of the curve. And the other thing is they're more liquid. And for people that are just getting their feet wet in bonds, they're half the size, Gary. So it's half the trade. It's half the size.
Right.
So sometimes people get really nervous about bonds. So you just trade the notes. I mean, just because it's half as much risk.
Well, what I was thinking today is, why don't I sell the premium on the notes?
You certainly can.
Okay, and you do that sometimes with buying the ZB and selling the ZN, right?
I did it this morning.
Okay.
Yeah, I mean, I sold. Yeah. Sorry.
You did it this morning, but it could be gone by 12 o'clock today. I'm talking about a little bit longer time frame.
Okay.
Yeah, he's on the same page.
Yeah, I'm on the same page.
Yeah, okay. That's all I wanted to know.
You got it.
I appreciate it, guys.
All right.
Good to hear from you again. We'll take our last call. We're going to go to Anchorage, Alaska. I got Chris. Chris in Anchorage. What's up?
Hey, Tony, Tom, good morning.
Good to see you.
Had a position question. So last week I was attempting to trade CrowdStrike.
Uh-huh.
And after it closed, the metrics, they beat everything, but they tanked it $30.
Yep.
So I bought, I don't remember, like $20 out of the money, $3.75 put.
Mm-hmm.
And so then right there, I'm helplessly watching the screen like, I want to get out, because that $3.75 put was worth, according to the theoretics, I don't know, like $2,900. So if I got in the aftermarket and bought 100 shares of stock, would that flatten me out?
Well, it wouldn't flatten you out. Your 375 puts are still out of the money, right? So they're going to have a
they were in the money.
So the stock was under
from the aftermarket.
So the stock was under 375. You're saying, correct?
Correct.
And you're long puts. Yes, if you bought 100 shares of stock, it would neutralize your position.
Right, for my one. So then, because I'm still a dumb futures guy from the old days. So after I've been trading, I think this week is my 5-year anniversary starting.
Mm-hmm.
I've never gotten out in the aftermarket, and a number of times, and this was a good example. For overnight, I was up money on that, but by the next morning, it was $15 higher, and then they expired. It expired worthless.
So you were naked long 375 puts with only a day to go. Like that day, Friday of expiration.
Yeah.
Okay. And
I can't remember either.
Well, it makes a big difference.
Or go ahead.
Well, it makes a big difference. If they expired that week, meaning the Friday, right?
Yeah, they did. Right.
Okay, and the stock is higher in the closing at 3 o'clock. Stock's higher. Your puts are worthless. Let's just say they're out of the money. They're worthless. Now the stock goes significantly lower, under 375, and you bought the. When did you buy these puts?
375 put. Right. Exactly.
How could you buy the puts? I mean, you bought them before 3 o'clock then, Central.
Yeah, okay. I was speccing, and I thought for some weird reason they're going to tank it.
Right.
And it's like, hey, I'm right. And now it's like, oh, I can't get out, though, until the next morning.
Right, you could have bought stock. Options close at 3 o'clock on every platform.
Right.
There's nothing you can do. You could have bought stock, which would have cost you, whatever, $20,000 to do, but you could have bought stock, 100 shares of stock.
That's all you could have done.
But after you, I guess my question then is, so on Saturday morning when they're exercising or whatever, clearing out all the accounts, all the worthless options, would that make my account flat and I would have collected money?
Well, you would be long the puts. You would have to put in an exercise notice to exercise those puts that day, on Friday. Because if you're you understand what I'm saying? Like, because the stock closed at 400, let's say, those 375 puts are not an automatic exercise. They're out of the money. You'd have to put a exercise in.
Okay. But if I guess, and I know it's you guys the show's about to end, but so real quickly, so if I bought the 100 shares down where it was at 5 p.m. and then took that, even though the next morning then they were worthless again, I still would have had to exercise, but I would capture the 2 hours I was in the money, right?
The time frames are a little bit off when you say it like that. You would have to have exercised before 3:30 on Friday. You can't do it on Saturday.
Yeah, or I mean, yeah. So I guess the question, I'm trying to reframe it, that so the aftermarket, when it showed for whatever 7-8 hours overnight, I was in the money.
That's correct.
And if I bought those shares in the aftermarket when the market,
yes,
went down, I would actually make money though. Then, right?
That's correct.
I could, or I'd say another way to say it, I could get out for once versus being stuck and waiting.
Yes, correct. That's correct.
Okay. All right, guys.
You got it, man.
Good talking to you. Thanks. Thanks for the answer.
You got it. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jen next. Take care. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking, and we are live from the SPX pit at the SIBO.
There's a lot of stuff going on today because SPOs were down 80 at one point. I think they're only down 77 right now, and so there was a low rumble going throughout the whole pit when we first got here.
Yeah, definitely busy
it's calmed
today.
down a little bit.
It's been a constant though. We've heard constant orders. I've seen big trades, big orders running through the board. I saw quite a few.
I was just laughing because that human moved so slowly through our frame. It doesn't look like it's busy. I was like, what is he doing?
I feel like I'm in slow motion today. After the long weekend, it was tough getting out of bed today.
I know it was. Long Labor Day weekend, but yes, all good. We're happy to be here today. I'm happy there is stuff going on. We have a jam-packed show today, to be honest with you.
We do. You know, the market's down, crypto's up. So I know in your account.
Is it up?
Hey, Bitcoin.
Where is Bitcoin right now?
You try to guess. Don't look.
110.
111,645. So we're getting closer to 112.
That's not really up.
But I'm just saying, like, if you're in your account and you're seeing red, your Bitcoin is up.
Kind of.
Ethereum's not up. That's what's not up.
Okay. But I mean, I would say 112, 113, 114. There you go. Whoa.
So,
keep them in line back there, Gary.
Take them to the horse. All trades are settled. All fights and disputes are settled out at the horse.
I don't think that was a fight, though. That was
Sounded wild.
That was just a big order. And Keith's divvying it up. That was the guy who was divvying it up was one of Tom's old clerks.
And it sounded like that was in a real aggressive battle.
It wasn't a battle. It was how it usually is if it's a big order.
Now, it usually goes first on the trade. Does the first on the trade still get to say how much they want? It doesn't sound like that's happening anymore.
I think he's just divvying it up.
Yeah, like you get 100, you get 100, you get 100, you get... Used to be, if you're first on the ticket, you could say what you wanted.
Well, I mean, I think maybe you could if we were back there and we were first and you said buy them. I'll be like, I'll take them.
I'll take them all.
I'll buy your balance.
Oh, the good old days. Anyway, we've got a lot going on. We'll take a look at some activity. There's been a lot of volume going on today.
Speaking of the good old days, can we pop into Twitter and we show the picture of me back in the good old days?
Oh, sure. Let's go to Twitter. So in Twitter here, we shared this. This was a lot of fun to make. This Tales of the Tape. If you haven't seen it, it's a cute little video. And in the video, someone watched this, and in the video, they pulled out this photo.
This was not the SPX pit. This was what the equities used to look like.
So where's Waldo? if anyone can find Liz in this photo.
This is off the annual report from the SIBO. I'm pretty sure I made the annual report every year because I was one of the only girls down there.
Yeah. Now this is okay. So
because there were no cameras allowed back then.
No, and people will always ask, like, where are pictures? There weren't cameras allowed. I don't even know if there were cameras back then.
I don't think we had them on our phones.
No, we didn't. We had flip phones back then.
Yeah. Or
did we even have flip phones yet?
Then probably not. And you can see that's what it used to look like. That was an equity pit. And the pit that I'm actually looking into, I'm turned around, that was the Hewlett-Packard crowd. Back in the day.
Yeah.
HPQ.
Yeah. Now, I'm hard pressed to find any pictures of me back in the day other than my photo on my badge because, like you said, our phones didn't have cameras. There weren't cameras allowed. They weren't
down
allowed.
there. Like you couldn't come down with like one of these, be like. It was not allowed unless you were a professional photographer, and this was a professional photographer.
And that was for one of the SIBO
annual
reports.
Yep.
Yeah. So Liz was a floor official.
Not in this one.
No, but you were a floor official.
I was a floor official.
She wore many hats for the SIBO.
For the SIBO, I did. So that was, as I was a market maker, I was also a floor official.
Yeah.
So I was working for this company, and they had a handful of us that would be, and that was the best, when I'd get called in for a fight. Let's go break that up. Okay, I'm on it.
So you were in quite a few of the SIBO annual reports.
I was in most of them.
I feel like I left. When I left, Logan was born in 2004, so I left he was born in January 2004. I left in 2003. And I don't think you became a floor official till I was already gone.
Yeah, no, I wasn't a floor official until you were gone, yeah.
So I missed all the excitement of Liz breaking up the fights on the floor.
And Janice was the other woman floor official, and she's like, we need another girl on the squad. Do you remember Janice?
Yeah.
Yeah.
So anyway, a cute photo from long ago.
Yeah, that's what I said. You said back in the day, I said, bring up that photo. And I want to say thank you to Jackie, who screenshotted this from
who posted it?
Jackie.
Yeah.
Yeah.
Yeah. Now curious to see Jenny. Maybe I'll bust out my badge. Maybe tomorrow.
Yeah.
Tomorrow I'll put my badge on. Try to hop on. Next time there's a big trade, try to hop on.
JNY.
Anyway, all right. Back to the platform. So, you can see I've got Bitcoin up here now. It's up 3,000. So almost up to 112. So I know you kind of said like not really up. Well, not up near its highs, but it's up today.
It was up to the highs are like 122. So I consider this down. If you take a look at the chart.
Did you hear him?
No.
He just came by and was like, "How you doing?" trying to get on air briefly. He's welcome. He's welcome to come.
We'll accept anybody that wants to. Nobody wants to talk to us. I thought that slow walker wanted to be on.
He's welcome to join us. But you can see as I scroll down our positions, the only green we have here is our IBIT.
And that CDE, what the heck is that?
I knew you were going to ask that. That's that one. Remember that guy wanted to do a call spread, and we're like, hey, just buy the call.
Yes.
Yeah, we said, hey, just buy the call. So we've got 17 more days. I'm going to hold on to that.
And we closed our Triple Q's calendar the other day, when I'm glad we did, because it probably would have gone through it. Can we see what the strikes were?
I don't know. I don't.
It's gone.
No, I know we closed it, but I don't know if it would have gone through it or if it would just be right there. It might just be right at the strike. I'll take a look. And I also want to look at...
Frank just texted. He said, Janice from A.G. Edwards. Yes. She used to hand me orders, and she called me Munchkin. That's funny.
Okay, it was the 560, and Triple Q's is 562, so...
Oh, we would have been right there.
I know, it would have been... let's see how much it's worth now.
She went not through it.
So 560, it's the 6-day, 24-day. September 8th, September 26th. So we paid $350 for it. We sold it for $440. I wonder what it's worth now. September 8th, September 26th. Let's see. September 8th, September 26th, 560, September 8th. And if we sell that 560... it's honestly the same thing that we closed it for.
And great.
So,
we're not going to put this back on.
I was just curious.
I just thought it might have been through it.
I thought it might have been worth more, but it's fine. We're right there. One thing, and maybe we can get to this later because we had some questions. We've got some things to talk about today. We actually have a pretty good trade that we're going to walk through.
Yeah, we do, and it was from a viewer who emailed me last night because she was in Italy and the markets are not closed on Mondays.
What?
She's in Italy and the markets are not closed on Mondays. On that Monday, we were off yesterday. Markets were closed.
Well, like our markets were closed. Our markets, wherever you're living, our markets were closed. Like
she was like, we did not. Our market was not. Italian market was not closed.
Oh, the Italian market.
Yeah, she's in Italy. European markets aren't closed.
I noticed something that I have to adjust my screen. So maybe we'll take it off the shared platform for a second. We can go on our wide shot just while I adjust something. I got to adjust my layout.
Okay.
Oh, no, here. Let's see. All right, and then now I think I'm ready. Now I think I'm ready.
I love a live show.
Today's like a Monday. Today is like a Monday.
I love a live show.
I'm feeling like a Monday. I suppose we're almost down 80.
I know, it's crazy.
Yeah.
So where do you think? Okay, so today we've got the VIX was over 18, touching 19.
Let's see where it is now.
Let's see where it is right now.
VIX
1866.
Yeah.
Our UVXY is not catching a bid. Look at this. We're only
Oh, and
up.
I saw we had Herb write in about it. So I saw on Twitter Herb wrote in about the UVXY. So UVXY, we put this on 32 days ago. 32 days ago, we were looking for a bullish position in vol, and we've got those 16 calls. UVXY is up $1 with this VIX move. In order to get back to that 16 handle, we're going to need a massive sell-off.
How many days left do we have?
We have 17 days.
I mean, that's fine. I mean, that's the one thing that it's got to sit there, because in UVXY, it does have that drag. So it's going to take day after day after day of VIX going up.
And honestly, right around that same period of time, so this IWM butterfly, 29 days. So you can see we were in UVXY for 32 days, and this IWM trade 29 days. IWM was trading at the center of our butterfly, which is 218. We're trading through 230. IWM's trading 232. So in order to get back to those levels of when we put that trade on, IWM needs to get back to 218. That's pretty far from where we are now.
It's not saying it's not going to happen, but
no. But so we need a big to get a boost. A bigger boost in vol. We need a bigger sell-off. We need multiple days in a row like this.
And so this is the fifth day. This is the fifth day of red bars in the general market. Mm-hmm. That's what I heard this morning. I don't know. I mean, if we close red, yes.
Let me take a
look.
look.
I don't know about IWM, but yes, in SPY.
Let's take a look. Oh yeah. Doesn't look like much. Well, it doesn't look like 5 red bars in a row.
It does not look like 5 red bars in a row.
Let me see if I could. I'm going to adjust this. It really doesn't. Hold on.
I would argue that doesn't look like 5 red bars at all.
No.
They said it's the 5th day of closing red. Maybe closing down on the day.
I don't know.
I don't either.
It doesn't. I don't know if I'm buying it, but would you think that here, like, is this going to be? Does this look like some level of support to you?
Dip? Yeah, it does.
So
looks like support.
I don't know.
Can become resistance.
Okay. On that note, let's talk about. We've had a question. Market's down. I'm going to go to this question here.
There we go.
What is 1016?
1016.
It's 1016, and we're talking about what is a Delta Buster.
I'm going to argue. I asked our producer to the stars, Matthew, and he doesn't know what a Delta Buster is. So this segment's for you, Matthew.
The question comes when the market's down, and people want to know, what do you put on? What kind of
The question just came, what is a Delta Buster, in my inbox. That's all it said.
But usually the question that we ask ourselves is, what kind of bearish trade could I put on when the market's already down?
So and that's why we love this today. And she has a lot of other questions in there too, but this is perfect for today, because what's happening? Market's already down.
Market's already down.
Volatility's already up. How do I get short the market when the market's already down? How do I add short deltas? Did I miss the boat? How do I add short deltas?
Because we often say you can't buy insurance when the house is on fire. People will have a losing position and say, what do I do with this losing position now? What's the usual answer?
Can't buy insurance when the house is on fire. It's managed at order entry.
That's what I was going to say.
Risk is managed at order
That's
entry.
what I was looking for.
I was like, can't buy the house and turn the house on fire. Your risk is managed at order entry.
Yes, yes. So if you put on a naked position, you're accepting that risk when you place the trade.
Yes.
If you want to manage that risk at order entry, you put on a defined risk trade. So risk is managed at order entry. When that trade turns to a losing trade, it's very hard to adjust that risk, other than rolling out in time, moving out in time.
Yeah. So that's the one thing that we're looking at. So we have a typically bullish portfolio, so we do occasionally look at a solid Delta Buster. So we're going to walk you through how to put something on. Now, a Delta Buster is adding bearish Delta. That's why we call it a Delta Buster. You're long Delta, how do you bust it?
Right. If your account is long Delta, if you're mostly long, short puts, long stock, covered calls, whatever, how do you bust that long Delta?
How do you bust through that long Deltas?
Bust them, bust them, bust them.
So I know in the words of TP, he always says this, hedge is a 4-letter word. So if we've got a long portfolio, there's 2 things you can do. You can cut back on your positions, you can add something else to it. And this is how we're going to add to it.
All right, we're ready.
We're going to keep it tight.
We're in SPY. We're in SPY, and I'm going to just use this as our example.
Okay.
So Delta Buster does a few things. Kind of like the Jade Lizard takes advantage of skew. I believe the Delta Buster does take advantage of skew as well.
Possibly, and we'll take a look at it.
Yeah, we're going to look at it.
So I'm going to break it down, and then we're going to walk through one. But a delta buster is adding bearish delta, so you're going to be buying a put spread and financing it with a farther out of the money call spread. That's the crux of it.
So when we know vol skew, the further out of the money puts are more expensive. They become more expensive. They're a higher volatility. And so if I'm going to buy a put spread, I'm just going to keep these numbers simple, like 635, 625. Just keeping the numbers. Pretty much we buy, we start with the long put at the money, and then we're selling. So we're selling a put further down. We're usually selling a higher implied volatility.
Hence the taking advantage of vol skew, because you're actually adding that as the short one. This is a defined risk, bearish position.
And you'll hear us say, like, put spreads trade cheap, call spreads trade more expensive.
Yes.
And that is why the Delta Buster takes advantage of that. If put spreads trade cheap, we're buying the cheaper spread, and then call spreads trade more expensive. We're selling a more expensive spread.
And we'll show you how we're doing this. So this, in and of itself, is a bearish position. You can see it's short 10 deltas in this position. This can make right now a max profit of $700. But what we don't want to do is pay for this, because this won't pick up in bearish position until, you can see this on the green bar at expiration, 632.
Right, and I can shift this up, so we're right here.
I'm okay with it. I like the round numbers.
I was just keeping the numbers simple.
I like the round numbers. I just want to say it's not a bearish position because we're paying for this. Like, we could have a bearish position that even if it goes down a little bit, we won't make money because we're paying for this position.
So that's what we're trying to avoid, paying for this. So how are we going to cover, if this is costing us $300 to put on this trade? Basically, like, this spread would be pay $300 for it, you can make $700 if the market goes down and is through this spread at expiration.
Correct.
How do we cover the cost of it? Well, selling a call spread. And the cool thing is,
and out of the money call spread, as far out of the money as we can.
And that's why I say that put spreads are cheaper than the call spreads, because I'm buying this at the money put spread for $3, and I'm going to be able to sell a $10 wide call spread for $3 further away, further out of the money. I don't have to do an at the money call spread because I can go further with it for $3.
You're right. You're not doing the right at the monies. You should be able to do this. Now, here's where you got to play with the strikes a little bit. If you want to get rid, you know what you're paying. Do you want to close your put spread and just play with the call spread?
I'm gonna. I think usually we can go to about a 35 delta. I think, or maybe a 40, 35. Let's see. Here's a 38 delta, or I'll start with this 41 delta, 645, and I'm gonna make it $10 wide, because usually we like to sell, a $10 wide call spread to cover the cost of a $10 wide put spread.
Correct.
645, 655. And I'm still taking in $1.45 credit.
So you can shift that if you want to. So take that and shift it as high as you can where we're covering the cost of it. That's what a true Delta Buster is.
I'm going to try the 35 Delta here, or the 650, 660. And I'm still taking in a credit. So this is what I think it really highlights what skew does to these options. We're buying this at the money $10 wide put spread for $3, and I could go all the way up to the 35 delta call and sell $10 wide call spread, and it's covering the cost and then some.
So if you take a look, this is a true Delta Buster. Let's take a look at it in the curve view as well. So you're selling an out of the money call spread as far away as you can get to cover the cost of the at the money put spread.
Now I'll move it even more.
So look at this. What I want to show is the delta went from 10 to 23. And you have zero cost. So now you notice your max profit is about $955 and your max loss is $1,000. That's exactly what, or I'm sorry, I flipped it. Your max profit is $1,000, your max loss is $950.
So this is what this trade looks like. If the market keeps going down, this trade can make $1,000.
And it picks up almost immediately.
But we have room before this trade would lose. So we have all the way up to the 650 level to get to our short call.
Correct.
And we're trading 636. So we have a 15-point SPY move before we'd start losing on this.
And keep in mind, this is all at expiration when you're looking at this visual graph, but that's how it should work. Now, if we gap up tomorrow, this will be a loss in this account. There's no adjustments needed, because kind of when you put on a Delta Buster, there really isn't much adjustments.
No, the adjustment I would make is if we're getting closer to expiration and this trade isn't working out, we're not down, and we're trading somewhere in between this call spread, and the loss is capped. You see, it's
you can
capped.
only lose $947.
But if it's through that call spread and we're getting close to expiration, what I might do is then roll that call spread out in time to give ourselves more time.
And you can, if it's in the middle of your call spread, you can roll that out in time. But, however, keep in mind, you're not getting much credit. And I would like to not get any credit. How far can we get with this?
Let's see. I'm going to go back to the table page, and I'm going to adjust this. Move this 652, 662. and we're just taking in a little.
You're just moving your break even as far as you can.
I'm moving it.
There you go. You switched it to a debit.
Okay, I'll take it down one.
Take it down one.
653, 663.
Perfect.
So there we go. A 1 cent credit. So we're not paying for this, and we have room up to 653.
It's pretty good.
If I go to the chart,
on paper this looks great. So 653 is above. It's all-time highs again. If we hit all-time highs, that's where our pain point starts again.
Right. And now this is a 45-day trade. When we go further out in time, it allows us to get that call spread higher. That's why we're getting our short call at the 653 level. If we were shorter in time, if we thought, oh, the market's going down, or we think it's going down sooner, we want it shorter duration.
You're not going to get as far away.
Maybe we'd have to do a $5 wide instead of a $10 wide.
Correct. You can play with this, but the takeaways here are you're buying it at the money put spread, financing it with as far of the money out of the money call spread as you can, so you're not outlaying any capital. So this put spread has the ability to make $1,000.
And I will just go on to I'm just going to go on implied volatility just to
good call.
show how here we're buying for the put spread. We're buying a 14 vol and selling a 16 vol.
Yep.
And in the call spread, we're selling the 13 vol and buying a 12. So every part of this trade, we're selling the higher vol than we're buying.
Takes advantage of the vol skew. I like this. Okay, so that is in a nutshell a Delta Buster. Glad we went through that.
Yeah.
And I appreciate the email and asking about it.
Okay. All right, I'm going to ship this.
Because would you argue no one's going to talk to you about a Delta Buster or how you get short the market when the screws are already down and filled.
So now here it is in our positions. When we talk about the profit potential of the $1,000 profit potential, that's at expiration. So would you put in, people often ask, would we put in a GTC for this? To take it off for a certain profit target?
You can. I don't know that this is going to be...
You can.
Sure, there's nothing wrong with that.
Sure, you can. 20% would be $200, but you can leave it if you want it as some protection to a bullish portfolio.
Yeah.
Okay. All right. Excellent. So that's the Delta Buster.
Yes. And you heard it here first. Okay. So then next up, what do you want to do? Do we have anything to manage in our account?
Delta Busters in. You know what I want to manage? No, we don't have to. I'm going to put in a GTC for IBIT to take 50% out of this, but I don't think it needs management. I wanted to
will you push everything out too, so I can
sure.
do it in real time?
And I wanted to get back into core weave.
Oh yeah. And didn't you see some big trades going through there today?
Yeah, we'll talk about that. Okay, all symbols today. So far, all we did was this buy Delta Buster. Now, typically when we put on a Delta Buster, it's when the market's going down and everyone starts to panic. And most of the time, the market bounces back up through the Delta Busters.
Yeah.
But again, it's a little bit of downside protection in case you have a bullish portfolio.
It is, and we're going to take it off we'll take it off if we get anything.
Yeah.
On a day like today, we put it on when SPOOs are down 85.
Yeah.
They're down 90? I'm just kidding.
No, we'll leave this. We can leave this on for a while.
Did you push it through?
I did push it through. Okay, I wanted to look at CoreWeave because I saw on the unusual option activity, CoreWeave come up.
Because we did have CoreWeave. We did have, what did we have in there?
A buffer.
We had the buffer trade in CoreWeave, and then CoreWeave showed up on the large volume.
Right, so it popped up today for unusual option activity. If I pull up volume here, it was in this week's 15,100 calls traded in this week's options.
Wow.
That got me to look at CoreWeave, and I thought we put on a buffer trade last week, took it off very quickly.
Was this a spread, or was it just the 100? Did you see anything else with it?
Well, you've got 15,000 here. No, I did see something else with it.
Was it 107? Because there's 17,000.
Let's see. SIBO most active.
Come on, CoreWeave.
Here we go.
CRWV, just 100. That's just the calls.
Huh. Yeah. The 100 calls. Yeah, I don't see anything else.
Okay. Let's jump in. Now we're not going to go and do anything with those 100 calls.
No.
We're just it just caused her to look at CoreWeave. And that's what we love is like, she's not going to be like, oh, I need to jump into these 100 calls because somebody else did. No, we're going to look at CoreWeave and make our own decisions. This is the one that is pretty capital efficient, if I remember correctly.
Right. We can sell naked puts in here and it doesn't use too much buying power. So if I'll go back into last week's history, We did this delta buffer. We did a buffer. Put on a buffer trade. It took in $1,635 credit, so $1,635 credit for our buffer. It was October, and then we bought it back for $1,170. So,
and a couple days later, right?
Yeah, we made like $400 in a couple days.
Yeah,
so we took it off. But
that's why I love it. That's why we say trade small, trade often, and take it off because it's right back to where it was.
I didn't take mine off. I did this trade. I didn't take mine off, so now it's.
Jenny.
It's not a winner anymore. It's not a winner anymore. So now we can put it back on.
Let's do it.
Let's see. And I don't know if it would be the same strikes. CoreWeave's trading 93, and honestly, it would because look at our strikes: 92.5, 82, 110. We'll check it out.
We'll be right there.
October 90. So here.
And what we're looking at here, the buffer trade. The buffer trade is, and I'm going to break it down, and then we'll go through it. Is you're buying a. It's very similar. You're buying a put spread. They give you a little bit of a buffer, and you're going to be using a synthetic covered call.
So it's a bullish trade instead of a bearish trade.
Correct.
But we start with buying a put spread. This is going to move our break even on the put. We're going to get our risk down to the 82.5 level, and we're paying $440 debit. So what we need to look for is what put can we sell that has about $4 in extrinsic value.
This is pretty good. You can go all the way. You assess the out of the money call. So if you're looking at the puts, you look at the out of the money calls, and you can go all the way to the 110.
And that's the exact trade we had.
Yeah.
And we had paid $16 for it, bought it back for $11. Now we can sell it for $16.50 again. Same thing. Sets right back up.
Wow. Aren't you glad you didn't take yours off? Aren't you glad you?
Don't I wish?
Mad?
I wish I took mine off? I do. Yeah. So CoreWeave's down $10.
Yep.
I'm only thinking about this because I'm pretty sure I put this in my son's account, CoreWeave.
And you didn't take it out?
Not the buffer, but like short puts in there.
Okay.
Because the buying power is nice in CoreWeave.
So, and I do like the buffer trade in here, and this is, you can get out pretty quickly. But to your point, I just want to show and we'll put this back in. The out of the money puts are very, very, very easy to do. So if you just sold the 70 put for $2, or if you just wanted $4, you can just sell the 80 put because that's what we have. Like, think about it from that perspective.
Oh, maybe we switch it. Maybe we get back in.
So sometimes people ask, the only reason I'm saying this is we were putting up $1,400 or whatever it was. I didn't see the bottom because I'm one-eye Willie. But that's only using $700 for the 70.
$700.
And if we took it off for $400, if you sold the 80 put, see how much the 80 put is for whatever.
It's only using $797, and
That's
you saw
what I'm saying.
the buffer did use more. So the 92,
but
82.
If you sold that 80 put, you're only getting 50% of it. So
It's used $1,400.
There is, for every gimme, there's a gotcha. When you go to the out of the monies, it's going to hold up less capital.
So honestly, this uses $1,400. Those puts are using $700. This might be a scenario where I say maybe I'll just do 2 puts.
You could do 2 puts. Now you're doubling up to catch up.
Well, okay, so what I'm saying is the 2 short puts would use $1,400 in buying power. Like this one buffer uses $1,400 in buying power.
Yes.
I'm just thinking that buying power, and then you have more room. But
and the only reason I was going to the one short put is somebody said, isn't it kind of a buffer you have all the way down to your... Well, the last time we went over this, somebody's like, isn't a short put basically a buffer because the stock can go all the way down to your short put before you're going to be long in stock?
Right.
Technically, yes, but the profit potential is less. So that's what I wanted to say. So even if we sold that 80, I'm just using apples to apples. We made $400 on the one. If you sell the 80 put for $4, we're going to take that off at 50%. Your profit potential is more with the buffer.
Here,
if
it goes up, the profit potential in this trade is $1,672.
Yes.
A lot more than the $200 on the short put. So, again, the options make sense, right? There's all these pieces. You can put them together in different ways, and it's always a balance between risk and reward.
Correct.
So here, we can make a lot more, but we actually need CoreWeave to go up to make that money versus if we just sold a put, if we went to the out of the monies and just sold that 80 put, well, we have more room. We don't need it to go up. We've gotten to about 75. We don't need it to go up. We can make money as long as it stays above 80, but we can only make $430 instead of $1,700. But maybe this is the answer. The $400, the $400 on the 80 put.
That's not bad. I don't mind it. I was just going to go to...
It's only using $800 in buying power.
Jenny, I'm going to say something, and I'm not going to try to sway you in one direction or another. I'm just stating facts.
Okay.
Just the facts, ma'am, okay?
All right.
So CoreWeave is we've done very well trading CoreWeave this year.
Yes, it's one of my one of my top this year.
And I just looked at our account, so I got logged onto mine accidentally, and I was like, whoa, put that thing in. But then I went to, because it's one of my bigger winners.
Yeah.
But this one, in this account, it's one of our bigger winners. We've done well trading CoreWeave, getting in and out. So that's what I want to be crystal clear on. You saw us close the trade really quickly.
I know.
2 days. So I don't know if that skews you to get more aggressive or less
that's
aggressive.
why
I think less aggressive.
I
Let's
think
keep
like
our profits.
$400 is a lot for a naked put.
It is.
And considering it's only using $800. If you look at return on capital, I'm using $800 to make $400.
So let me ask you this.
But there's risk.
Because you have that naked put, are you going to wait for 50% of this? No, we'll probably take it off for 100 is my guess.
No, I was going to put in 50%. That's why I raised it to the 400 because I want to make more than $100. Like we're giving up making 1,600, so I at least want to make more than 100. I think 50%. Follow the rules.
Yeah, that is true.
Yeah,
that's true. That's why I brought it up. Okay, all right.
But I will say, and I don't know if you heard the
us.
discussion today. The discussion of are the IPOs this year that have skyrocketed. Is that a red flag for the market? Did you hear Tom and Vanetta and Tony talking about this morning? So we had all these IPOs where they came out and they really ran up. So this is one of them. You can see the date IPO to open at 76, and it ran all the way up to 179. But now at this level, selling the 80 put, and our break even is 76. We're right back to the opening of the IPO day. So I'm okay with this trade.
And I just want to be clear too. Every trade's a winner and every trade's a loser. And people could look at this and do
Thank you,
something
Kenny
completely
Rogers.
different. I know, right? When the best you can hope for is to lie and go to sleep, as I like to say to my kids. But so people are going to look at this and they're going to not be afraid of CoreWeave because it went from 180 all the way down to 92, where we were probably bullish a lot of the times, even on the downside.
I never had this is one of my biggest winners this year, and I never had a bearish trade in. I never had a naked call or a call spread. I always had bullish trades on. And somehow we've continued to get paid in here, but that's because there's been a lot of premium in here.
There's a lot of premium. Okay, so I'm in for that.
All right, but I will say, just to make our lawyers happy, just because past performance is not
indicative of future
success.
SPO's down 92.5.
And I shipped that put in CoreWeave.
Okay, we'll see what you do.
Especially
because Delta Buster, I just want to see if it's done anything. We're down 3 points since the Delta Buster.
No, it's not going to do anything.
I just want to look at it.
It's up $19.
That's what I'm saying. Close it.
All right, I'm working that put in CoreWeave. Okay, let me fix this. 430. Do you want the penny or do you want the position? I just brought it down. I lowered it. I lowered it close.
So I think it's hysterical because I have the markets right in front of me, and the Tasty platform's amazing, and I can see all the markets. But I prefer to look up there.
I like to look up. SPO's down 95.
I know.
We need a mega crash to get our UVXY back.
But the mega crash will take out the rest of our account.
I don't think it's not going to look good. Hey, the collars. So I did get some questions on collars. Those collars have been trading cheap. The collars were trading cheap when the vol was low and the market was at the top, but they're not cheap anymore because those puts are expensive now.
The puts are expensive. Well, and keep in mind that's the skew we were talking about. We just talked about the skew. Those puts are going to be more expensive, and that's the hardest part when the vol is up.
Yeah, the vol is up, so you can't put on anymore.
No, they are
not. You can't look at your position and say, "Let me throw in a collar today." It's not going to work. Not going to work anymore.
But that's just it. You can't buy the insurance when the house is on fire. You can't collar it off now. I mean, sure you can. You can always buy it. It's just going to be very expensive.
It's going to be very expensive.
How about that? You can buy the insurance when the house is on fire.
It's going to be very expensive. I did see some Vanetta had some nuclear news earlier. I didn't know what the nuclear stocks were doing today. So Oklo is down a little bit.
You was down as well.
Oh, you. And then what's our theory, or what else do we have going on here? Uranium. What's our uranium doing? What's the uranium symbol that we trade? CRM?
CRM is Salesforce.
What's
no idea.
Come on. It starts with a C.
Uranium?
Uh-huh.
Oh, CCJ.
CCJ. Thank you. CCJ, Chemical Corp. There we go. And that's down $3 today.
Yeah, down.
I'm curious what a buffer would look like in CCJ.
We can take a look at it. 27 rank.
Table. So October, Buy this 75.70 put spread, and that's 219. So then we find a call that has at least 219 in value. So the 80. So basically 581.
It's a lot of capital for that.
$1,200.
Yeah. It's better.
Didn't do too much. I was wondering if it was going to do anything at all.
Better.
Not much. But look at this. Is this just okay? I'm because sometimes we put in these option positions, and I want to look at this a couple ways, with and without it. Hold on, curve view analysis. So here's the buffer, right? Yep. You can make $578 if CCJ goes up, or
you're the proud owner of it at just under 70.
Yeah, our break even is at our just below 70. Now, when we went and bought that
defined risk,
bought this put, does it just look like a put spread? No, it doesn't just look like a put spread.
No.
It's a put spread with room. Because people have asked, like, why all the legs? Can't you just do a put spread instead of, because this is kind of like one, it's weird. It's like one long put spread and one short put spread.
Yeah, it is.
You have the short put spread, short 80.75. Oh, and then the short 70.60. It's like two short put spreads.
Yeah. You're just selling more extrinsic value than you're getting. That's why it's But keep in mind, that's why if you know your synthetics and you know how to layer them, you can get to whatever you want.
Yeah, you can create whatever kind of P&L you want to create.
You can create whatever you want, and you really can.
Yeah.
Like if somebody says, and that's why all these ETFs are popping up too, because the buffer trade is somebody on paper said, hey,
yeah,
general population, what if I said, are you willing to cap your upside? You're going to cap your upside, but because you're capping your upside, I'm going to give you protection, X amount percent
protection
down.
to the.
That's the resume of the buffer trade.
Right.
That's what that's how they're selling it to people. These buffer ETFs.
So we're getting room to be wrong.
And the Gen Pops love the buffer.
I don't know. I don't think the kids do. I don't think the
general population of people. Gen Pop, not Gen Z or Gen whatever. The general pops.
The older people of the Gen Pop. But now I'm in the category. What was the year?
No, what did my God, we're seniors.
Let's just read something. It said if you were born between 1970...
1941 and 1979, these benefits are for you.
Now I fall into that category.
Between the 40s and 79, we're in there.
So I'm in with my parents. My dad was born in the 40s.
Yeah.
I was born in the 70s.
Yeah, we're right there with them.
We're both in the same category now.
I don't even know what that was. I was like, oh, good God.
Should I push the CCJ?
No, I think, well, we could. I would prefer just to. I don't think we need to get fancy.
Okay, we don't.
So it's that same concept. You don't need to get fancy. Just sell the 70 put.
It's using the same amount of.
It is using the same amount.
And we've got half the profit potential.
True. Okay. In that case,
I kind of like the buffer, 70.65, and selling the 80. So the 80, 70, 65.
And then I do want to take a look at
bonds. I did, and I bought the. Oh no, I see 75, 70, and then I bought this. Here we go, $526 in profit potential.
Using the exact same amount of buying power and.
Yeah, 523 credit, and that buffer is shipped.
And let's
so that's on. So let me get everything pushed out because then I've got three trades on today, and I didn't want to say three good trades. I hesitate to.
I know you stopped yourself.
You can't call any trade a good trade because you don't know what's going to win and you don't know what's going to lose.
You don't.
No, you don't.
But I'm telling you, in the words of Kenny Rogers, every trade's a winner and every trade's a loser. It depends on how much you want to take out of it.
I'm glad you're giving him credit this time.
Yeah. Yes. Every trade's a winner and every trade's a loser. And the best that you can hope for is to take it off for a penny.
What? I think we got to work on this.
I know, we got to work on it a little bit.
All right. So today,
that's the song I used to sing my kids every night, but I changed the words.
Yeah, I know. You're singing to your kids the song, the best that you could hope for is to...
lie and go to sleep.
Yes, but when they're older and they hear the song, they're going to be like,
I
remember
when the crushed out his cigarette, I hum it. I go,
listen, this is what's going to happen. When you're dead and they're 60, then they hear the song, they're going to say, I remember my mom used to sing this to me. And when they listen to the lyrics, then they're going to say, my mom used to sing me a song about dying in my sleep.
JD said, that's what we're singing. That's what we're going to dance to at our wedding, is the actual gambler.
Oh, that's good.
I'm in.
All right, CRWV, that's getting pushed to the follow page.
And that little guy, he's in...
That little guy, he's only 6'7".
He's massive. But he is recruiting so many people to Tasty. You guys are watching today. Hello.
Hello, college kids.
So,
hello, Kentucky.
Everybody I know is a finance major. Everybody I know wants to trade, and he wants me to call Tasty and find out what bonus he can get to the kids that are going to transfer their accounts over.
Nice.
I know, so I'm calling today. I'm going to call Sasha.
Excellent. Good for him.
I know, I'm excited for him.
Very good. Okay, I'm going to go into Twitter because we really have got tweets to get to. Hold on.
Okay.
Here we go. It's right over here.
And we have earnings today.
And Ajit, I'll get to you. I'm just going to go top down. Oh, look at Mikey and the crew. By the way, that was a real Polish warrior. And although Jenny will always be my #1 Polish princess, I had to take a pic with the one at the fest. Also, food was awesome. Went with my dad's
brother
sister
was there last night, Mikey.
Where was it?
It was up north. So it was up north. He called and he's like, I'm going to a Polish festival up north.
Ah.
Yes, my brother and his wife, and they brought her mom.
Look at that crew, and look at those.
Looks awesome.
Look at those potato pancakes. They look really good.
Yeah, that does look good. I love it.
That looks good, Mikey. Love it. Jack Tucker, 0GT SPX Iron Condors collected 11,600 today. Jack, you're brave. I didn't do anything
hold on.
today.
He's SPX, where is 64?
6380 is his short put. And we're trading 6377. Oh no, SPX is 6366.
So he's okay.
No, it's 6380
yeah,
is through it by 15.
I was looking at the top 175. That's what we're getting.
I mean, Jack's brave. He's brave. Today I was a little leery of the SPX 0 day.
Yeah.
And it's a Tuesday. Monday's my double down day. Oh, here are the first pictures. Okay, happy post, long weekend. Went to Taste of Polinia? I mean, I should know this.
Yeah, you should know this.
I don't know.
You should know this.
In the city on Saturday, then did a bike the drive on Sunday, along with grandbaby 7th birthday. Mikey, look at all these pictures.
I love this.
So
Thank you,
cute.
That is really cool.
It's really nice. Mikey had a great weekend.
I should have went up there. If I would have run into Mikey on accident.
I know.
What are you doing here?
And better chances at the Polish Fest than bike the drive.
Oh, yeah. You won't see me on bike the drive.
All right. Bob on Fire, thank you for sending us the earnings today. Zscaler, Dollar Tree, and Macy's.
Let's short Zscaler.
Zscaler. Okay, the Zscaler, whatever it is, our company uses it because we constantly get the Zscaler popping up on our platform. So
it's down 3%. I mean, everything's down.
No,
today.
I know you say short it because
I'm kidding.
Every time we're like Zscaler.
Yes.
But that means we're using it.
Somebody's using it.
We're using it. I mean, Lester's putting it on our computers.
Let's take a look at where it's been.
What's the expected move? $26 expected move? That's big.
It is big.
That's big. Zscaler. Let's take a look.
61 Ivy rank. How many million shares? 1.32 million shares.
How about a put spread?
So look, that's new. Is that new? Is that brand new? Can you go back any farther? Oh, no, it's not.
No. Zscaler's been around. But look at that. You go back, you're not too far away, and it's trading 170, 150.
Zscaler like Zoom?
And Zscaler is up to 270. Matthew probably knows what Zscaler is. He's computer savvy.
So let me ask you this, and tell me if this is the worst advice I've ever given to an 18-year-old in my life. This was not my 18-year-old. I got a text from another 18-year-old that goes to school with him. He's one of the twins.
Oh.
And he's doing the stock market game.
Oh, yeah.
And I said, you mind coming in first or last? He's like, either way. He's like, I want to win. Because if I win, they get prizes. And if you come in the middle,
it doesn't matter. 300
kids. So every night, I'm emailing him earnings. I say, take your entire thing and put it in there.
Take your entire account and put it into Zscaler.
I'm going to have him pepper the infield with the three things that are earnings. And I'm going to do it every day. And then I said, remove it and then put it the next night into whatever else. I go, this is a horrible way to trade, but until they trade the rules and let you short stocks, let's do this.
Well, Lily's in the middle of the stock market game as well at school. And I was telling her your system, Liz's system of the earnings trades.
No kid has lost that's done this.
The only problem we have right now is earnings season is really dwindling down. It's almost over.
$26 move.
Zscaler.
If they put $50,000 into Zscaler.
And hope it doesn't go down. He'll be cursing you tomorrow. Zscaler.
But then the next day, go to Bob's list again.
I want to look at.
Go to Bob's list, and I'm telling
Okay.
you, this is not. And I say this is not the right way to trade. But I go ask your teacher if they'll let you use derivatives. If they let you use derivatives, we'll trade like
They
a normal
won't. All
person.
they can do is buy stock.
I'm well aware,
Yeah,
but that's what I'm saying. The rules are then you should be able to do other stuff.
So as far as this list,
there's a lot on there.
But I feel like earnings is winding down, which makes me think we're getting close to the time of earnings setup calendars.
Yeah.
But not on a day like today. Not on a day where SPOOs are down 95.
I didn't know AVGO hasn't had earnings yet.
I was surprised to see Broadcom on there. Lulu usually wraps it up.
He usually bets clean up, right?
Yeah. So, and DocuSign. I might have a DocuSign position. Do we?
Probably.
Let's see.
Yeah, we do.
Yeah, we do.
So we've got a.
Why do we have 2 call spreads?
No idea.
Why do we have 2 call spreads?
You know what? I bet it was a roll on top of a roll on top of a roll.
2 call spreads?
Yeah, I'm sure it was a roll. Okay, so hold on.
I could see 1. I think
we rolled from 1 to 2.
But I think maybe we went to like close it and went in backwards, and that's why we have 2 instead of none.
No, I don't think so.
Wait. Well, DocuSign, we have 2 call spreads, 65.70, and they're completely in the money. I don't know. This is where we need notes. This is where we need notes in the comments. I'm pretty sure we had some puts, and then maybe it went through the puts, and we replaced it with a call spread.
So we had a Jade Lizard at the 62 level.
And then it went through the puts, so we changed it to a call spread, is my guess. But I just don't know why the 2.
No, we had a zebra. We had
zebra?
This was the zebra.
Okay.
Yes. Okay. Yeah.
We had a zebra with a short call.
Yes.
And then when it was up, we ratcheted up the zebra, and
Yes,
now we
there you go.
that left us with 2 call spreads. But really, it was like a zebra with short call. And this is why I don't like to sell calls against them, because it's blown through it.
It's just you just don't like to sell it because we didn't have the notes telling us what it was.
I don't like to sell calls and
then this should be profitable.
Let me hear. I'm going to go to order chains and just check our DocuSign, because it started as a loss. We're still down in the last
But
30
not much,
days.
considering how big of a loss it was.
Let's see. It's because it blew. Here's the problem. This is if you have short puts and it blows through your short puts, and then your gains are limited to the upside, you can make some of your money back. You can make some of your money back, but you don't make all of it back.
Yeah.
The covered call is like a synthetic short put.
It
so
is.
if you continue selling puts and it falls so far through and it rallies back, you make some of your money back, but not all of your money back. And that's
that's the same thing with covered call, naked put. You're not gonna, you don't have unlimited profit potential.
That's why when a put gets so far deep in the money, you'll often see us replace it with a zebra, and we just leave the zebra. So if it bounces back, because we've seen that happen quite a bit.
The zebra's just
Then
a
you
stock
just-
replacement, but this was something we had the in the money put. We wanted to get the exact same position. That was the problem. We had the in the money put. We wanted to use less capital, so we put a zebra with a covered call, which is the identical position. That's how we got ourselves into this.
And so we have
almost
this,
100.
I know. And I don't mind it. Like I'm kind of happy to see the down move.
Oh yeah, it gets a little bit of volatility back.
Bring some vol back. So this is a $5 rate call spread trading for $3.43. There's $1.50 left to make here, twice. But we're going to be riding through earnings.
Which is in 2 days. Well, we would adjust this trade. This would be our earnings trade.
Yeah, I don't know. I'm not sure. $1.50 to make twice. Maybe we take this off and just sell 165 put.
Yeah, that's great through earnings.
But what did we lose on this today? $126.
I mean, we can deal with this
Yeah,
tomorrow.
we'll deal with this another day. I think that's it. Anything? I want to make sure I get to everyone on Twitter. Jackie, SPX 6350 put credit spread victorious.
Ooh,
okay,
good for you.
That's good. Good for you, Jackie. And we're always happy to hear from you. And then Ajit, names with highest IVR. So when I glance at this list,
look at Adobe, Lulu, like you can see, DocuSign,
Yeah.
those have earnings, and I appreciate it, Ajit.
And
Look at his detailed notes. I love it, Ajit.
yes. And I always never know why Campbell's Soup is on this high IVR.
You love
Front vol
Campbell's Soup.
pump more than event month.
Oh, interesting.
And then he gives a best strategy.
Oh.
Look at that.
I like it.
Lots of action back there.
Are we going to cross the 100? Are we going to cross the 100?
Who's down 99, 99.25. Can I get 99.50? Remember, we used to have an auctioneer who watched the show. His name was Bandy.
Yeah.
Bandy, he was an aucteer, and he was great. He called in and gave us a little auction action.
And then we met him on the road a couple times. Him and his beautiful wife. Yeah. It was fun.
Yeah, down 100. Spoos down 100. We did it.
We did it.
I mean, we're acting like we're so excited, but we want vol back in this market, and the only way we're going to get it is with some down days. So I wouldn't mind a few more down days like this I'd love to see VIX back in the 20s.
It doesn't stay in the 20s for very long.
No, it doesn't.
No, we know that.
All right.
Give me some dates in history that it was in the 20s. Okay.
Okay, and Herb asked about this on Twitter. UVXY SEP19 Zebra. He's in better shape than us. He's got the 1314, paid $296.
So
he was losing, but Herb, you're probably making some money back today.
We had the 1314 and we sold out our shorts. We had the Zebra.
And then we did a ratchet and then moved it up to the 16. Then we bought back our shorts. Now we're just left with 16.
Yeah.
So 1314, and I'm going to take a look at this. The SEP19 UVXY. SEP19 buy 2 sell 1. And he paid $296 for it. It's $1.77. If we get another day, if we get some follow through this week and we build some momentum, UVXY will pop. You can see when we get multiple down days in a row.
So,
that's when you kind of see these pops.
It started today's the biggest pop I've seen in UVXY, obviously, because it's up $1, and because UVXY does have a drag. So this is not a long-term position, just a little FYI.
Yeah.
It does have that drag, meaning it's based off the VIX future, so it's going to keep moving, shifting little bits in there. If that's what the drag means.
What happened August 1st when we got that pop? August 1st. What did SPY do August 1st? Here we go.
Yeah, tanked. There you go. There's your pop.
How much did it go? It went from, let's see, the close the day before was 632, and then the next day the close was 621. So we had about 11 points SPY move, so 110 point.
SPX.
Yeah. And then that's not far from where we are today.
And you saw that pop.
Okay, one last jump into Twitter. I'm going to go top down to make sure we got to everyone.
I love the Polish
And
mess. I love it, Mikey.
You know what, Mikey, this is making me want to go out for Polish food. I found a new Polish restaurant.
Where? By you?
Yeah. I'll take you there.
I haven't been to a Polish restaurant. I only know where the German restaurants are.
Well, not by me. It's up in Michigan City, but it's called the Polish Peasant. It's really good. Really good. Anyway, we got to everyone on Twitter, and
we're pulling for Jack Tucker.
I know, Jack. You need a little bit of a rally. Now, Jack's aggressive in his management. He's probably rolled down some calls and made some adjustments. So he knows what he's doing.
Take a look at our IBIT.
I did it already.
Do we want to adjust that?
No, because we put these on weekly, and this was last. We put these on weekly. I've got my GTC in for 50%.
And so we've been noticing this is the Jade Lizard-esque position.
It's not through
so if
it.
it was going up, if it was up higher than this, or getting closer to that 66 half, or of the call spread, we'd take it off, even if it wasn't 50%.
And I looked at that today. Yeah. I looked at it and saw, okay, we were trading 63. Our call spread is 66.5. So I would leave that. And I've got the 50% GTC in for it. And then hopefully that comes off for 50%, we'll put a new one on next week.
Yeah.
But I think that's it. I don't know that there's anything else we need to do today. Unless you want to take our...
I did want to take a look at bonds, and I know we only have about a minute left, but I want to see
I want to get back into bonds.
I want to take a look at the bonds, and I think the bonds have had a big move too. They're on the 13 handle, yeah.
13, 14. Let's sell some. We've got 3 minutes. Let's sell some put spreads in ZB.
I like it.
24-day or 52-day?
24-day, please.
Yeah, 24-day. Let's see. The 112, 111 gives us $312. 112, 111.
That's perfect. It's $1,000 wide, just because you can see that on the max loss right here. It's pretty easy to take a look at. The 111, 112 is $1,000. That's why we're getting $312.
And I know I'm in the expected move, but I'm okay with the 112 short put spread. 112, 111.
Well, it's funny because...
Oh, wait, I'm in the 52-day.
What the heck?
Oh, that sounded too good to be true, didn't it?
It did.
24-day.
That sounded way too good to be true.
112, 111 is giving us $265.
It's not bad.
It's not terrible.
So, and I'm okay getting, in my mind, that 113 level is kind of a mental. If it's in the 13 level, I don't mind selling puts or put spreads.
Right, with ZB down. So you could see here the down move we're getting in bonds today.
Yeah.
Looks like a good place to get back in.
Yeah.
Okay, so I'm going to ship that, taking in $265, risking $734. Ship
it.
So I did use a lot of buying. We started the show at $10,000 in buying power, and we're down to $7,000.
Well,
I used $3,000 in buying power today.
I mean, it is what it is. We have a show about trading, so what are you going to do? So push that through. Let's make sure we got everything pushed through.
I'm working that. I'm not filled yet on the.
So the only thing that I have pushed through is the SPY. Did you push through the?
And each tick, if I take it down, I go from 265 to 250.
Yeah, I wouldn't do that. Let that work.
Well, yeah. Okay, 265.63.
I mean, bonds are pretty liquid.
Oh, well, I mean, if we get a tick down, that'll fill.
Yeah. Yeah. All right, Jenny, I think we're done for the day.
All right, Liz. Everybody, thank you for tuning in. We will be back in the SPX pit tomorrow, Wednesday.
Yes,
short
we will.
week.
Yes, we will. My favorite 2 days of the week. Everybody have good luck with their earnings, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow,
everybody.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Glenn Freiberger in the house with us today for our Tasty FX special every Wednesday. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come in with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Glenn. Glenn, good morning, sir. How are you?
Good morning, Nick. I'm doing well. I just had a turkey sandwich.
Ooh. Nice. You put some jardinera on there or no?
No.
You don't do spicy,
as you can probably tell from my name.
Yes.
It's not how you said my name 3 minutes ago.
Yeah.
There's no jardinera going on anywhere.
Yeah, you don't do it. What's your spice level? Can you handle like sriracha?
That was such an insulting question.
I mean, like,
can you handle like sriracha?
Yeah,
it's just a matter of like what I actually want spice on. Like, give me a spicy chicken sandwich, I'm in. But like,
you go mild though.
I go medium. Sometimes.
No, you don't. You are a liar.
Dave's Hot Chicken, I'm getting a medium.
Oh,
when I Uber Eats Dave's Hot Chicken at 2 a.m. last Saturday night,
damn,
I
got a medium.
What were you doing 2 a.m.?
I was eating chicken. Perfect. So I'll go up to a medium. There are just other things that I don't think it enhances what I'm eating. Like,
so what's your 2 a.m. like? Are you at a bar? Are you clubbing? What are you doing?
I was out in Logan Square.
Ooh.
Doing a little dancing.
Nice. What kind of dance? You a salsa guy?
The owl?
No, it was nothing like actually. It was a bar. Whistler. You been there?
Oh yeah.
But they're spinning some records.
Yeah.
Little disco action.
Nice. It's cool.
Boogie Wonderland. Ha ha. And you have to eat after that, you know?
Come on, John.
Okay, this soundboard's amazing.
Seriously.
This all day.
So good.
How are you guys? Happy NVIDIA Day.
Yes, big day today. What do you think?
I mean, man, risk to the downside for sure.
Ooh, you're like Tom and me. I'm playing it a little bit inside down.
I just mean, like, if there's going to be a reaction, I'm not seeing a screamer.
You don't think so?
Maybe the buyers are still out there. Everybody wants in.
Yeah.
But
ever had a screamer? Jesus King. I'm with you. I'm with you on the NVIDIA. I'm playing it a little bit. Yeah.
Speaking of Omaha, you guys like football? That's about to start.
Yeah. We're ready.
So back.
We got a fantasy draft.
Are you a Chicago boy? Are you from Chicago? Were you born in Chicago?
No, but I root for the Bears.
Yeah. I know you went to Northwestern. Pinky up.
North Carolina.
Northwestern, so smart. Look at me. North Carolina? You're from North Carolina?
Yeah.
Really?
North Kakalaka, as they call it.
Really?
Down south.
Nice. Wow.
Cool.
That's cool.
So, Duke fan growing up. Not necessarily for football. They kind of suck.
Yeah.
So does Northwestern. One of my friends went to Georgia. I like going. There's a Georgia bar here in Chicago.
Which bar?
Highline, right by Merch Mart.
Oh.
It's a riot.
Really?
Yeah. Last year we were there. Matthew Stafford's wife was there one time for the Texas game.
Really?
Which have like 80 grown men barking like dogs. It's where else do you get that? Also, there's an Oregon bar in Lincoln Park. I learned last year.
Okay, you're an Oregon guy?
No, not at all.
There's a bar for every college. It's a major
Northwestern.
city. There are certainly Northwestern bars. You can go to like Evanston.
I'm telling you, even there, it's a tough scene.
Yeah.
Those bars are fun though. Like I'm going to Boston in a month, something like that. I don't know about everything. I'm going there at some point in time. But I'm gonna find a Bears bar there.
There's got to be.
I'm sure.
College is just the funniest. Like stumble into Home Slice, which is a pretty good pizza place.
Yeah.
All of a sudden, you walk in there, there are 80 some odd people quacking like ducks.
Yeah.
That's not what you'd expect, or should you expect it? So, if you have any recommendations for random college bars in Chicago, I'll go.
Yeah. Kansas
and I'll cheer.
Kincaid's. You ever go to Kincaid's?
I do, yeah.
Can I tell you a secret?
Kansas?
Yeah, it's a Kansas bar. On Wednesdays, they do dollar
beers.
Dollar night, which is what we had in Kansas at the Hawk, which I worked at. I was a bartender there during college. Yeah.
So you like let all your boys in?
Yeah. Well, it was dollar you call it. So it was dollar like anything.
Anything.
It was dollar night. So it was everything. So you could get you go there with $20 and you leave absolutely lit.
Yeah, that's incredible.
Yeah, so but that's why Kincaid's does the dollar beer night. Is
really?
Because of dollar night in Kansas, yeah.
Ever been where?
I mean, there's nothing like taking like, a copious amount of Barton's vodka, like just a nice, like $18 handle kind of thing. That's what it was.
Lukewarm Gatorade.
Well, the bar had ice, but everything
bar, yes.
at the bar, yeah. But it was all like just the lowest of low shelf.
No, that's gross.
Yes.
But still, a good deal.
Yeah.
Yeah, they really rang the Northwestern crowd for all they're worth. No dollar nights up there.
Yeah. Well, that's because you're all preppy little smarty pants.
Pinky up.
Yeah, pinky up. Pinky up. That's good. That's good, Northwestern.
What has you feeling so feisty today?
Just living life, man. Just hump day, it's a great day. We got fantasy football draft today.
Nice.
Yeah.
It's gonna be great.
Yeah.
Who's top of the board?
I have the 10th pick. You have the 12th pick.
I have the 12th pick, which I actually love.
Because then it's a twofer.
Yeah.
Twofer.
And I'm gonna get the wide receivers that I want. So don't care about the
wide
running backs.
receivers first.
Yeah, 2 wide receivers back to back.
And who would they be?
One of them rhymes with Brad Machonki. The other one is Sleeko Rollins.
Oh, okay. He's not going to be there.
Oh, he's going to be there. I think he's going to be there. Because everyone's going to just pick all the running backs, like you said. There's probably going to be some rogue that picks a quarterback, top 12.
Really?
Yeah.
In this league?
Maybe.
We'll see.
Rookie league. Bush league.
But yes, it's going to be great fun. We are 1 week out from
football.
From week 1. It feels great.
Beautiful.
All right. I'm glad to be here with you guys.
We're glad to have you. It's always fun. We'll give a quick whole market update and get into it. Got E-minis up 11 right now. It's kind of the high of the session here. We've had a 23-point intraday range, including the overnight session. Been a bunch of chop this week here. Just chop fest, up, down, sideways, just choppy chop. NASDAQ up 18. You got the Dow up 104. You got the Russell up 10. So the Russell, the strongest of the group, but everything well inside the expected move here. Oil, catch a little bit of a bid, 63.94. You have volatility futures actually upticking slightly. But we've kind of seen this the last 3 days. You've had volatility stay bid in the morning, nothing really happens, and then by the end of the day, it gets a little smashed. So we'll see if that continues. You do have NVIDIA earnings after the close today, as Glenn mentioned. NVIDIA day, big day for everybody. So that might keep volatility bid a little bit into the close here. Bonds down 15 ticks, now below the 114 handle. We've reversed the entire move that we had on Friday with JPZ, talking about his rate cuts on the horizon, or at least suggesting that maybe they're on the horizon, but we'll see if that pans out here. You got gold up $5, silver down 7 cents. Bitcoin has been pretty weak for the last 2 weeks or so. It's sitting at 112 here, up $700 on the futures, spot up $500. And then Ethereum up $16, very much an inside move there as well. So chop fest around the board. Nothing huge moving.
Nothing ado.
Yes.
Yeah, NVIDIA is going to be interesting. 10-point expected move, $180 stock. Pretty low implied volatility for earnings, but still high relative to September and October. So I'm feeling inside as well. I'll probably do something like an iron condor or something like that in September.
Ooh, okay.
But I am long. I did a pairs trade diagonal spread. So I got short the Qs with a 10-point wide diagonal spread, and I got long IWM with a 10-point wide diagonal spread.
Okay.
The Qs are kind of flat, IWM rallying today. So we'll see. Maybe if NVIDIA sells off and that rotates into the Russell, that'll be a nice little trade.
Bingo.
Yeah. Bingo bango.
Thesis confirmed.
Speaking of thesis confirmed, I just closed my CAD yen trade this morning for a whopping $9.
There you go.
I'm now like 10 for 10 in Tasty FX.
Is that good? That sounds pretty good.
It's pretty fun.
We've had some good success.
I have a great time. I click whatever the swap bid or ask is that's positive.
Nice.
And then I wait.
Favoring the carry trade, positive carry.
Positive carry is my thing.
So you're waiting until your position's green, but all the while, every day, you're collecting a little premium, if you will.
It's almost like a directional short premium trade, where you're collecting some value, being on the right side of the carry, and then eventually, if you're sized correctly, which is small, eventually there may be a move in your favor and you can close it.
And let's be honest, the carry that you're getting is microscopic.
But so are my position sizes. They're microscopic. I'm like 0.02, 0.04 pips. Yeah. What would you say in terms of size? Like 2 pips is 0.02?
Is correct. Yeah.
Cool.
Yeah.
Sweet.
Dollar, little softer today. If you want to go into the TastyFX platform, mover of the day for me is New Zealand dollar, US dollar. Seeing overnight, saw US dollar firm up a little bit, start to gain back what it had lost yesterday. And then US session comes in. Now we're getting a lot more dollar softness, similar to kind of how equities are rallying. I talked to you, Nick, yesterday about some correlations, and you are seeing, the kind of turnaround we're seeing in equities, seeing that play out completely in this New Zealand dollar, US dollar. If you flip over to the hourly chart, you'll really see it, because we were pushing up against that.
What hour? Like 1 hour?
Yeah. We were pushing up against that 58 cent level, or marching towards it right around 6, 7 a.m. here, and now 0.5% move back in favor of the New Zealand dollar. So the New Zealand dollar's been weakening against all currencies, but now nice to see getting a little bid on this U.S. dollar softness. Nice trading range here for this pair, stuck between 59 cents and 58 cents. But yeah, that's the big mover of the day. As we anticipate, how is NVIDIA correlated to U.S. dollar? A funny question, but if
is there a correlation?
I mean, as much as
you would think it would be a negative correlation. Right. With dollar going lower and being weaker, risk assets become more expensive.
Right.
Typically, and you could put that if you charted the dollar versus the equity markets, probably pretty pretty decent negative correlation.
Right. But in this scenario, you know, if, say, NVIDIA surprises to the downside, we get a skid and markets react as, you know, this one NVIDIA earning is a bellwether for all of U.S. GDP or what have you.
Which don't we get tomorrow?
We get a second estimate, yeah. So, you know, they do this 3 times. So the first estimate of Q2 is usually the most in the dark. These tend to be in line, but could surprise as well. You never know with how they're collecting data these days.
Yeah, it's all fake news.
GDP man might get fired. I don't know. But yeah, I mean, in this particular scenario, if you see kind of a fall apart in equities on the heels of this data release, then it also wouldn't surprise me that kind of trickles down into U.S. risk as a whole, and we see the dollar actually soften. You can see it both ways, you know.
Okay.
But if growth in the U.S. is falling, then that could price in more rate cuts, U.S. dollar softness, and that would be in contrary to the other dynamic of, right, like you said, where instead of going into risk on assets, U.S. dollar gets more of a risk off bid. But I think in this case, that wouldn't necessarily be. That would surprise me. So we'll see.
Very nice.
But in theory, one company's earnings shouldn't sway the currency of the United States.
You would think not, but
crazier's been done.
Yeah. Oh yeah. Yeah. Oh yeah. Things have been quite crazy.
So yeah, not seeing in the currency space. Still, volatility is pretty low, but if you're a short-term trader, a lot of things in the middle of the range. So maybe not as much conviction, but when you take a step back and look at, you know, where that dollar Swiss franc market is, even where the euro dollar market is, we're still at, you know, price levels that we were at a month, 2 months ago. So if you have a long-term directional play, you're still getting in at around the same price. Not sure if that.
It's had some two-sided action, though. Yeah. I've been trading the euro futures as well, the options there. I mentioned this to my dad throughout the last 2 days. Is volatility in the euro has been relatively high compared to what we've seen in equities.
Right.
It's not high in raw terms. I mean, euro volatility is like 7-8%. It's not like it's a huge number, but I think it does warrant having a position here. I've been playing it kind of the 115, 119 range, 115, 118 range. That's kind of been the trade for me. With some short premium, I'm you know, at those ends. So kind of playing for more of that chop.
Beautiful.
Not a hard line stance.
I've got some slides that actually play right into that. If you want to jump over to those,
let's do it.
Today, wanted to look at measuring volatility in Forex because, you know, this audience perhaps a little more options focused. You guys in particular, a lot of options expertise. So I wanted to try to equate the two and give you guys some good actionable takeaways for how to look at volatility in Forex. First things first, wanted to look, the focus here is on realized volatility. So while in the options space you have this implied volatility, which is a wonderful tool that you guys use every day to measure expected volatility, SpotFX typically relies on realized volatility metrics, maybe because that's all you have. I mean, you have, like you just called out, the euro futures. A lot of the major currencies have a futures product that has options on futures. So that's a good gauge as well. But since FX markets trade so frequently, this realized data is actually relatively smooth compared to individual equities. There's no stop starting as frequently. There's just that weekend gap risk. And so you are able to get a pretty good sense of the realized volatility. And I'll go over two of these measures, these metrics that FX traders use to give you a quick snapshot, like you guys would look at IV rank or implied volatility and know pretty quickly kind of what the dynamic is and what environment we're in right now. So first wanted to look at average true range. So this measures right here, looking at this chart, we're looking at daily, but it measures the price movement over whatever time horizon. Here I'm focusing on what you can map using tastyfx charts to keep it really visual. And so that's responsive to, if you pull up an hourly chart, it'll use the periods, whatever period you're looking at, it'll use that data. And so it tells you kind of what the average range is using highs and lows over whatever period.
Okay.
And this gives you a sense in pips of kind of what to expect, kind of similar to how when I run standard deviations, kind of what a daily range would be. And this can help for, profit target levels, stop losses, just to contextualize instead of looking at just candles. And then, of course, you have, when it's mapped like this, where it's been historically, so you can compare as you would kind of your rankings, where we're sitting right now compared to prior months, prior years, whatever you're looking at. And so I think this is a cool way where, for you guys that are looking at across asset classes, you could look in here and see kind of what the volatility environment is, not only for pricing, where you want to get in and what your get out levels is, but even dictating what kind of strategies you want to put in. If you're seeing this is a low volatility environment and you do want to get more neutral, then you could flip back over to your futures options, and maybe that's a more directionally neutral way to play this. Or if it's very high implied volatility, like you're saying, then you'd step into the option space to sell some premium. But in the spot FX world, it's more around what you can expect for profit targets and stop losses. Moving over to Bollinger Bands, a favorite of mine because they look the coolest, gives you a very easy interpretation visually of what's expected. And these use standard deviation. So the default, you can change these in the tastyfx platform to whatever. You can change to 1 standard deviation, 2. The default is 2, and that'll give you, 95% of the actual realized price ranges.
Okay.
And so this gives you a good idea similarly around the actual price levels of what you can expect if volatility is contracting, if it's expanding, and it's based around that moving average right there in the middle. So people use this for mean reversion if it touches the band to get back to the moving average, or to test a breakaway if we're getting some contraction. And we do see a large move. Some traders use that as a breakout signal, so it can work both directions. But yeah, it gives you kind of a similar gauge of IV crush versus IV spiking.
Yeah, you can see it in just the bubble, so to speak.
Exactly.
Where the wider the bubble is, the more price movement, which is intuitive if you look at the chart itself, but this gives you a little bit of extra confirmation.
And instead of looking at, the various options chains for points in time, you can just change the look back period to daily, hourly, even monthly, just to validate whatever your thesis is.
I was going to ask you what the difference between Bollinger percentage B, Bollinger Bands, Bollinger Bandwidth were, because all three of them are in the tastyfx platform. But there's a little information tab.
Wow.
That explains exactly what it is. This is really, truly incredible stuff. I love it. You love to see it.
Yeah, let's wrap these slides up so we can get back into the platform. Just looking at the key takeaways here.
Must be a big team of developers working on this product. I hope they can do my little fix at one point.
What's your fix?
Just putting the description column. So I'm hoping after they get done with all these Bollinger Band percentage things in, they can just write what the products are.
I agree. That
might be
like
valuable.
That seems like a great plan of
one
action.
Day. Hopefully one day.
So yeah, here you have it. Just comparing some of these visual indicators to some of those implied volatility measures. These can help you visualize what kind of environment you're in, compare time frames, and as well inform you on what reasonable profit targets and get out points are.
Sweet.
What's your preferred Bollinger Band look back period with moving average?
Yeah.
Do you do default or do you change it? Do you have your own personal?
Yeah, so the
like?
default is 20.
Yeah.
If we want to hop back into the platform,
Yep.
Then we can look right at it.
I've added it actually already.
Damn. Oh,
How
yeah.
good I am at
You added both of
technology.
them.
I'm not total on status. I can work the techs and the interwebs.
For now.
For now.
Yeah. That's the caveat.
That is
for now.
For now. I am slowly turning into my father.
Yeah.
No, I think the 20 is a good number to use. Because it depends on what your time horizon is. So for the daily, I think 20 is an accurate representation.
Yeah, if
of
you're trading
past month,
yeah,
past 3 weeks or so. But yeah, if you get into those hourly candles, I mean, some people are trading this so fast that if you switch from daily to 1 hour, these charts will respond to that, right?
Okay.
And depending on what your actual thesis is for trading some of this, then you might think, you might want to use the whole past week of price action even on this hourly chart here to give you some smoother lines. But it's all personal preference. But yeah, the defaults are set there for a reason to give you the main thing, I think, altering the inputs would be if you're altering that standard deviation, because that categorically changes the bands, right? So here under the default, using 2 standard deviations,
It's going to be wider.
It's going to be wider, and it's going to encapsulate
pretty much everything.
Right. And so if you change that to 1, that's perfectly valid, but it's important to remember that changes, the data points that will fall into that to around 70%, right?
Yeah.
I just bought the New Zealand dollar CAD.
All right.
5 pips size.
There you go. 5 micro lots.
5
New Zealand
micro
dollar
lots.
CAD.
New Zealand dollar CAD on the lower end of the bandwidth.
Oh,
nice.
Oh, Mr. Technical Analysis now. Look at this.
Yeah. If
Look at this.
you see on the daily chart.
The daily.
The daily. On the lower end of the band.
There you go.
Okay.
And average true range near bottoms. If you assume that that's going to increase, maybe you get some volatility to the upside.
There you go.
In which case, that's going to be good.
All right. And so you're looking for not too much, maybe even that 0.82 level is
just pass through the mid range.
There you go.
What else am I asking for here? Nothing crazy.
I mean, you could ask for positive carry, but these are pretty.
It's
You're
basically
buying that,
neutral.
and it's
Yeah.
basically neutral. Absolutely right.
So if I put this on, I would be synthetically, or no, if I bought this, that would be different than the pound New Zealand dollar trade that I have on.
You'd be double New Zealand.
I'd be double New Zealand. What's the New Zealand dollar doing generally? Down?
It's down right now. Yeah.
All right, so I could do that.
Yeah, why
Do
not?
double.
Double up.
Yeah, we'll do it small.
But you're kind of neutralizing your double with the different pair.
Yeah.
Yeah.
We'll say.
And we've seen some, divergence between European currencies and North American currencies. So
Yeah.
if U.S. has any tailwinds, if the U.S. has any strength, perhaps Canadian dollar has some of those tailwinds as it pertains against the British pound. So some unique exposure there.
Which you have one off the top of your dome on, and then we'll let you go after that. I know you have to get to lunch. Very hungry. He's a hungry growing boy. We have to get him.
Yeah,
his food.
you do not want me hungry.
Yeah, hangry. A pair that is currently kind of higher outside of its normal range. Something that I could be short.
Something that you could fade a price extreme.
Yeah, on the upside, because we're kind of playing. I got, that was one where I'm playing, on kind of a downside price extreme, so to speak, or on near the lows. There's something that you can,
Yeah, I think you've found it with that British pound New Zealand dollar. That one, you had a little reprieve, and now we're back to where we were. And so if you wanted to layer into that one, that's up there for price extremes.
Okay.
But a lot of these U.S. dollar pairs are healthy within their ranges right now. Nothing too crazy going on, but that New Zealand dollar has had some historic weakness.
Okay, this could be a cool one because then I'll have my 2 line items here.
Yeah, there you go.
So now I can look at each one of my entries.
Mm-hmm.
This is not something that I've done before. I've been straight in, full bore each time. So now I have this a little bit bigger than I normally go.
And because you made them unique position sizes, you can close them in either order.
Oh,
so
cool.
If you had, just doubled into it and had another 0.05 lots on it, then you would be required first in, first out.
Oh.
But because
It's a different lot.
Correct.
Oh, that's a good thing to know.
Yeah, so increased flexibility here.
Very nice.
Yeah.
Beautiful. Well, thank you, Mr. Glenn, for
Thank you,
joining
guys.
us. We appreciate it.
I'll save
fun.
you a tuna sandwich.
Please. I always eat a tuna sandwich, honestly.
Yeah.
I think there will be some
Yeah.
left for you.
Thank
so-
you. Yeah. There always is.
Yeah.
There always is.
No more turkeys because everyone likes turkey.
Yeah.
Nick.
Yeah.
Everyone.
Enjoy it with your
Everyone.
extra mayo.
All right. See you guys.
Thank
Happy
you, sir.
Video Day.
We'll catch you later. E-mini S&P 500 futures, we're up 3 right now. You got the NASDAQ down 20. A little bit of a sell-off here, middle of the day. Spooky.
Spooky, spooky.
Almost spooky season.
Literally.
Spooky season is coming up.
How about this natural gas rally?
Yes.
I think we might have been onto something with the rotation out of the U and into the V.
Yeah.
I think the shorts are now becoming long. You're seeing almost a 4% move in the V, and the U doesn't trade anymore.
Yeah, I think I gotta take some money and run here. I had 2 of the micro natty gas contracts. I closed one 30 ticks lower.
Wow.
Which was still a profitable position, but I think I did these. Yeah, so this will be net 50, 60, about 50 ticks each, average.
Yeah.
So I'm going to take that money and run.
I like it. I like it a lot.
Beautiful. Nice.
Yeah, so I'm long. The only one I got long was in terms of FX, long the New Zealand dollar CAD. 5 micro lots.
There you go.
So, we'll see. We'll see what happens there.
We just
I'm still
set them and forget them. That's what we do with these things.
That's literally correct.
Just,
and check back in a week. I
See where
forget,
it's
I
at,
forget that I have it on, and then I'm just like, oh, maybe I can check on this thing.
Yeah. I mentioned that with my dad. It's if you stay small enough here, you can just sit with it.
Yeah.
And if you're taking, it's all commission free. There's a spread, obviously, but if you're small enough, you don't get squeezed out of these positions, and you can hold them and take 20, 50, 20, 30, 40, $50 out of them and move on to the next thing. Fun little diversification.
For sure.
Yeah.
So what position do you have on NVIDIA?
I have a downside. So I have the 175 strike in October, the put, and then this is part of a crab trade. I have 2 trades. I have the crab trade, and then yesterday I put on an iron condor in cherry picks. So I have a 2-day iron condor. That's the $5 wide, 92.5, 97.5, and then the 67.5, 62.5. And then I also have this downside crab trade where I'm long the 175 in October, short 2 of the 165s in the weekly. That's this one, and then long the 150 as a way to cap my risk. So it's a 10 by 15 point wide downside crab trade.
I like it.
So my overall delta on this position, we could look at it here, NVIDIA. My overall delta, I'm short about 17 deltas.
Beautiful.
Yeah.
I'm thinking I might do something a little spicy here.
What do you think, Ken?
I kind of want to do a symmetrical butterfly in the 2-day.
Okay.
180, 170, 160.
180. Oh, butterfly.
Just a butterfly for $2.
180, 170. Okay, so just buying a butterfly, just taking a little downside shot. Yep.
And then buying a call calendar spread at 190 long October short the 2-day for $5.
Okay.
So the thesis is you get an inside down move, that butterfly appreciates, you sell out of it. Over time, people say, oh, NVIDIA's down, let's buy it. And over the next month,
So you're playing for the flop then pop.
Yes. I think I'm going to do it. I have to do it.
Okay.
It feels right.
You got to do this in 2 transactions.
Correct.
Your net delta on this position is going to be basically 0.
Yeah. But reducing basis with a lot of 2-day premium for sure.
Are you doing the September for the 190?
October.
No, for the short option for the calendar.
No, the 2-day.
Oh, the 2-day. Okay.
Yeah.
All right.
Because the October is $7 and change. The 2 days $2 and change.
Okay.
So you're still
$5. Yeah, 5.
Yeah.
So you're
reducing basis by 30-40% still.
Okay.
I'm gonna do it.
Okay.
Spicy.
I'm excited.
Yeah.
It'll be fun to see what happens.
Yeah. So yeah, calendar just got filled at 5:15. Long October 190, short the 190 2-day. Basically the expected move. And then the downside butterfly is the 2-day butterfly.
Mm-hmm.
If we rally to 190 tomorrow, that calendar spread will probably be more than a $200 profit.
Okay.
And if not, the flop and pop is in session.
And if we blow through at 200,
then I'll just laugh.
Yeah, then you'll be out on both.
Yeah.
That's really your risk.
The blowout to the upside
or blowout to the downside.
Yeah.
You're playing for an inside move.
Yeah.
This is a complicated way to play an inside move.
Correct.
You got a lot of variables, a lot of moving pieces here.
But there's a lot of profit potential. When I say upside, there's a lot of profit potential. If there's an inside down move, that butterfly is going to be a nice trade.
Mm-hmm.
And that long option is still going to be on for the next month.
Okay.
So
I like it.
You could hit both. If there's a downside move, you could hit both. If there's an upside move, probably not.
Okay.
Just got filled on the butterfly at 208.
There you go.
So total package, 515, 208. Carry the 2. That is 713 in total risk. 723 in total risk. And I'm excited. It's going to be great.
I like it.
Very spicy.
Very spicy. Glenn couldn't handle that spice, no doubt.
Yeah, I'm actually gonna look at this analysis mode here. Let's just push it to tomorrow. Let's crush that IV. 5 percentage points in the back. Yeah, so you're looking at the theoretical range of profitability is between 170 and 200. 200 to scratch. If you push this tomorrow and crush IV in October by 5 percentage points. Okay. Sorry, push it to Friday. Push it to Friday.
You'd have your butterfly expire out of the money too,
Yeah.
so you lose $200 on that.
Yeah, if you push it to Friday with the same thing, crush IV in October by 5 percentage points and push the analysis to Friday, Theo mode, you have a sort of a squiggly M looking thing.
McGarrigle pattern.
McGarrigle pattern. I'll tweet this out when I post this trade.
All right.
But
I'm excited.
the Friday break evens are down at 164 and up to 204.
Okay.
If this is all correct. With a nice wide myriad of ways to be profitable in the middle.
Okay. All right.
Kind of love it. This was inspired by, I forget who was doing it in the YouTube chat, but they were doing call diagonals to the upside and then symmetrical butterflies to hedge to the downside at the expected move, to hedge the risk of the call diagonal, and then vice versa.
Mm-hmm.
Spicy meatball. All right, so we're locked and loaded for NVIDIA after the close today. What time do they announce? Do you know?
I can try and look it up.
It's probably like 3:05, 3:10.
20 minutes after.
Okay. All right.
I don't know when the conference call or if they're going to have some sort of, I'm sure they'll have some sort of grandiose conference call, video, something.
NVIDIA market cap larger than California's GDP. Yeah, sounds about right. It's larger than a lot of GDP.
Yeah, things have
Germany,
gotten big.
didn't we just do that analysis? Germany? Larger than
Something
Germany's
like that,
GDP?
yeah.
So there's some weird thing.
Yeah.
You're a Jayhawk?
I am.
Rock chalk, baby.
Rock chalk. Right.
Iron Fly. I've got a 0-day Iron Fly in profit. To block it and avoid PDT, is it possible to do a debit Iron Fly by arranging the center strikes above or below the one on the credit?
You would have to do it. You'd have to do them butterflies. So if you're, okay, so you're short. Yeah, you would have to do it. You would flip it, but so what you would have to do is you'd have to buy.
Just buy all the opposite legs.
Yeah. Well, no, you'd
yeah.
You'd flip it.
Yeah.
So you'd sell the in the money call spread, buy the in the money put spread at the same strikes.
So that you're long and short.
So you'd have at each strike, you'd have long put, short call, short put, long call.
Yeah.
Your new trade would be long call against your short call against, or short put against your long call.
Yeah.
So you would have
So on this visual, you'd have a red and green bar on each of your strikes that exist.
Yes. So this is your original trade. You would be so if you have the Iron Fly, whatever the strikes are, you'd be buying the put at your short call strike.
Yeah.
Selling the put at your long call strike. Buying the put at your buying the call at your short put strike. Selling the call at your long put strike. It's the exact opposite on this page.
Correct. And yeah, you would be sacrificing some of your profit with slippage and commission costs.
Yeah.
That's about it.
Yeah.
But it's tough. It's tough to be doing these if you're in
such a
PDT.
small, if you're in PDT.
Because then you're doing this all the time and it's eating away at a lot of your winners.
Yeah. It stinks. But maybe PDT will go away someday.
Maybe.
Hopefully.
Please.
Yeah. Be nice.
I'm looking at the break-evens and profit curve for double diagonals for CrowdStrike, and it looks appealing. Do they have...
They have earnings after the close today.
Yeah. Okay. Yeah, there's a little bit more IV in the 2-day, but I think what you need to do, if it looks really appealing, you're not crushing implied volatility enough in October.
Yeah.
Because you really gotta be, you have to account for the fact that one of these is gonna be a loser.
Yeah.
If you're doing double diagonals. So.
Are you doing October?
Yeah, October.
What strikes? 400, do 30 delta, let's say. 400, 460.
Mm-hmm.
And then we'll sell the 380, 20 points. You want to do 20 points, and we should just look at this. And then the 680. Yeah.
Mm-hmm.
I gotta get my short put spread out of there.
Yeah, so you gotta crush IV, and that will bring this profit range way down. But yeah, if you assume that one of these spreads fills up to max intrinsic value, and then your whatever is left in your remaining out of the money long option equates to more than your debit paid here, then yeah, it can be a nice trade. Your worst case scenario is in between these strikes.
Yeah.
Because then both of these lose a lot of value.
Yeah, this
There you go.
I just moved to the end of the week, and then, you're going to have to crush volatility a lot. In something like CrowdStrike, which has a lot of upside call skew, you really got to be correct on the call side. You can't you can't expect to make much on a downside move.
Yeah. But yeah, crushing IV more than you think is the key here. Crush it by 10 percentage point, 15. It's well in the realm of possibility.
Yeah.
So.
Yes.
Just got to be mindful of that. And because you're paying a lot, you're not going to be able to cover the width of one of the sides.
So you have tail risk.
Yeah. So in these situations, I almost like just doing a double calendar a little bit better. It'll be cheaper. And if you're right on the call side, it'll be it can be nicer, but they're tough regardless. The doubles are tough.
Yeah.
Rolled a losing position into crowd. Let's see. A 440, 450 put spread with a credit of 468.
440, 450. Do we have an expiration?
SEP. 440, 450.
Yep. In the money put spread.
Yeah.
Yeah, I mean, it's a 50-50 shot. I know the pop is 36, but you're inside the expected move. So you're a 50-50 shot here going into earnings. You have $400 in risk. You're synthetically going back to the PDT question. Bless you. Good sneeze. Woo. Great sneeze. Got it out.
I think I hit the mirror.
Yeah, there you go. Might have to clean that thing.
Glass.
You're synthetically long the 440, 450 call spread.
Yeah. So to answer the question, is it worth straddling it in September? No, I would not do that.
No.
Because you'll pick up more premium, but you basically end the trade.
Yeah, you're stuck.
Because now you have a pop of 11%. If you just look at the current pop, if you create an iron fly, 10 points wide, this is a dead trade. It's done.
Yeah, you're done.
You could roll out to October and widen the strikes, but
no,
then you lose a lot of the value you can get back if you're right.
Don't throw good money after bad. Just
I think
close it or hold it. Those are the two
Yeah.
options.
Yeah, you're not down that much.
Yeah.
On this trade, if you're
worried
about it,
close it and sell it out of the money put spread.
Mm-hmm.
And the $200 or, if you do it 10 points wide and you do it at $3, if the stock goes up after earnings, you'll make back the, $100 or $200 in loss that you have in your current position. So you have more buffer to the downside.
Yeah. What's a good trade to put on NVIDIA for earnings? We don't know the good trades yet until
I wish I knew.
Yeah. Once the announcement is made, we will know what the good trades are. So with that said, you just got to keep your risk really small and be tolerant of a max loss. And my position, I'm tolerant of max loss.
Yeah.
But they're both very small positions. And one of them to the upside has a longer time frame.
Mm-hmm.
But that's it. You just got to, with earnings trades, you don't have any control after the market's closed unless you're buying shares of stock or shorting shares of stock to hedge delta. But even in that case, it's a very dirty way of hedging unless you have static, long, naked options or short. But long, naked options is how you can completely hedge.
Michael have those posted after the show. Somebody asking about.
I can post it. I'll post it.
There you go.
I'll do it while I talk. How about that?
So you can get all these trades on the follow page. So in the platform on the left side here, we got the little follow button. It's just below the history. Follow here. And then you click that, you can see all of our beautiful faces.
Just
got Ryan on there. Got all the peeps.
Let's see. Can you look at something like the 2-day, 9-day on 30 delta shorts and $5 wide on the buy sides?
For crowd?
For crowd. So yeah, if you're going really short term, it's a little easier to do. But this is where an example of like if you like the way this looks a lot, you're not crushing IV nearly enough in the 9-day. So in the 9-day, you have to assume in crowd that IV of 71% goes to 40.
And there's time value too, so you have to discount for how much time is coming off the table.
Yeah.
You know, a quarter of the time is going to be off the table.
Yeah.
Too.
If you push this to Friday and you crush the 9-day, if you crush that by 30 percentage points, what does that look like?
And this is just like synthetically taking that off the table here. Oh, I have to take my put spread out of there.
I love when the Three Musketeers shows up.
Yeah. Shoot. Sorry. I got to move this to the other side. Oh, this reset.
There you go. There you go. There you go. Boom.
This is probably what your risk profile is, realistically speaking.
Yeah.
Because you have to account for the fact that 2 days or even tomorrow, with volatility baked into like right now, after the announcement, it's going to be a lot of premium coming out of this. And so they're all going to be like this. They look very, very interesting. You just have to understand that you want, like, your trade is to pin your long strike. And you got to hold it.
Yep.
You know, like, that's really your play. If you get a move that's, you know, to 500, let's just dissect what this trade would look like. Or let's say it's at the expected move, which is what? You got the expected move there?
For CrowdStrike, 31 points.
31 points. You get a to 460 or 470.
Yeah.
This spread is going to be worth $5. You're paying, you know, $7 for this. You're going to lose basically all the value from this spread. And so, yes, you'll have $5 plus the extrinsic value in this long option. You're probably, you know, a scratch in this range is exactly what this is looking at. When you get the outside the expected move, you're going to lose money on this trade, even though you're like sort of correct. So it's really playing for pinning the long strike.
Yeah. And that's the same if you were to do a double calendar.
Yeah.
Same story.
Yes.
Pinning the long strike, ideally to the upside.
Yes.
You'll always see this where there's more profit potential to the upside.
If there's call skew.
If there's call skew. And really it's just because the stock price is increasing, all of the extrinsic value increases with a higher stock price.
Yes.
Any advice for managing CoreWeave diagonal if it doesn't rally? 120, 130, October, September.
Yes. Yeah, so I have this on. I'm out about $100. I might just close this now. I think this was a bigger loser recently. I mean, CoreWeave is probably going to move on the NVIDIA earnings because they are very closely tied. I'm just going to close this out. I don't have a bone to pick here. Take a $100 loss.
120, 130.
Yeah, I have this on. I think we did this. Was this a fast market?
Potentially. I didn't have anything on in there.
Markets stink.
Yeah, the last trade I had on CoreWeave was a butterfly in the beginning of August. Or actually late
there we go.
July.
315. So I'm out for, so I'm taking a $113 loss on this. We did this on the 14th. Yeah, I think we made back some money today, so that makes me happy. But yeah, closing that one out.
So that what we're looking at with the 2-day, 9-day, they were looking at inverting. So the longs further out of the money than the shorts. We don't do those because it's a mirage of your risk, because you have the risk profile is fine on the platform, but you have credit spread risk then.
Yeah.
Where if you get a move too much, not only are you losing your debit paid, but you have credit spread risk because your short option is closer than your long.
Yeah.
So it's just, you're basically looking for nothing to happen for earnings, your shorts go to zero, and then you get the move to your long option after the fact. But if that doesn't happen very quickly, that value will dissipate pretty quickly. So we stick with the standard debit diagonals. That way our risk is the debit versus the embedded credit as well. Any last questions here? A couple minutes left. So yeah, today, NVIDIA.
Yeah, I gotta get mine.
CrowdStrike.
Snowflake.
Oh, yeah.
Is it gonna snow tonight?
No, I don't think so. It's getting chilly, though.
It is. It is, unfortunately.
It's getting chilly. Yeah, Snowflake will be interesting. 20-point expected move. This is the highest implied volatility. 20-point expected move on a $200 stock. That's 10% of the notional value of the stock price. That's pretty high for earnings, especially when you look at October, 27-point implied move versus 20 for the 2-day cycle. This one's kind of interesting for some short premium against some long, but I think I'm just going to stick with NVIDIA since I've got the double doink going.
Beautiful. E-minis up 11. You got the NASDAQ up 18. Bitcoin rallied a little bit. Cancel crash. What do you say we get out of here 2 minutes early?
Let's do it.
Cool.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Glenn's at Glenn Freibarger with an A. Go hassle him on Twitter. But yeah, we got some Tasty FX positions on. I just got the long New Zealand dollar over the CAD, Canadian dollar. It's up a couple of shekels here, but we shall see. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Peace.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
do that.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says,
just monitor that I've clearly, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
We're back. It's still Monday, it's Tuesday, September 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Veio, finding his sea legs. You heard Jamal Chandler. Hey, Jamal, how are you?
I'm good. Nah, it's totally fine, Chris. It's been a long couple of days for you. It's been a long couple of days this weekend for me. Dude, I drafted most of the weekend. I mean, every single day this weekend I had a fantasy draft. So I'm all over the place, hanging out with friends, had a lot of fun. And this is the market we find ourselves in.
You know what's terrible about our company, Fantasy Football League? ESPN gave me the highest draft score out of the gate.
Makes you nervous.
Which means it's only downhill from here. So ready to disappoint myself once again this year.
I didn't even see that. I didn't even see the post-draft scores. I have to check that out.
You're not going to be pleased with where you land, but none of that actually matters because the way they devise that is totally nonsensical. But Jamal, yeah. Well, we were going to continue our vacation here, but the market's called us back. Stocks slumping, gold and silver surging. Hello. That's a nice way to return back from an end of summer holiday. Kids are officially back in school now, Jamal. So back to the regular grind of it. And you know what? Everyone here is taking a look at what they saw over the summer and said, maybe that's just enough for a little while. The September seasonality sucks, as we know, or should I say stinks for the more family-friendly version. Jamal, this is a month where everything basically goes down over the past 20 years, last 5 years, 10, no matter how you slice it. But if it's stocks, bonds, gold, silver, crypto, every non-US dollar currency, it's usually tough sledding for whatever reason. Today, we're getting a little bit of a preview of that, although the dollar is firmer and gold, silver are surging. I can't say I'm too worried about anything on the long side just yet because it's just the first trading day after a low liquidity, low volume period, I should say. What do you make of this action here on this Tuesday, not a Monday, Tuesday, as this trading week resumes and September begins?
Well, it really kind of just brings to mind what we experienced a month ago, honestly. And so I guess we'll give it a couple of more days to see if there's more to it than that. But if you recall, a month ago, we had the end of July, last day of July, markets were down, and it just so happened to coincide with an August 1st date that provided us a jobs report that the market didn't love, and then we were down there too. But we ended August higher. So, again, it's possible there's more to it than what we're seeing in this market. I mean, there's a lot of different sort of things going on, but there's no one real explanation for why we're down as much as we are today. And I think it's just profit taking to start the month.
First 2 days back, particularly for foreign investors, we like to joke that Europeans don't like to work over the summer months. You email them in June, you get an out of office that says, see you in September. Within every joke, there's a kernel of truth. I suppose the kernel of truth there is that the second half of August is basically vacated in European urban centers for the business community. And so now this is the first time in several weeks that investors overseas, by a large extent, have come back to the market and have had a chance to reassess their books. We're getting into the period of time where you're in the mutual fund end season for the fiscal year, and you get a little bit of window dressing going on. Although I wouldn't call that what's happening today. Window dressing for the mutual funds is basically selling all the losers to get them off the books and adding more of the winners, so that when their year-end numbers come out, it's like, hey, look, they owned all the good things and they got rid of all the bad ones. Look at these smart investors running our money. Either way, GDP trackers are where I want to start today, Jamal, because we start this month of September with a resilient economy. Atlanta Fed GDP now is sitting at 3%. The New York Fed nowcast directionally is improving again, up to 2.22%, the right chart on the screen. And we're getting a Fed rate cut, by the way, apparently in a few weeks. So an economy that's running between 2 and 3% growth, coupled with more rate cuts, this has got to be inflationary for asset prices still, right? That didn't change when I was on my break, did it?
I don't think so. Inflation still is a thing. It's still existing. And we often talk about a lot of the different macro things that we pay attention to, right? Whether it's GDP, whether it's retail sales, et cetera, Michigan sentiment, and they all have their time, I always say, because again, until a couple of years ago, I was never paying attention to inflation reports at all, literally. And obviously now they matter. And I think retail sales is part of that. You bring up GDP, the first thing I always think about is consumer spending, right? And so that's 2/3 of it. And retail sales seem to be just fine. So to your point, yeah, inflation is still around, and yet we're in this environment where GDP is looking pretty darn decent, given everything that's going on, all this huge fiscal spending, et cetera. I mean, everything appears to be fine, even though under the surface we still have an inflation problem.
Inflation measures are ticking higher. If it's trueflation, if you look at the Atlanta Fed's dashboard, Cleveland Fed nowcast, I will say the PCE report on Friday coming in only at 0.3%. Surprise to me, it looked like we were going to get something a bit higher, and that didn't materialize. Is that a good thing or is that a bad thing? Maybe the underlying economy is weaker, but then you see the GDP trackers and you say, no, that can't be the case. It's not so bad, Jamal. Where's that recession that everyone was hoping for or seemed to be guaranteed? Maybe the slowdown was over the summer months, although with non-farm payrolls coming up this week, that can't be ignored either. We're going to talk about that later on this week, Jamal, particularly on Thursday here, but a very meager reading of 75K. I've seen some forecasters come out and say, expect this to be a negative print. We're going to have to cover that in greater detail later on. But right now, the economy holding up here. So the question today is, are stocks starting their September slouch? Because after all, September is a bad month for stocks. September, October, February, March, if you want to single out 3-4 months that really tend not to produce terrific upside, those would be the 3 or 4 of them. 63.91 and a quarter right now in the S&P 500, off by 1.26%. A touch weaker on your NASDAQ, off nearly 1.5. The Russell off just over 1% itself. This seems to be a tech-driven move. You mentioned that people seem to be taking some profits from their summer trading success. Tech stocks, of course, were at the top of the heap. The NASDAQ was outperforming many of its peers for large swaths of the summer. We're back to its 50-day moving average, though, here at NQ. Is this a buy the dip opportunity now that we find ourselves back at the mid-August lows as well?
I want to say yeah, and I do think it is, but I don't think you need to rush. For me personally, I guess I can only speak. I mean, I'm long, as I've talked about for a while now, the Russell call spread, the NASDAQ call spread. By looking at this as a buy the dip opportunity would be like me deciding to roll my call spreads down into this move, and I don't feel that strongly about doing that as of yet. Given my duration, where they are, given how far out they are, this is just kind of a blip on the map. In that case, if we were to go lower, say we would have a day two like this type of move, well then I got to wonder what is the issue and do I really want to be rolling into it? So as of right now, it's more like a do nothing and watch day. Really, is what it's been for me because I just don't know. Again, I haven't seen any major news surrounding this down move today. I mean, there's a lot of different discussions out there. There's all these, loose, I guess. Conflicts that still exist, right? Geopolitical stuff, but there's no. I don't think there's really any real concrete thing. And while it has created some volatility, of course. I mean, I just don't feel the need to sort of add on to any longs yet. I think it's a kind of a wait and see day.
Jamal, 23.44 here in the Russell, 21 IVR. This uptick in volatility at the start of the month, I don't think is substantial, but you're seeing IVRs jump back into the 20s here. At what point do you think that IVRs become an interesting point to start to fade vol?
I would say if we got another move like this or another 100-handle move, I think they would get into the mid-20s, maybe high 20s. And, I think at that point, it's interesting at the very least to start looking at maybe selling some put spreads. That's the only place I think I get interested. Other than that, you're right. It's just the beginning, right? You look at Russell, NASDAQ, they're all like 20, 21 IVR. And that's just simply bumping up because of a down day in the pickup in VIX, but it's not real volatility, I would say, to sell yet.
We saw a pump up at the start of August where first 2 trading days gave you a swing higher in vol that ultimately was faded. Who's to say that's different now, though volatility here at the VXU 25 contract is certainly lower than it was at the beginning of August. Is this a market that's in distribution mode to you right now? I couldn't help but take a look at what's going on with like RSP, QQEW, how small caps last week outperformed mega caps. Is this part of a healthier rotation that's going on in your mind? Or is this simply, well, everything's underperforming? It's not like the equal weighted NASDAQ is doing that much better. It's off by 1.32 compared to the market cap weighted down 1.43. It doesn't feel great there in equity land, does it?
Yeah, I mean, there's some outliers a little bit, right? Like the NVIDIA move a little bit, the Google move. They're obviously leading the way some, but you talk about everybody's getting hit, and it's true, right? I mean, I see financials getting hit. I see real estate, utilities to some degree. There's a few greens here and there, and that to me says like this is not a terrible day as much as it seems. I mean, this is definitely a quiet 80 plus to 100 handle down day. And I think that's why you're seeing, even though it's a lot of the big, it's really the heavily concentrated names that are down for the most part. I see positives here and there, Walmart, Procter & Gamble, McDonald's, Home Depot. So I think that just kind of says this is somewhat of a pullback. Where it does get potentially scary is, look, we've all been hearing the rumblings about is AI a bubble? And I got to tell you, like, just on my own sort of simple research, right? Like, I don't know about you, but there was a lot of conversations that I've had over the last couple of weeks where AI is mentioned all the time. I mean, everybody's talking about it. Everybody's saying it casually in conversations, right? And so I would say in that way, it does seem kind of bubble-like, but I would say the fact that we're seeing some pullback in some of these names is a good thing. We need that. Otherwise, that's when things get really scary. When you're over-concentrated, markets continue to just go higher and higher, and nobody's selling. That's going to lead to the very bad days. So I would say this is, we're down 1.2%. Let's keep it in perspective. I mean, used to be a 100-handle move was down 4%, right? Well, that's not the case anymore. We're down 1.2%, and it's more of a pullback. And it's been 2 days, and I think that's something that's interesting. But I think that's good. I'm always going to say that that's good if we want higher prices. We need a couple of pullbacks.
You mentioned there are some things that are up in ETF land. It's only 4 oil services, XOP, biotech, IBB, and then gold miners, both the big one and X and GDXJ. So it's a bit of a bleed out. When you look at the top performers, at least the sector ETFs that are red, but the least red, you find more defensive stature there. Your healthcare, your staples. All right, well, 63.94, it's only a 20 IVR. What do you do? You're still in the uptrend. That's defined us going back to the May swing low. We've had this as a guiding channel for the past several months, back to when the US and China agreed to a détente in Switzerland in mid-May, May 12th, when that was announced. That uptrend could be breaking here today. But if it does, we're really talking about the horizontal level, 63.60 or so. You break there, perhaps peering down to 62.40 over the course of this week. It's a weird deja vu, Jamal. Like, we traded a little soft going into early August ahead of that non-farm payrolls report, and the expectations for this one aren't exactly good. So if you think it's going to be one of these, well, the data is so bad that it's going to force the Fed to cut. Maybe you're taking some risk off the table now at the start of the week, and you get another soft reading come Friday, like we did at the start of August. It's a buy the dip opportunity. Do you find yourself thinking about any of the jobs data this week as it pertains to how the market's shaping up here on this first trading day of September?
Sure. Like I started out saying, this reminds me of what we saw last month, right? Except obviously we're moving lower before we get to the jobs report, which, you know, again, as somebody who's long, that makes me a little bit nervous. But once again, I mean, because of, I am further out on these trades, so it's not like I have to worry too much. But yeah, I mean, I'm definitely reflecting on that potential jobs report and what kind of move we could get there. I mean, again, that's the signature event of the week, and we're already, you know, down 1% and change, and when you add on the day before, we're off some highs here. So I think it, you know, somebody said it in the chat, and I think it bears mentioning, you know, the idea of, well, is they're really reflecting on what Tom was saying last week, but everybody was wondering if the market is at a point of exhaustion, and yeah, these couple of days of pullback, I think, is just a sign of that. For me, it's not much more than that as of yet. Again, things could get ugly. We'll see what the jobs report what that does. That's the one thing that is kind of keeping me a little bit on edge. But for now, I mean, look, the one thing I've noticed is that on the simple moving average, it looked like we were going to touch the 50-day. We did not. We bounced just before that, which was like 63.57 or so. The other interesting thing I will say about today is that, and this is not a any way trying to segue to Bitcoin, but just bring up the fact that Bitcoin is positive today. The correlation between Bitcoin and S&P 500 has been greater than 0.5 for several months now. They've definitely been moving in lockstep. This is one of the few days where they haven't. So I find that kind of interesting on the day. I mean, I'm just looking for the different, you know, green shoots, if you will. But, you know, like we said, it's not an all red everything day. It is a lot of different red in a lot of places, but there's a few greens here and there as well.
There are a few greens. Crypto peaked earlier than the rest of the market, and ever since Bitcoin's had trouble climbing through 125K, it's been difficult for the NASDAQ and the S&P, if almost as a sign of risk sentiment, to push up to new highs and sustain them. Maybe this is a market that's turning the corner. Although sentiment out of crypto world, I'll tell you, people are getting a little bit dour. Like they weren't able to crack through 125K. And from my own charts perspective, it's beginning to look a lot
like
more daunting moving forward. I was almost going to go there, but it's... Krampus is coming this year. I don't know, because it should be staying above. IBIT should be above 64. If we go over to something like BTC, right? This is really the area where it should bounce. So not out of the woods yet, but dreams of 135K, those might have to be put on hold sometime soon. Either way, though,
I like those you highlighted, though.
Yeah.
I'm just curious. Those ones that you had highlighted, I mean, to me, that says there's a dip and then there's a move higher and then there's a dip and then there's a move higher, right? So maybe it will have a chance to reclaim that 125 and actually stay above. Maybe it looks like it's going to take about, how long are those? About 2 months? Is that right? Seems like there's 2 months between those, right?
Yeah, I'm looking at the weekly chart here now. Bitcoin, there's no fundamental analysis for Bitcoin. We could talk about looking at various on-chain metrics. Just very simple technical analysis works here better than any other form of analysis in the crypto space.
It's still an asset where people are trying to determine whether to buy it or sell it, right? And so as a result, I think that creates these greed and fear pockets. And to me, that's what I always kind of ascertain as a lot of technical analysis, greed and fear pockets.
Absolutely. So I see in the past where you have former highs and that former high becomes support. We just punched through into a new high, and now we have former highs around the 110 level, and they're showing up as support so far. That's what you would hope to see. So this is kind of the line in the sand. Friday and going through this weekend, nightmare. But coming out of this weekend, okay, there's actually a chance for this to hold, and it needs to hold here. So if you have stocks holding, right, the S&P 500 is not going to give you a move below 63, we'll call it what, 63.60, swing lows that you have here going into the third, fourth week of August. Your NASDAQ 100, likewise, similar scale of pullback, falling into the lows that you have in late August. If this is it, you know, the market's already done more than its fair share for the seasonality, Jamal, which I suppose is something that we want to go to. We did say that September seasonality stinks at the top of the show. Where does it actually lie? S&P 500 futures past 20 years have averaged a loss of 0.62% in September, up only 55% of the time. NASDAQ down by 0.3%. Up 50% of the time. Just right there, that tells me that, listen, if this is a market that's up more than it's down, or at least is a coin flip, but you still have an average loss, it means that you're losing months of September. They're typically bad. So we're going to get a market that from here on out, having fulfilled the already average move to the downside for September in the S&P, you either get this like slow scratch climb back, or you have days like today where it's like 60 points gone, 90 points gone, and it's a little bit more painful. I don't want to say that's a sell rip type of market, but when you're buying the dips, just be mindful that it could take a little bit longer to get back given this seasonal headwind where when things are bad, people typically panic here this month.
Yeah, I mean, I think that's a good way to put it. And so, yeah, for me, like I said, having long deltas already, the best, I either have two options, obviously, right? Like I can either close out those longs because I think we're going much lower, or I can just let it happen and watch and then eventually maybe roll down the call spreads so that when we do bounce back, I can profit more that way. And so for now, I'm just choosing to do nothing.
Before we get off of stocks here, Jamal, did you see the Bank of America note today with their price target for next September in the S&P 500?
I did casually see that. It was like 9,000 or something like that.
Yes.
Yeah.
They're looking for a 52% rally in the stock market in the S&P 500 between now and September 2027.
Yeah.
That's a big prediction.
It's huge.
Jamal, the market returns like 8% a year since World War II. Since the global financial crisis, it's what, closer to 14%? How does one justify that?
I have no idea. It sounds like somebody trying to get their name out there. I'm surprised they didn't include an analyst's name along with it, but that's what it sounds like to me. I don't understand why else you do that.
Look, institutional is trying to get retail really jazzed up and offload, right? Get this thing really just run up the bubble a little bit more.
Yeah.
That's what we want to call it. But also there's part of me that says like, yeah, I could see that. Totally rationally. Why not? The tax cuts go into effect next year for the top 20% of income earners. They're going to have to do something with the money. They're not going to buy more blue jeans, Jamal. They're going to do what they've done historically across our economy and other economies. The wealthy buy more assets, real estate, financial, gold, silver, Bitcoin. Why would that change? So S&P 500 at 9,000 next September.
I mean, if that
There's
happens,
got to be options for that, right?
If that happens, I mean, what's the catalyst? Is it the AI that we all know and love right now, or is there something else that pushes us higher?
You could buy the $9,000 call expiring 381 days from now for risking $157.50.
9,000 right? Call. I mean, I'm surprised that it actually is even out there, kind of.
One delta. So the market's telling us that Bank of America's forecast, 1% chance of happening. I really want to see how they came up with that. I wonder what their quants are saying today.
I don't even know, dude. That was I casually saw it as wild.
All right, so VIX here is coming off of its highs a little bit. We tapped into the 19s. We're back down to 1824. The high today was 1938. So a full point off now as the day has gone on and stocks getting their footing. S&P back above 6,400. NASDAQ 23,173. You mentioned the Russell. You're staying long it. It's now bouncing off of the former high that we had in August 13th high there. It's an area where we found support back on August 26th. Kind of what you'd want to see happen, Jamal, if this is a market just digesting the influx of people who have not been here and trading and reassessing their books for the first time in a few weeks. It's something that happens in September. Don't be shocked with non-farm payrolls this week that today, an unpleasant start. Now, bonds are a different story here. I was talking about this with Tom on First Call, and we briefly touched on it today during Let Me Explain, but we're starting to see a little bit more volatility come back into the space. IVR of 16 here in ZN, in ZB, it's still creeping up at 14.5. It's the highest IVR that we've seen on an intraday basis going back to August 6th. What do you make of this? We're coming out of the weekend where gold is surging, the dollar's surging, bonds are twisting, long end is a little bit weaker, short end's a little bit firmer.
Yeah, it's kind of fascinating to see the long end doing what it's doing, honestly, even in comparison to just the 10 years. I thought that that's fascinating, and I'm not exactly sure what to make of it on this type of day. Again, I don't feel like we've seen this kind of juxtaposition in markets where we see the bonds down and SPOs down. I can't remember, at least off the top of my head, at least this much. I guess it's been a while, but look, overall, because the last time, when I keep comparing this move these last 2 days to a month ago, we saw the exact opposite, right? Like, it was bonds shot up, and again, it was all related to the jobs report more than anything. But I think the biggest takeaway is what you said a little bit ago, and I think this is what we're seeing with a lot of different assets. Vol had gotten pretty darn low. And as a result, I think that led to a situation where, again, a lot of different assets where we talk about equities, a lot of those were on highs. It was time for some pullback. That leads to a little bit of a higher vol. This situation, though, with bonds, I think it's probably clearly deeper, right, with a lot of fiscal spending expected coming due in some point in time. But it's still not high enough vol for me to really get super interested as of yet, I think. I'm just worried at some point or another we do get a couple of these moves that leads to the IV ranks of 40 and 50 in bonds, and I'm positioned the wrong way. So I just, that's the one thing that makes me nervous, I would say.
This is a roll week for me as it pertains to bonds. ZB at 24 DTE. I think that's one of the things that's working out well enough here in the follow account today. Yeah, ZB, it's off about $50, but it's 109, 111, 119, 121. So going back over to that 119, 121. Okay. Would we want to put that back on again at 52? 109, 111, 119, 121. There's a little bit here of a skew where, because of how the market's moved, sure, it's still a 3-to-1 trade, 60% probability of profit. I think moving the strikes just a little bit to account for where the market is right now, you're still going to get something in that 3-to-1 neighborhood. And thinking about the 50% mark of the highs at the end of April to the lows in the middle of May. Here we are at the 50% mark, Jamal. Again, it feels like we've been having this conversation for months. So while volatility is going up, okay, there is that consideration. Is this trade still worthwhile? I think anytime you can get a 3-to-1 risk to reward in that 45-day window, in that 60 to 70% pop, it's got to be the trade you take. If it's part of your system, part of your mechanics. And for me, it's been the range trading in notes and bonds that at least has worked over the summer months. A lot of things didn't, like long gold and silver up until the past few days, but I was wasting a lot of premium buying calls in gold and silver. Bonds were doing their work for me, yeoman's work.
Yeah.
I'm going to roll this before non-farm payrolls. I don't want to roll it today necessarily, but this is how I'm going to position it. I want to go 2 points wide, wrapped around the 1 standard deviation move. When I do roll it, we're probably going to be at 50 DTE. So maybe this occurs on Thursday, Jamal. But right now, I still like this, both in notes and in bonds. This has been very effective, and there's no reason to stop thinking it's going to be effective.
The trade looks good. You look at it, you see it's a 62 pop, like you said, 3-to-1, and then when you're seeing the fact that, again, like when you looked at on the chart, you talk about how bonds haven't breached either one of these levels in quite some time, so that's also a good thing. I do like the trade. The only reason why I'm not putting it on is I've got myself extended in a couple of different things, and as I told you, we'll get to a little later, I did put on some trades and gold and silver this weekend, along with some of the equities. So I don't want to deplete my cash too much, but this is actually a good trade.
It's a similar story for what's going on in ZN. This is 24 DTE. That makes this roll week. Going back out and looking at the position and the upside tilt here, could you get something in that same neighborhood? I'd prefer to go out a little bit more and boost my pop at the expense of my potential profit. However, doing so here and giving another full point to the upside instead of doing 114, 115, you're widening out to 115, 116. It really upsets the apple cart for me in a manner where it's not so appealing. ZB is a different story, but ZN, I might have to tinker with this a little bit more and find a trade that I like, and that may mean sacrificing some of the downside, which do we really think that we're going to break through the lows that we had here in May in notes? I don't think so. I think we can play with the 110 figure and feel comfortable around it for a little while. That may be a way to balance this out and get a better risk to reward to provide the upside cap. Because if this moves, I think it's going to move to the upside more than it's going to move to the downside.
Yeah.
So I'd rather give a little bit more breathing room, come inside the one standard deviation on the short put spread side, go outside of the one standard deviation move on the short call spread side. And there you are at 62%. And the risk to reward is better balanced, more of like a 2.5 to 1, as opposed to being worse than a 4 to 1.
This has been a strange year overall in some ways, though, when you think about it, right? Like just looking at the moves with bonds, and then we've had the times, obviously, we had Sell America, where we were selling, equities, you were selling bonds, and you were selling the dollar, and then you have a day like today where equities are down, bonds are down, the dollar's up, and then we've seen other times where the bonds were down, and I mean, it's just been wild. When you think about it, it's trying to figure out the cadence here, which all of these are eventually working, has been kind of crazy this year to me.
Kind of crazy to me this year as well. But what's kind of crazy what's going on today with gold and silver. You'd think that yields are up, the dollar's up. It's probably not going to be good for these commodities denominated in US dollars. And yet, couldn't be further from the truth. So much for those textbooks, Jamal. 2.09% to the upside here for gold. And boy, was that needed, because there are some lingering calls here in the GCV5 contract at 23 days to expiration. And that 3,500, 3,550 call spread looks pretty good here after this move today, which could have asked for a better outcome. I guess this is what I get for going away last week. Maybe I should go away more often, just buy gold and disappear. Well, we're at the top side of the range now. I mean, if this is a place to take profit, where is there a better place to take profit? I'm at 23 days to expiration. This has run up exactly into the place where I'd want it to run up into the former all-time high that we had persisting back from April. There's no reason to fly much closer to the sun here. Take profit, reset the trade, find another opportunity. But I got to say, staying long right now is rather appealing. Only if, because of what we've seen as this move has occurred to the upside over the past 2 years, basically going back to October 23, Jamal, moves higher in gold alongside expansions in volatility. That's the kind of price action volatility relationship you want to see. And we've got that here, where the teens volatility, right? IVR's low of 11 on August 22nd. We're back up to 39.4 at the high. So dip, buyer, gold breakout. It looks like it's happening. Finally, one of these call spreads. It's worth something.
Oh, geez. Well, we last talked on that Thursday, right? The 21st. And I know I'm sure it's been annoying to you, but I know I've been a broken record about it. I mean, it wasn't the same gold trade. That's what I kept saying, right? Like, it just wasn't the same gold trade. It's been so quiet over these last several months, and you could put a line through 3,400, and that's essentially what we were seeing. And it just so happened to start last week, right? But for me, on Friday, and I tweeted it out actually, like maybe Friday morning, maybe around the open, right after the open, I said, gold is starting to look like a momentum play again. And then the light bulb went off. Yeah, it sure is. This is what you want. This is what you want to trade, right, Jamal? I'm like, yeah. And so I put on a gold call spread and put on the 3,550, 3,600 call spread. And over the weekend, just watching that move, it's like, oh, wow, we got something here for real. And I actually tried to put on silver on, what day was it? Must have been Monday, I think. But I just couldn't get anything to happen. And then, no, wait, it was on Friday. I was trying to get some silver on Friday. For some reason, I didn't get anything off. And I was like, well, I'm not chasing this. And then I finally did it on Monday. Yesterday, I got a silver call spread off. And so I'm long. This is really far upside, but I did the 45-47 call spread. Basically, I'm playing to see if this thing is going to get to 50. And that's kind of how it's looking right now. These are back to being momentum plays once again.
Years ago, when silver was in the low 20s, and you and I were looking at charts and saying, like, yeah, this thing could probably double in the next few years. Crazy talk. Not so crazy now, huh? 41.59 here in silver. The 42.40, we were looking at call spreads out here from several weeks ago when we started to break out. And volatility was low enough that thinking about the roll, giving 80 so days, right? Take profit, give yourself a bunch of time to keep the train rolling, sticking it through any pullbacks. Time is our friend, right? If you're going to take some of these out of the money shots, duration is the best thing going for you. And if you can structure the trades in a reasonable enough manner, it can work. The question is, will this keep working? I see a natural-ish stopping point here from a technical perspective, right? We could take our Fibonacci extension from the low that we had here, right? Or former high. Either way, this pivot zone, swing up, swing down to the breakout move. And that gives you 41.82. It's been a really swift run higher here in gold and silver. But then again, you think about the dollar and yields today, Jamal, and you go, how do you square these circles? How much further can these things run if the dollar is actually going to firm up here henceforth?
Yeah,
I think this is great still.
That is the wild part today with the dollar move.
It's kind of like with gold. If I'm at 23, 24, any of these shorter, like if I'm sitting in the September XP right now and I'm at 23 DTE and we just got up here with another 2% move, this is as good of a time as ever that if I want to stay on the train, reset my duration, maybe not even 56 days, go out to 83. That's still SIZ5. But don't look the gift horse in the mouth. How many times have any of you listening at home have made the mistake of, I've had a really juicy position that's just a few days from roll or my profit day, and I've gotten a little greedy and then it's turned against me. It happens to me, Jamal, far too often still. I think that it happens to most people as well, but we're learning, we're growing. So gold off the table, silver currently holding, but this is a really good time to reset in either gold or silver if you've had long exposure and you're at that 23 DTE.
Yeah, I did, kind of mess this execution up because I did want to get something on Friday. It didn't happen. I pressed a little bit yesterday, and obviously he's pulled back. And now I'm playing for the 50 print, but I might want to just, change my position here and just go with the 44.46. It's not as lofty as my other trade, a little bit better. Now it's just a question of whether I can get in the price I want.
Xi Jinping, Narendra Modi, Vladimir Putin all met this weekend. There's a lot of photos circulating of the three of them. Kim Jong-un arrived in Beijing as well, so there seems to be a nice little group of swell folks having a little get-together, Jamal. China's been buying a lot of gold, right? We talk about the system, the global financial system, and how the dollar may be losing favor incrementally. People are still going to use the US dollar in trade, but if you are anticipating less trade with the US moving forward, then at the margin, you don't need to keep replenishing your FX reserves with as many US dollars. And there's not another good alternative out there. I mean, we're going to go into the other currencies for a second, but has anyone looked at UK gilt yields recently, right? What's going on with their currency? Maybe this is a chicken that's about to come home to roost.
Mm-hmm.
So where do you put your funds? You got to put them somewhere. Gold and silver have the edge right now in the short term. I don't really know what else to say, but this has been a theme that we've been on for how many months, years?
A while. Yeah, a while. And again, we're watching it from the standpoint of technical analysis, but then also, like you said, just watching how it moves at times. It did go through a big up move last year into this year, and then it got really quiet for a very long time, right? And it never really broke down hard, if you will, and it stayed the course. And eventually you knew it was going to break one way or the other, and it's finally breaking out again to the upside.
This is going to be the highest close that we've seen in the silver market. You're going to have to go back to May 2011 to find a daily close, or September 2011, excuse me, to find a daily close up in this realm. It's been a very long time, Jamal, which I suppose we can round this out with a quick discussion on copper. Copper's still basically dead, although this is something that piqued my interest. I don't recall seeing copper volumes north of 40K prior to my taking a week off. Maybe liquidity is starting to normalize in this space. And I think about the 56 days here, and I'm looking at some of these at the money options, and the bid ask, these have been a lot tighter than they've been in recent memory. So copper may be back on the menu again. It's been off the radar for me for a while since the July 8th hijinks. But now that we're in September, seeing the volumes and the bid-ask spreads close on trading they were before all the tariff nonsense started, that's encouraging because I've had I like trading copper personally. I think it can be a better contract than silver at times. So not there yet, but certainly back into the realm of interest. And you know what's back in the realm of interest, Jamal?
Oh no, don't say
Natural gas. Say it. It's period and timeout's over. Okay, so we got back to our 1 month here. It's a 33.7 IVR. I don't know if that's worth paying much attention to if we have an IVR that's close enough in crude oil. Crude oil is up over 2.62% today. Maybe I'm a conspiracy theorist, but when some of the world's worst people are gathering together and gold prices surge and oil prices surge, there's some geopolitical risk bell that rings in my head here. Do you find the gold and oil move connected today, especially in the face of this stronger dollar? It's odd that this is occurring the way it is.
It is so odd, man. I tell you, it really is. And maybe this is nothing more than the beginning of a new month and things are getting shifted around here, but it is very odd for sure.
Okay, so what to do though? This is last week, actually, I tried to push off a trade. It didn't get filled. So now it needs to be filled. CLV 5 contract here, 15 days to expiration. That's got to go. Bless you. Cough.
Thank you.
Either way, we need to get rid of this. The question is whether or not it's worth continuing to go moving forward. And I said this 2 weeks ago. I'll say it again this week. When we have been wrapped right around $64 or so in oil prices, this trading range that's been afforded to us, going back to the lows that you have post-Liberation Day, the highs that you have around the Israel-Iran 12-day war, it's something to continue to trade around as far as I'm concerned. And so that's exactly what I'm trying to do here. I have a working order for the 57.59 and then the 72.74 short iron condor. If we were just to take a look at that here real quick, Jamal, what would that look like in terms of a risk to reward? It's still in that 3-to-1, risking 3 to make 1 type of neighborhood, right around 60% probability of profit.
Mm-hmm.
So my plan is I'm trying to get rid of the one that's at 15 DTE. I want to go back out to the one that's at 44 DTE, keep this party going. The range trading has worked. There is no rhyme or reason, in my view, why that should change anytime soon. Although, as I've seen from some folks on the FinTwit world, we're still calling it FinTwit, even though it's X for what it's worth. We're not calling it FinX.
I still call it Twitter.
Yeah, there you go. Okay, crude oil may be breaking out. And it is a commodity, and commodities tend to trend better than anything else, right? So just a little bit of a different variety here. If we start to punch through 68, I'm going to kill the short iron condor trade.
Yeah, we're traders. We trade, and that's actually a good trade. It could be breaking out, but honestly, we haven't really seen much of that over the last several months. Like the few blips that we have seen were mentions of geopolitical risk and then the fade back down. So that's a good trade right there when you look at that iron condor. And you could draw a line through 65 and you can see why it works. And you can see the outlier prices at times. And that's basically where you're parked your strikes at. So makes sense to me. I love it.
Natural gas, we did touch on. What do you do here? It's off by 0.7% today now. It had a nice little rally earlier, giving you a doji candle. Can't quite punch through that 1 month average. Do you sell the rally? Do you get directionally neutral here?
I don't know. Those two doji candles make me believe that it's due for a move. And in this case, I would assume higher at some point. So I think it probably does seem like a decent time to do a short put spread in here because it could be, we know how natural gas rolls, and we've definitely dealt with its wrath at times, and it looks like it's setting up for a move higher maybe after some low
at times.
doldrums.
Only at times.
All the time.
All the time. Every day. Dollar's time to shine. Our friend Ilya speaks of a bottoming process in the dollar that's been going on since July. And there is something there to that, Jamal. I know that the uptrend hasn't been so clean, but let's think about this pivot that we've made here. Even today, this does constitute a bullish engulfing bar. We may want to call that a key reversal. We set a new low relative to Friday. We're closing above the Friday high here potentially in DXY. So this session or series of higher lows, July, August now, going into September is holding up technically. The big move, of course, today is what happens in the yen. These need to be pushed through to the follow page, but I took profit on the 67, 68 put spread here because there was 3 days to expiry and I had not been able to get this filled in off the books. And with today's move lower, there was all of a sudden a lot more people interested in trading those strikes. So don't look the gift horse in the mouth. I'm not so comfortable about the yen being the expression of my long dollar bias moving forward, in part because this is no longer the crowded trade that it once was. The Z-score here for the COP positioning for futures traders, Jamal, speculators were looking at a Z-score of 3 back in late April going into May. It's now back under 1.7. So this has been a constant process of traders deleveraging their long yen position, and there has not been this significant pullback thus far. Whereas the long euro position in the market persists and continues to build. So when I think about that, the euro really has some of the juice, maybe even the British pound with these new fiscal concerns coming into play with, again, folks can go at home. We don't have it here on the platform, but go check out 30-year gilt yields and you'll see how they've just absolutely surged. The currency is wearing it on the chin now. It's giving us a bearish engulfing bar or key reversal type of action here today with a new high relative to Friday to close below Friday's low. There's the breadcrumbs in the candlesticks right now that the dollar is holding up and long dollar positioning. Well, that is a seasonal consistency. You know, stocks down, bonds down, but US dollar up. That's another thing that occurs. And if you want to be a stock market bull, but want to hedge that a little bit, being a dollar bull is one way to do it if this is a typical September.
I took the opportunity last week to reestablish my short delta position in the euro. I got long a put spread in there, and I went really far out. And in this case, I just feel like it could be some time. So I went out to January. I'm way out there. I mean, I'm just going to capture everything that we got, the next couple of jobs reports, next couple of inflation reports, whatever it may be. And it wasn't that expensive, and that was part of the reason why. It was nice to have something with further duration and, you know, not something that's too far out. And again, I'm looking for a move. This is not even a vol play, right? So that's why I don't mind going that much further out. But I do think at some point in time, we're going to see at least the dollar try to retest to par at some point or another, right, in Dixie. So why not?
Is something building here in the euro? That looks like a triangle that's consolidating. Oh, I get to make my favorite reference because I'm still insecure about getting a 3 on my AP physics exam. This is like a spring coiling, Mr. Tucker. We're storing potential energy. So yeah, maybe a move is coming, but this reversal here today, right? That, again, key reversal. Look at the candlesticks, by the way. You got that morning star back in August, signaled a low. So I don't want to ignore them in the currency market because they tend to be followed. And there's your topping episode today. If the dollar's topping, or rather the dollar's bottoming, the euro's topping, what are the implications in the bond market? What's going on in stocks? I don't know if we can say there's a clear narrative. This isn't a year like any other year. You said it so succinctly earlier. This has been a weird year. And so a lot of the relationships that you would typically see, you know, if you look up an explainer, an education piece, how does the dollar behave? This year, it hasn't behaved like you would say.
It's probably a little weird for people who are just coming in and seeing these type of things and trying to figure out a relationship. It's definitely a strange year for that. But, you know, I think you could just rely on, like we said, there's still a lot of dollar shorts out there, and at some point or another, they're going to get run over the other way. And so I just want to be there when that happens, basically.
Exactly. Thinking about that in particular, before we head off at 31 DTE, the short call spread in the Canadian dollar continues to work. In the British pound, 31 DTE, we're just getting back there today. This was the 133.5, 134.5. Would I want to put these on again? This isn't roll week. Next week is, although changing the positioning before non-farm payrolls, probably the prudent thing to do. right? We don't need to squeeze out another 4 or 5 days on these. Just roll it before NFP, stay directionally short. This is exactly what we've been waiting to happen. This breakdown here. I thought we were getting it at the end of July. That obviously didn't work out too well, but now everything seems to look a little bit better technically. We're not exactly crossing the Rubicon and the dollar's firming back up. So Jamal, we need to close this out because you're going to come back in about 45 minutes for engineering the trade. We have a brief break before then, of course, because Dr. Jim Schultz is the jelly in our sandwich. I guess that makes us the bread here. We have Jolts tomorrow morning, Jamal. It's the start of jobs week here. Jolts tomorrow, ADP, of course. We're going to have ISM and then non-farm payrolls on Friday. You and I are done and dusted, though. Let's get out of here. We'll see everyone later today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Schultz, and this is From Theory to Practice, and today I'm super excited because we are going to start a little deep dive into extrinsic value to kick things off in a shoot from strength. So John, go ahead and get us going here on the title slide. So we are going to talk about the 3 drivers to extrinsic value for a few minutes. Now, if you think about what we do as premium sellers, right? Like, what is our widget? Like, what is the thing that we are essentially marketing or selling in the marketplace? It's extrinsic value. Like, we're selling options and we're focused on option prices and whatever. But the actual widget, like if you really break it down to the brass tacks, it's going to be the extrinsic value of that option price. Now, what's interesting about the world of options is, when you have these elegant, complex models, these mathematical models that determine option pricing, like a Black-Scholes model or some of the other option pricing models that might be out there, that are essentially really, really complex formulas that are built to help us figure out, hey, what should the intrinsic value be? What should the extrinsic value be? Now, intrinsic value is admittedly a very easy calculation. Extrinsic value, on the other hand, is actually very, very complicated, and there's many, many, many different steps. But if you really break it down, and if you really strip it down to the chrome, there's only 3 factors that are ultimately going to be driving the extrinsic value on any given option. And so that's what I want to focus on here today. We'll do a little bit more in a couple of days, and then we'll do factor number 3 here on Friday of this week. So, John, go ahead and get us into the slide here. So what is the first driver? It's going to be time. The first driver of extrinsic value, the first thing that's going to be impacting extrinsic value the most is definitely going to be time. So let's work our way through the information here that we have on the slide. Whenever you're learning anything in the world of finance, anything in the world of the markets, or really, a lot of things just mathematically in general, there's always going to be a mathematical explanation for what's going on, and there's always going to be an intuitive explanation for what's going on. And so this is especially true when it comes to the markets and it comes to trading, thinking about the different positions and like the metrics that we use, whatever it might be. Today, I want to focus almost exclusively on the intuitive side of things, and we'll probably maintain this same type of mantra going forward through this little 3-part series into extrinsic value, because I think it's going to be the easiest to grab onto. I think it's going to allow you to kind of mentally wrap your mind around these 3 factors that are impacting extrinsic value, especially if you're a brand new trader. Like if you're just starting out and this is all brand new to you, my hope is that this information is going to help you kind of expedite your journey across the learning curve. So ceteris paribus, more time always leads to more extrinsic value, right? More time always leads to more extrinsic value. Ceteris paribus, of course, being all other things being equal. So if we took everything in the market and we made it all fixed, we made it all static, where nothing is moving and nothing is changing, which of course is never the case, because in the market, on any given day, everything is moving, everything is changing. But if we actually just put everything into a vacuum and just focused on extrinsic value and how it relates to time, what we would see is more time means more extrinsic value. Less time means less extrinsic value. So this is kind of the base case. This is kind of the default setting when it comes to extrinsic value. This is going to be the thing that is going to essentially guide you in your understanding of how time does indeed impact extrinsic value. When it comes to extrinsic value and it comes to time and it comes to this positive relationship, the most important thing, and in fact, this is going to help you, man, this is going to help you in so many ways. It's going to help you today. It's going to help you the next day we do this, and then the last day that we do this. Look at that key on the bottom of the slide. I probably should have led with this. Like if we're truly shooting from strength, I should have gone with this first. Think about an option as a transaction where, it is quite literally a transaction, but think about it as a transaction specifically between the 2 sides of the contract, the long side and the short side. And even more specifically, think about it in terms of the long side buying the contract from the short side. So think about that literal transaction, essentially the way you buy anything else, kind of in this world where you have a buyer and you have a seller. And of course, the buyer pays the seller for the thing. The seller charges the buyer for the thing. It's no different here. This is going to help you immensely when it comes to understanding time and the next factor tomorrow, and then the next factor the following day. So if we think about that relationship between time and extrinsic value and the long side and the short side, when you start to think about how time impacts extrinsic value even more specifically, of course we have more days to expiration. It's going to increase the options price because there's increased extrinsic value. Lower days to expiration, or fewer days to expiration, I should say, is going to decrease the option price because there is less extrinsic value. If you think about the transaction between the long side and the short side, this is very simple stuff. Like on the surface, you're looking at this like, wow, that's really, really simple. Like very, very simple. It is indeed incredibly simple. But understanding kind of what's happening underneath that surface, understanding kind of what's driving the train here can be really, really helpful. So if we go back to the long side and the short side, who is taking all the risk in any given option contract? Like if you had to say, who's taking all the risk? Who's taking a lot more risk, let's say, the long side or the short side? Well, it is always going to be the short side. The short side of the option contract is always taking more risk than the long side. And oftentimes multiples in terms of additional risk. Because remember, when you buy an option, whether it's a call or a put, it doesn't matter. the most you can lose is whatever you pay for it. But if you sell an option, now all of a sudden you're essentially exposed to undefined risk. You're essentially exposed to unlimited amounts of risk. So when it comes to any given option, all the risk lies with the short side. Okay, think about time and think about extrinsic value, and the intuitive basis for this relationship, once you understand the long-short relationship, is going to be a lot clearer to you. At least that's my hope. If the short side is taking all the risk and you increase the amount of time on a given option, right? Same stock, same strike price, like everything about the actual trade is the same, but you're comparing, a 14 DTE option versus a 45 DTE option. The 45 DTE option is always going to have a higher price because it has more extrinsic value. Now, why does that always have to be the case? It's very, very simple, right? The short side, the one who's taking all the risk, is essentially communicating to the market, communicating to the potential longs and the potential buyers, hey, if you want to buy this option from me, that's fine, but I'm going to charge you more because now you're asking me to take on all this additional risk for a longer period of time, for 45 days instead of 14 days. And then conversely, it works the other way, right? If you have a 14-day option, or actually, let's use some different numbers. If I have a 10 DTE option versus a 30 DTE option, the 10 DTE option is going to sell for a lot less than the 30 DTE option because, again, the short is basically saying, hey, I don't have to carry risk for as long a period of time, so I don't need to charge you as much, so the option is going to be cheaper. And so when you start thinking about this relationship, just trace it back to the relationship between the long and the short, and I think that will serve you very, very well. The final thing I want to say, especially for us as premium sellers, and then we can kind of conclude today's installment of a deep dive into extrinsic value. When you start thinking about more DTE, meaning higher option price, meaning more extrinsic value, this is going to be something that I think is going to really serve you well at trade entry. So this is going to be something when you're scouting out a trade and you're trying to figure out, what would be a good candidate to put on a strategy, a short vertical spread, a short strangle, whatever it might be. This is going to be something that's going to help guide you in determining, all right, this trade looks better than that trade, or trade A looks better than trade B, or whatever. The second point, the fewer DTEs, lower option price, less extrinsic value, that is essentially what we are doing inside the Tasty universe as premium sellers. This is the basis of what we're doing. We're selling options, right? And then over time, over the duration of the position, obviously the DTE are going to tick lower and lower and lower. And what's going to happen as a result of that? The extrinsic value is going to fall. The extrinsic value is going to dissipate. That's essentially what we're trading. Remember, we started today a few minutes ago talking about our widget being extrinsic value, but to go one step further, that's the thing that we really want to sell up here and buy back down here. Well, what's one of the ways that that's going to happen? Time goes by. Time goes by, extrinsic values fall, and we're able to indeed, cash in from that just natural relationship of the option and of the position over time. So that is a deep dive into the relationship between time and extrinsic value, the first driver of the three drivers that impact extrinsic value. So, John, bring us into the market. Man, how about that? That was a little something different today. Just to kind of mix up, where are you guys? You guys still there in YouTube land? Man, I was so keyed up to get going there. I completely forgot. To even pop into the YouTube thing. I don't even know where we're at now. But man, look at you guys. I see you guys, man. So now we get back to kind of our regularly scheduled programming here where, we're in the markets, we're doing commentary. I still got the monovision. I can't see a lick. And so you guys got to carry me today because apparently, man, look at this market. Man, wow. EME S&P is down 67. Hold on. Let me I forgot to grab my drawing tools here. Let me see if I can do it though. Let's see. Let's move that over. Let's do, let me know what you guys thought about that. So we're going to start mixing in, that only took me what? I thought it would take me 5. It took me about 11, right? About 12. I'd say that's about right. It's a pretty good conversion, I think. And so we're going to start mixing in some more kind of educational content in the beginning because I think that's good because it gives us a chance to do some more evergreen stuff on the show. We can clip it out, put it on YouTube and find some more people and just bring some more people into the ecosystem. But you guys, and plus not only that, but you guys let me know, what would you guys like to hear me talk about? I'm very open. I'm totally open. and I'll probably focus more on kind of like a beginner style content for a while. And we're going to finish off this extrinsic value little series. I'll do the second piece on Thursday. I'll do the third piece on Friday, and it'll be very similar. We'll just hit the hole pretty hard to begin the show. And then of course we'll get into the market if there is a market. I mean, EMI S&P is down 68, risk-free instrument down 280, Boomers down 370, Russell down 21 on the day. Got bonds down 27. You got notes down 12. Man, oil up $1.50. I think it's $1.50. I don't know. It looks like it's green. Man, look at the shifties celebrating. Up 77. Man, where are my Hunt brothers at? Hold on a second. Silver's up a bunch too, right? I think. Silver's up like $1 maybe? Okay, 90 cents. So up to 41.63. Man, look at that. That's crazy stuff. Man, this metals run has been wild. And even like today, it was a huge drop. Like early in the day, I think, right? Let me look and see. It was yeah, it was let me do like a 5-minute chart. Yeah, I mean, like if you go all the way back to like this morning, you can see it dipped under 41 there for a second. I mean, I think that's 41. I have no idea. It's all kind of a blur. I can make out the reds and the greens, but the actual numbers, I'm not so lucky. And so so there's silver. Big move into the Labor Day weekend, and then obviously continuing here today. You got volatility's up a ton today. Volatility futures are up 80 something cents. And then the VIX is up over 18, it looks like, up $2. And so, man, that is a crazy position, crazy market. So what I want to do though, man, let me see where you guys, man, I see you guys in the house. Let me see if I can figure out where we started. Can I figure this out? You guys are kind of trolling me on the intro stuff. That's good. That's what I'm expecting, right? I'm expecting very B- feedback from you guys. Like, you don't have to hit the ball out of the park. I'm not expecting that. I'm not even expecting singles. I'm expecting weak ground balls to shortstop. Like, that's what I'm expecting on you guys. But you put it in play. Like, you're making contact, man. So that's some good stuff. But man, I see you guys. I see Ash is in the house. I see Wolf in the house, man. Joe's in the house. Joel James in the house, man. Chuck's in the house, man. Look at this. Sergio's in the house, man. Look at this stuff. And it's so funny. It's so you guys are trolling me about it being pre-recorded at first. No, man, that was like, you know, you guys got Dr. Jim like professor mode, right? You guys got like, I mean, you got Dr. Jim YouTube mode, right? Like, I mean, for you guys on the live show, like now it's the Wild Wild West, right? We do whatever we want, right? I mean, we're hopefully creating some value, hopefully helping you out where you're at, but we have a lot of fun and all those kinds of things. When you got to button it up for YouTube, it's like, man, you got to actually like, you know, kind of pretend like you know what you're talking about. It's like you've got to fool the algorithm into its thinking that this is quality programming, you know? And so just the, you know, B- humor is not going to get you there. Like it may get you a little bit of the way there, but it's not going to get you all the way home. And so, but that's pretty funny that you guys were trolling me about it being pre-recorded. That's good stuff. But let's see here. Where are we at? So I want to do, man, I'm like totally thrown off. I'll have to get used to this new kind of thing. Cause obviously I'm used to kind of starting the show and then kind of getting into a rhythm that way. But, that certainly didn't happen. Now I can't see anything. But if we go into the cues, I'm only trying the monovision for 2 more days. A couple people reached out. David C., I know you emailed me. Thank you. I haven't gotten back to you yet, but thank you so much. People saying that the monovision is like amazing. People saying that the monovision, like it saved their life, it saved their marriage, it saved their eyesight. I'm like, yeah, this is crazy. It's been 4 days now, almost 5 days, and I still can't see a lick. I mean, I got one eye that's hitting you at a distance, and I got one eye that's hitting you up close, and both eyes are like, I don't know what's going on. And so that's kind of my take on monovision. But apparently, again, your brain will adjust, and you know, maybe the average brain. I don't think my brain is going to get there. But I guess we'll wait and see. Hopefully, we'll get a little bit of something. And so, but if we look at the cues here, so let's go to the cues. Let's go to an actual position here. My wife is texting me saying, hey, what are you doing? Oh, man, I can't do it today. So if I go into the cues, you got the cues down $7 today. It's a pretty big move, obviously. You know, you got the NASDAQ down, yeah, 285, 286 now. If I go in here, though, you can see we have a long put spread on 580, 570, and we are now comfortably in the money. And so because we're comfortably in the money, we do have a nice little profit on our hands, you know, for this position. You know, the same cannot be said for our Chipotle position. We failed the Chipotle check, of course, last week. The same cannot be said for our Best Buy position, right? Shout out to the P&L Open Bros. You guys win again today. But when it comes to QQQ, we're in a pretty good spot. Now we could hold it, of course. We could say, hey, it's going even lower. It's just going to stay down here, whatever. I mean, we've got all kinds of things coming on down the chutes this week, I think. Didn't Trump just make an announcement? I think Trump just had an announcement. I think it was scheduled for 2 o'clock today. It may have been central, maybe, I don't even know. I just saw it kind of come through the wire last night. I'm like, all right, you had that. This morning, I think we had JOLTS, right? Which, I mean, it wasn't any old JOLTS. That was the most important JOLTS print that we've ever experienced in our lifetime. So we are lucky. We are lucky to be here. Tomorrow, I think you've got Canadian durable goods estimate forecast revision. Then Thursday is something else. You always got the Thursday morning jobless claims numbers or whatever. And then Friday is NFP. I mean, man, I don't know, guys. I don't know if we're going to make it. But anyway, with QQQ, we're at 17 days to go. I think it makes a lot of sense right now to go ahead and take this trade off. Like, we clearly have an economically significant profit. Even from my shooter McGavins that might be watching the program, up $240. That's pretty good. Like, that's a pretty solid, outcome for almost any strategy. But, when you think about the fact that, we bought this guy for, it looks like about 390. It could be 393, but I'm not exactly sure. We bought this guy for 393. It's currently marking at 630, but the maximum value is going to be $10, right? This is the maximum value that it could reach. So that would be plus, $607. Right, plus 607, which of course is 607, because everything is quoted in, it's on a per share basis, the quote, and then the total P&L, of course, is going to be the contract size. And so the fact that our maximum profit, we've got another $4 that we could make out of this. We've got another $400 that's on the table here. But of course, I mean, this thing could completely reverse course, just like, the metals did this morning, and then they reversed back again. They reversed the reversal. Like, that's crazy stuff, man. The same thing could happen in the overall market. I mean, we could be green today. Like, something crazy could come out at the end of the day, whether it's from the administration or something else. And the next thing you know, we're NASDAQ up 30, NASDAQ up 50. And so, we've had to battle this position a little bit. I think it makes a lot of sense to go ahead and just take this guy off and then move on to, to something else. Hopefully greener pastures. Although at this point, I think we should just settle for something that's only lightly brown. If it's just lightly brown pastures, I think we'll probably go for it. But if I go to QQQ, we'll go ahead and see the B minus humor is back. Like, it went away there for about 8 minutes to start the show, but don't you worry. It'll hit you when you're not looking for it. So if I go to the QQQ, I go to close the position, 620. Let's see if we can get this guy filled. All right, so we got filled. I think it even got improved. I'm not exactly sure. I'll have to check later when I get out my magnifying glasses. But, all right, so QQQ is over and done with. I also wanted to take a look at, I just kind of wanted to give a verbal cameo to Meta. So take a look at Meta. So Meta, man, we are close. We are so close, right? So as long as they don't reverse, the reversing of the reversal, we should be in good shape here with Meta. I mean, right here, we're inside of 21 days to go, right? We're at 17, but it is defined risk. So, you don't have quite the same urgency that you might have with like a strangle or like a ratio spread or something like that. And so it's okay if we've got to sit on this guy a wee bit longer, even all the way to the end, if that's what it comes to. But now it's like, man, we're only what? Wow. I mean, you've got a 720, 730 short call spread with the stock at 732. We only need this thing down a couple points. And then all of a sudden we'll start chipping away at max loss, which is super, super nice, right? Because again, you've got to crawl before you can walk. You've got to jog before you can run. It's like, yeah, I would love to get this thing into the green. I'd love to get this thing into some form of profit. But for now, it's like, man, I'll just take, just a little bit of a chipping away at the max loss there. So, we just need Meta down a little bit. And then, of course, if, Meta slips down under 720, then, I mean, that's bonefish. That's automatic bonefish reservations, right? Again, I don't make the rules. It's just bam, bam. Like, in fact, I've even got it set up in the platform. Right, it makes the reservations for me. Like, some of y'all are out there like setting up like dividend reinvestment programs. Like, don't be doing that. You need to be setting up the Bonefish auto reserve function that is available. It's only on the downloadable version of Tasty Trade, I think. I don't think you can do that on the web-based version. But the devs are working hard, man. They're working hard, and so they'll make it available to you on even the web-based version here pretty soon. But for Meta, it's looking pretty good. The other thing I want to talk about here today, because we are at about the halfway mark of the show. And wow, I've been super efficient today. We did the extrinsic value thing. I've gone through everything in the portfolio. We've even weaved in a couple of very below average jokes. And here we are at really basically the same spot I would be at with, having kind of started the show like we normally do. So that's some good stuff. But let's go to HIMS. So HIMS, we're kind of getting beaten up on HIMS a little bit. You've got the stock down to 41. We have a 44.51 strangle on. We're at 17 days to go. If I grab my Glacier Freeze here, 17 days to go on the HIMS strangle. And so the time has come, my friends. The time has come to go ahead and adjust this strategy to some degree. You know, if we were closer to like 43 or 43 and a half, I might say, all right, let's just kind of hang on to it and maybe not do anything. But the fact that, you know, the short put is further in the money, we're a few points in the money now. I'm kind of thinking, all right, let's at a minimum just roll it out. We may not necessarily adjust any of the strikes, but let's go ahead and at least roll it out to October. Since we're inside of 21 days to go, you know, we can kind of reset the clock a little bit. Slow down all the Greeks, bring in more credit, you know, improve the extrinsic value, widen out the break-even points, like all the things that come along with, you know, making the adjustments, the way that we like to make the adjustments. And, you know, we like that trade because we think the gimmies are pretty solid, you know, in relation to having to hold the risk for a greater duration of time, which, I mean, that's the game that we're playing anyway. Like the game that we're playing is, you know, kind of giving our losers duration and managing the winners a bit more quickly. And so I think here, let's just go ahead and let's just highlight, let's right click, let's roll this guy out to October. Man, look at that credit, 277. Man, look at that. That's crazy. 277. But you always got to do a little check. Even if you've got monovision and you can't see anything, try to see if you can't figure out what's going on down there, because look at that. If I do a little Sosnoff on you guys and I lean in, I see that is not the same strike. So hold on. Let's color code this. Not only for your benefit, but for my benefit. That's a 44 put, right? That's a 44 put. That's a 44 put, right? That's a 44 put. So those two match. That's perfect. That's exactly what we want. Okay, let's grab a different color. Let's grab magenta. That's a 51 call, the one that we have. Okay, but look at what they're trying to give us in October. That is not a 51 call, I don't think. Again, with the monovision, we're only operating at about a 60 to 70 delta at all times. Let's grab a little lilac, though. That's a 50. That's a 50 call. So we've got a little issue on our hands, right? So they're trying to, whoever they might be, Sazons, Batistas, Malmats, Sheridans, etc. They're trying to move us into a 50 call. And I don't know that I want to do that. So let's go ahead and let's do a little bit of investigation here. Let's go into October. So it all has become clear. Not to me, of course, because I have monovision, but to y'all out there, it should be pretty clear. So you can see in the October cycle, we still have a 44 strike available to us. So that's good. But in the October cycle, we do not have a 51 strike available to us anymore. Now, we could probably go into the weeklies and find the single dollar strikes and whatever, but I don't really want to do that because this is not going to be that big of a difference. But this is why I've been moved to the 50 strike. You know, initially against my will, but now it makes sense. Like I can't do a 51 strike in October because it doesn't exist. And so as it gets closer and closer to expiration, the dollar white strikes will show up in that cycle. But right now, since there's still 17 days to go in September and October is 45 days into the future, you're not going to get that strike flexibility in a product like HIMS or even a lot of individual stocks. You're always going to get that type of flexibility in like the major indexes, SPY, QQQ, whatever. But yeah, you're not going to find that with, you know, HIMS. And so unfortunately, we have to move in from the 51 to the 50. Okay. But is that big of a deal? Not really. And the reason why is because remember, you know, whenever you make an adjustment to a strangle, what are the typical adjustments that we make? You roll out in time. So we've already checked that box. But then the other thing you oftentimes will consider in combination with rolling out in time is rolling the untested side in. Now, I wasn't going to do that originally because I was like, all right, if I get enough credit from just rolling it out, let's kind of leave, you know, that really valuable real estate between the short strikes and see if we can't get a little bounce back in HIMS. But here, because the 51 strike is not available to me, it is essentially a de facto rolling in of the untested side. Now, if not too much, it's just a titch or maybe a half a skosh. I think that's the conversion. It's a half a skosh for every one titch. Kind of like how you want, you know, 1 delta for every 2 theta. It's half a skosh for every 1 titch. And so right here, we're only moving in by 1 titch, right? And I guess 1 titch is also equal to 1 strike. I just kind of figured that out too. And so this all pretty much checks out. Like I like the way that this adjustment sets up. You know, your 44.50 strangle in October. We're picking up another 275 on the credit. That's really not too bad. And so I like everything about this adjustment. I think we just go ahead and do it. And then, man, I miss you guys. I got to see where you guys are at. And we'll just kind of go from there. So, all right, let's see. If I go to 275, no takers, let's just do like 270. Almost bought a car last night. It didn't work out in the end. But yeah, almost got myself a little Mazda 3. And so, it's like a 2013. So, I mean, it's not that amazing. But I also have been scouting out some BMWs, right? Man, you can get for like a 2011, 2012 BMW. I'm like, man, these are some nice cars, obviously, right? But they're not even that expensive. They're like $5,000. I'm like, this is crazy. Like, why are these so cheap? And then, of course, you kind of look behind the curtain and you realize, oil change, $400. New tires, because you got to get racing tires, right? $1,400, right? Brake job, $6,000. Well, I mean, it's crazy stuff, man. But I'm like, I don't know. Maybe I can still kind of do a little Beamer action. I don't know. We'll see. We'll see. I don't think it's gonna happen because I don't think Autumn will let it happen. But we'll see. All right, let me go to you guys, man. Let's surprise and delight some people in the middle, man. Where are you guys at? Oh, Jay says somebody get the doctor a referral to an optometrist. No, I like my doctor. She's great. She's really great. I mean, she just told me, let's try monovision first. She's like, some people love it, some people hate it. She's like, try it for a week or two. If you don't like it, there's a lot of other things we can do. And so I'm like, all right, we'll give it a shot. Because the other option is going to be a multifocal, which is like, it's the craziest thing ever, man. There's going to be different prescriptions like in the actual contact lens, right? Let me know if you guys are out there rocking multifocals. It's super, super wild. Around the outer edge of the contact apparently will be distance. Right. So that will be kind of seeing out like, like signs and faces and whatever. But like around the pupil, like the really like inside part, that'll be for close up. And so I don't know how that's going to work. Like I'm always going to be like that when I'm looking out into the distance. And then I'm going to have to do one of those jobs. Like when I'm looking at the screen, we're just going to have to get like super serious, kind of like a James Bond thing, which again, it makes sense for me to have a BMW. It's all just coming together. Like if you just put the pieces together and just fit them naturally, this is kind of where it's all headed. But anyway, the multifocals are next up, and apparently most people like multifocals over monovision. But thank you, thank you, Chase. And then Edgar says, Dr. Jim, close one eye. I've been doing that a little bit, right? I got the eye patch in the pocket just in case, right? And so I'm hoping we don't have to get to that spot, but you'll know it when you see it, man. Like you'll know it's happening. And so let's see. But Brian Dowdy says, I think that was the skinny option smashed in from theory to practice. Yeah, it's just a little something different, man. We're just trying to shock the muscle. And then, Chuck says, can you please recognize the fact that I am in the house? Man, I certainly can do that. I'm surprising and delighting all kinds of people in the middle today, man, because everything is totally different. And let's see. Chuck goes on to say, I think the long side has more risk, as you can only manage money if it goes in your direction, unlike short side that can make money in both directions. Well, yes, you're applying, kind of a, like you're a couple layers deep on the onion there. I'm talking about you just pulled it off the shelf. Like, let's take a look at this onion together. Just the outer, shell of the onion. Like you've already peeled back a few layers. You're like, man, I'm knee deep in this thing, right? And you're thinking more kind of abstractly about selling options and buying options and what you can do and all that kind of stuff. And I don't disagree with anything that you said. But at a base level, again, we got to start with an onion and put it in the basket. We can't be peeling off layers like at the grocery store. Like that's the kind of stuff you do when you get back home and you figure out what you're going to make with the onion. And so, but I agree with you. And I was able to agree with you with a very C+ level analogy. But let's go all the way to the beginning. Man, where are you guys at? I don't know where, I forgot to put my comment in, so I don't even know where the beginning is. But I think it's somewhere. Oh, it looks like it's around Ash Finn. So thank you, Ash, for being a part of what we're doing. I appreciate you so much, my friend. You're certainly part of the core position, so thank you so much for being here. And I appreciate you, man. Wolf in the house, or Wolf in the house. Dr. Jim, how are the eyes? Yeah, it's not great. It's not great. But again, I'm going to give it another couple days. Maybe it's like a light switch, like tomorrow, where all of a sudden my brain just knows right eye is distance and left eye is up close. It doesn't seem like that's going to happen. But I mean, according to the internet, it's happened to a lot of people. But according to Grok, which is my AI tool of choice, just because it's the easiest for me, because I already spend way too much time on X anyway. Grok says 3 to 1 people prefer multifocals. And so I'm not in the like I'm in the majority here in terms of monovision not being the solution for my being able to see up close. If I have to go glasses, I'll go glasses, whatever, that's fine. But I would really, having been a contact wearer for my entire adult life, I would like to continue to be a contact wearer, if I can. Or maybe I just go with the Sosnoff strategy and I just can't see, right? I mean, he's making it work for him, right? Sosnoff strategy, few $100 million, like yeah, maybe we can do it. I don't know. I'll have to to work on the whole few $100 million part, but yeah. And so let's see. Big Deal Donuts in the house says, "What did I miss? Who's up next?" Oh, we're here, man. You didn't miss anything. You are right where you need to be, my friend. And so let's see. Ash Finn's back in the house. Let's see, Joe. What's up, Dr. Jim? Whenever talking about profit targets, let's say 50% for a strangle, how is this impacted after rolling? Yes. Is the target 50% of the original credit received or the sum of all the credits? This is a great question. This is a great question. So I'm going to give you my thoughts in real time right now, but let me give you a resource to look at too. So I've gotten this question so many times in the past. So if you go to the YouTube channel, which obviously you're already on the YouTube channel, but if you find the Crash Course playlist and you go to there's a whole Crash Course about rolling. I actually have one little episode in the middle. It's not in the beginning because it wouldn't make sense to start with that. But in the middle of the Crash Course, I have an episode about specifically profit targets after rolling. So if you want more resources, in addition to what I'm going to say for the next couple of minutes, you have that. Like you have, more examples and kind of, more buttoned up commentary than kind of the Wild Wild West, which is what we're doing, right here and right now. So definitely use that resource. But generally speaking, you have a few different options. So number one, you can go for 50% of original credit collected. So let's say you collected $2, right? You stick with an original $1 profit target. So if you collect $2 and let's say you roll for another $1, right? The total credit collected is $3. If the total credit collected is $3 and you're looking to make $1, then you buy it back for $2, just to make sure we're all on the same page in terms of the actual numbers in the example. That would be still targeting your original profit target. I think that's okay. I think that's fine. The other option that you suggested is, what if I go for now 50% of the total sum? So again, with my example, $2 original credit, $1 on the roll, $3 total, 50% of the total package now will be $1.50. So I'd be buying it back for $1.50 to make $1.50. Should you consider that? Not in my opinion. You could do it. Of course, you can do whatever you want. But I don't really like that move simply because, keep in mind, whenever you roll a position, at least 95 to 97% of the time, when you make a roll or you make some kind of adjustment, this is not necessarily a desirable position. Like, you're not doing this because you want to do it. You're not doing this because you're like, oh man, this is working out so great. Let me kick it out even further, right? Like, I mean, of course, some traders might do that and people trading a totally different style might do that. But the way that we approach the markets, it doesn't really jive with the way that we like to view things. And so because of that, because you're already in kind of a defensive type of mindset, I don't really like pairing that with this ratcheting up of the profit target. You know what I'm saying? That seems like a mismatch. That seems like you're squaring a circle in a lot of ways. And so I don't really like that option. I like either A, going for the original profit target, or even B, actually paring down the profit target completely. So maybe saying, hey, I picked up $2 on entry. My original profit target, I should say, was $1. I rolled for another $1. Now I've got $3 in my back pocket. Man, if I can buy this thing back for $2.50 and make 50 cents, I'm happy with that. Like, I like either sticking with the original or paring it down altogether. I think that those are the moves to make. But check out the rolling Crash Course. It may give you a few more things to add on top of that. Brian Dowdy's in the house. What's up? Sam L's in the house. Sam L says, I guess the doc is not live. I was live, but I fooled you guys because it was so buttoned up. Man, I'm going to wear a shirt and a tie on Thursday. I'm going to have you guys convinced it can't possibly be me. It can't possibly be live. Like, we're going to go glasses, shirt and tie. Like, I'm going to wear like a sport coat. Like, it's going to be unbelievable. I'm going to have you guys totally kind of thrown off and thrown for a loop. But Sam L says, happy Monday, doc. A new week, fresh charts, and just enough caffeine to pretend our P&L bro isn't already red. No, the P&L open bros are never red. They're always green, right? Just like every good internet food trader that's out there. I mean, they're buying bottoms and selling tops, man. Like, they're not getting the best possible tick. I mean, come on, man. Like, we know how this works, right? And so they haven't seen a red position. I mean, it's been many, many years now. But yes, we are ready to go with a brand new week and plenty of caffeine, of course. I mixed it up today. I went with well, actually, I had it. It was left over from yesterday. But at my gym, because I do like half of my training in my garage, and then there's a gym down the street that I go to as well, which he's got a lot of great equipment. Awesome gym. Pack Animal Fitness in St. Petersburg. It's unbelievable. He's got a little vending machine, and they've got the Rain, REIGN, the Rain pre-workout drinks. I tried that. It's not bad. It's not bad. I'd probably put it on par with Ghost, maybe slightly behind Ghost, I think, but it's very, very similar to kind of a Ghost type of deal. But let's see, Rancher's in the house. What's going on there, Rancher? And then let's see, where else are we at? Big Deal Donuts. Tuesday here. Oh, did I say that it was Monday? I may have done that. That's very possible. And so Joel James, Dr. Jim, a happy Memorial Day. Well, it was Labor Day. At least it's the last day the market will exist. It might be, man. I don't know. NASDAQ down 300. The S&P is only down 75 now, but they were down 100 earlier, right? Gold closing in on 3,600. Man, that's crazy. This drop is going to be biblical. Man, this drop in the metals that's coming, whether it be later today, tomorrow, 37 months from now, it's going to be, man, it's coming. But if we look at the EME S&Ps here, you can see that we had them down to, man, I have no idea what that says, but that's about 30 points lower, I guess. I think they were down about 100 on the low. And so now they're only down 73. And so that's a little bit of a rally back. I mean, it's going to be very interesting to see, what happens. Are we going up here? Right? Ooh, are we going down here? Let me grab blood red. Ooh, man, I don't know. That's not good. Hold on. Are we going up here? Let me grab green. Maybe we're going way up here. Right? That's very possible. Man, I'll tell you what, if they rally, what's that? Is that 64.80? Man, if they rally them up to 64.80 today and they really do close them green, I give up, man. I give up. They win. Everybody wins, right? We lose. All of us lose. They all win. That would be really, really, really something after a day like today, because volatility's back. I mean, if you're a high volatility premium seller, this is what you want. This is what you train for. This is why you do all those extra sets of walking lunges for a day like today. Oh, Ash Finn calling out Joel James. Good call there, Ash Finn, on the Memorial Day, Labor Day mix-up. But let's see. Edgar's in the house. What's going on there, Edgar? I appreciate you earlier, too. Talking about the Monovision, I think. Sergio's in the house. What's up? Sunflower's in the house. What is up? I appreciate you guys so much. And then here come the trolls on the pre-records. Let me see. Oh, Ash saying he loves the educational stuff. Awesome, man. That's great. We're gonna mix it in. Again, we're doing Thursday, Friday this week, and then I don't know what's gonna happen next week. Next week we were gonna be out for Legoland, but I think we might have to change that. And so I'll keep you guys up there. I'll let you guys know. But I don't think it's gonna be next week. Let's see. There's Brian talking about the skinny on options smashed in from theory to practice. That's right. That's right. Rancher, time is money. I get it, Dr. J. That's right. It definitely is. There's Edgar with the closed one eye. Yeah, that's right. That's funny. That's good stuff. Emmett Morrison, Dr. Jim, how about Central Michigan's last second win over Oklahoma State this weekend? Really? I didn't even see that. But fire up chips. Fire up chips. That's awesome. I'll have to check the highlights on that one. Yeah, I didn't really, I know that college football started this week, and I mean, my Ohio State Buckeyes look pretty good, man. Like, they've been a juggernaut since day one. I've been telling y'all, like, people are talking about Arch Manning, people are talking about all this other stuff. I'm like, talking about Matthew McConaughey. I'm like, forget about all that, man. It's all about Ohio State. It's all about my Buckeyes. It's like, man, they look good. They look really, really good. But fire up chips, 100%. Andy B, AB, I'll always be learning, Dr. Jim. I like that, man. It's a great attitude. It will carry you. It will take you very, very far, my friend. No question. Let's see. Sam L says, Dot Gold is shiny. Peter Schiff is tweeting. And the shifties are out here acting like it's the only asset that exists. Yeah, they're a bunch. I don't know who's worse, the shifties or the Hunt brothers. I don't know, man, because the Hunt brother bros, like, they're a special breed, man. Like, they're a special breed. I mean, now you've got silver up to, yeah, it's right where it was a couple seconds ago, up 90 cents. You know, I mean, you got to tip your cap, right? I mean, obviously, silver's broken through. It's like 300-year resistance, right? $40 whatever. I think it was 40 back in like 1985 or something. You know, obviously in $1985, so that would be like 8 or whatever. But it's like, man, and so they're all saying, all right, it's going to 50, it's going to 100, it's going to whatever. Like, come on, we all need to slow down because everybody knows it's going back to 36. Like, everybody knows, like, this is just one final little rope-a-dope before maybe it makes its final move. And, of course, by my essentially saying it's going to 36, it's on its way to 46. And so that's just, that's the way it goes. But what time is it? Man, I have no idea. Oh, my gosh, it's 2:43? That's crazy. All right, we'll get through a couple more. Let's see. Oh, Brian Dowdy. Hey, Dr. J, can you play CRM for earnings? Not going to do that today because we're almost done with the show. But maybe I'll try to leave a little bit of time on Thursday to do something else. But I feel like we've done pretty well with time today, given the newness of the beginning with the extrinsic value and stuff. And so, yeah. Let's see. Emmett says, which one? I suggest the one that makes his P&L the blurriest. Yeah, we're doing okay today, though. Obviously, we got rid of the Qs, which was our big winner today. And everything else is fairly muted for the most part. You know, obviously, again, you guys know the drill, right? Like this guy right here, this guy up here. Yeah, we don't look at that. Nah, we don't even worry about that. It's almost like it's not even there. Don't even worry about it. Like, look at that. Can you see it now? No, can't see it at all. So I'm gonna start to begin the show with that. That would be shooting from strength, right there. And so, but thank you there, Emmett. And Brian says, I need to know if I should go short or long. Yes. The answer is yes. And let's see. Chase says that we're going to fade whatever he does. I didn't do anything today, though. Today was just learning. Today was just education, which, of course, that's what it is every single day, right? You should never take what I say as actual trading advice, unless, of course, you're going to do the opposite. And so let's see. Brian Dowdy, Chase, and then, Tom's in the house. Just Tom Sosnoff watching the show. I know he's got a pretty slow afternoon for the most part. He says, hey, Dr. Jim, any advice on how best to get long bonds for a smaller account? Maybe. Hey, Tom, I appreciate you, my friend. Thank you so much for being here. Yes. So the best way to do it, my friend, would be to use, and I'm just about out of time, so I can't spend too much time on this, but man, I really hope you come back, and I hope you got some value from today's show. Use TLT. So TLT is going to be a bond index, and you can get as small as you want to. So if you want to get long, you could buy a call spread, you could sell a put spread. Those would be two ways that I would explore getting along in TLT, both with defined risk. You know, you have a smaller account. I'm assuming you're just getting started. So that would be a great way to start. And then later on down the road, you can start doing things on defined risk. You can maybe even do some things with like ZB futures or whatever. But that's all down the road for like a future project. But that's what I would do, Tom. TLT. Long call spreads or short put spreads. I would kind of do a little bit of research on both of those. And so, guys, I'm out of time. I got to run, but I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called. Oh my gosh, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's going on, everybody? I like gold. Back into gold. That's right. It's been on the move recently. Gold and silver. We'll talk about what's going on there. Kraft Heinz. This is an interesting one, I think. They decided to dissolve their partnership. We'll talk about the deal. And I got a story for you on the Kraft Heinz thing. And finally, where's crude oil going? Nice little move here recently. Crude's been fairly dormant for a while. Looks like it's starting to make a little bump higher. So we'll talk about those things and more. We'll take a look around at a market that is pretty weak today, and we also are just getting started in the shortened week here with the non-farm payroll being the big thing at the end of the week. And I just got to talk to you about the weekend. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I am your host, Jamal Chandler. Hope you guys had a great long weekend. I had a fantastic one, man. Started, I would say, Saturday. So that was really one of the things that I was really excited for. It was draft weekend, essentially, for me. I drafted basically every day of the weekend, except for Friday. It was Saturday, Sunday, and Monday. Saturday kicked it off. Some buddies of mine. I mean, I call them my basketball buddies because that's how I met them all, really. But I don't play basketball anymore, but they still do. But we have a fantasy draft league that's been going on for a while. And a buddy of mine's been doing it, hosting it at his lake house up north. So we hung out there, did the draft. Got a pretty decent squad. Two of my drafts this weekend, the bracketed ones, they're on Yahoo. I didn't feel like logging in. I could tell you about them, though. But both of them, I have a couple of players across the draft that I did on Saturday and the draft that I did on Monday. I have a couple of players in common, and they are Lamar Jackson, they are DK Metcalf, they are Alvin Kamara. I have those three guys in common in two leagues. Look, when you're drafting in multiple leagues, if you can get similar players, it helps, right? Make life easier. Otherwise, you're watching that red zone and you're going crazy over all the different players that are doing different things. You're just not even sure which way to go sometimes, especially since you're playing against people who might have, people you have in the other league. It's wild. So I tried to make that part of my life a little bit easier. Let's go to the webpage here, and I'm going to show you. This is for the Tasty League. So I had, I don't even remember what position I had. I will say I was a little distracted during this draft, and the reason why, and for those of you who watch college football, you probably know why. This draft was done on Sunday night. The University of Miami was playing Notre Dame on Sunday night. That's a huge game for me. I went to a HBCU in Atlanta, Georgia. Small school, especially back then when I was going, nobody really paid much attention to the football team. They actually gotten better at sports. Went to graduate school in Wisconsin. Yes, I'm a Badgers fan. But before all of that, I grew up in Miami at a time when Miami Hurricanes football was everything. And all those documentaries and things you see, they were from the time when I was growing up. So, as you can see, I got Dak Prescott. I got Isaiah Pacheco. I got Caleb Johnson, who's supposed to be the young running back who's going to take over that situation there in Pittsburgh. I got Justin Jefferson, which is nice. I got Justin Jefferson in a couple of leagues. I'm definitely long some Justin Jefferson shares. Drake London should be good. You imagine Michael Penix Jr., he can spin it, so he should be the recipient of that. Jackson Smith and Jigba, he's on an island there in Seattle, but he's the top dog now. George Kittle is on my squad. Josh Jacobs, I got him in a couple of places. Big Deal Donuts. That's funny. I like that. RJ Harvey. We'll see how he plays out. I mean, he ends up should end up starting, I would think. Younger dude, newer. So we'll see. The only question I have on this team is whether or not I want to go with Dak or I want to go with Justin Fields. Love to know what you guys think here. Give me your thoughts. I would love to know. So, yeah, that's the squad. Look, I don't like these preseason rankings, but we're going to use it as fuel, okay? And what I mean by that is that they rated me as almost the third worst team. I'm number 8. Yeah, this is ridiculous. I mean, seriously. Vecchio is surprisingly number 1. I don't even know who he picked. Who knows? The Naked Stranglers. That's producer Paul. He's number 4. Paul, did you win all last year? I can't remember. I think you knocked me out of the playoffs. I do remember that. But who else? You know what? I don't even remember any name. What's your name on here, Ryan? Remind me. I don't remember what your name is. Glenn, you guys know Glenn. Glenn's in the league this year. Producer John is Jerry's kids. So I thought this was pretty funny that Frank did this. Glenn's mom's favorite team, I think is what his name is. That's pretty hilarious. Anyway, yeah, we can pull up slides now. So that's the fantasy weekend. Basically, it was a huge weekend for me. That's basically what I did, and it was just football in general. I mean, not only was my favorite team on in the Hurricanes, and we won. We beat Notre Dame. That's always nice. But then my kid had a game. My youngest kid who plays football. It's his second year. I got to tell you, that's probably the thing that made me the most proud this weekend. This dude was an absolute game wrecker in this game. He had like 2 tackles for loss. He blocked like 4 passes from the other team's quarterback. We ended up winning the game. He blocked a punt. He had a monster game, dude. It was awesome to watch, man. And it's so much so that 2 weeks from now, we're supposed to go to this wedding for one of my brothers-in-laws. I talked my wife into letting me take him later. We're going to go later in the day because he's going to go play in the game. He plays both sides. He plays like the whole game. They need him. I told her we got to stay. You can go ahead. We're going to come up later. Who cares about weddings anyway? The reception is where it's at. Gold hits an all-time high fueled by rate cut expectations. That's right. Low interest rates are good for a non-yielding asset like gold, and so you would expect gold to continue to go higher. This has always been the thought process, but the truth is until we started getting the idea that they were possibly going to cut rates, especially after Jackson Hole, that was the emphasis for gold to push higher, and it certainly has been. I have not been interested in gold for a while. I was saying it was not the same trade like we were seeing last year. It was not just taking off. Now, all of a sudden, gold's taken off again. We're going to look at that chart in a little bit, but gold has been flying higher. Same thing with silver. Over the weekend, they really did it, right? Even on Monday, which was just a futures trading session, you could see them absolutely taking off. And I'm just I'm thinking that there's a little bit more bullishness we're going to see in gold and silver over these next couple of weeks. Kraft Heinz, they did that merger in 2015. I won't forget that one, and I'll tell you why in a second. But they're calling it quits to the merger. They're going to split into 2 separate companies, one that's focused on a grocery business and then another that's focused on sauces. But they just were never able to achieve the growth that they wanted. This thing was bought for $45 billion market cap, 2015. I want to say it was like April, something like that, April, May. Maybe I'm wrong, but the reason why it's memorable for me, at that time I was running this strategy where I was looking at names that were oversold on RSI and eventually possibly bounce back up, and I'd go 3 months out and buy upside calls. And the strategy mostly worked. And then every now and again, like a name, I'll give a name maybe a month and it just didn't do anything, and I'm still long it for another 2 months. But I just, again, I'm long upside, right? And so those calls are kind of, upside calls typically kind of fade away if you're not really getting anywhere close to them. And they weren't expensive. I mean, this was a consumer staples name, right? I mean, it's no different than buying like Procter & Gamble calls. They weren't that expensive. And the stock right at the time, I don't remember, might have been trading $40-something, let's say. So I just remember one day at the end of the day, which a lot of times if I close positions, I usually try to close it at the end of the day. And I closed it at the end of the day. I closed these calls. I might have had like a 50 lot of calls on. I might have had like a $5,000 position worth like 50 lot of calls. I mean, it was, and I closed it at the end of the day, at like literally 10 minutes after the close. We get news and stuff. Warren Buffett and 3G Capital are buying Kraft and merging it with Heinz. And I was like, wait, what? So I was long Kraft calls. Folks, I missed out on easily like a 50 grand trade. I was really pissed off about that. I mean, that one hurt. It really did hurt. But I just had to kind of take it on the shoulders. It is what it is. But I remember that merger very well because the stock shot up right after the close. I just could not. I literally just closed the calls like 10 minutes earlier. It was so annoying. Well, turns out the joke's on them. It's stock has dropped quite a bit over the last couple of years, and they just never achieved the growth that they wanted. But the cool thing for us is they're going to split into two separate companies, so maybe this will be something interesting to trade. I'm not sure, but we'll wait and see. But they're already working on it. I don't know when it's going. I think it's not going to close for like another year or something like that. We'll see. Finally, crude is rallying. About 2% today, at least it was at one point in time. Yeah, 2.4% on the day. There is an OPEC Plus meeting coming out on Sunday, and there's some thoughts that maybe they could end up sort of reducing supply once again. So that's why you see oil moving a little bit. Now, this is a little uncharacteristic for oil. We haven't seen a move like this in a while. I mean, it's been fairly quiet. Of course, there's been times throughout the year where there's been some geopolitical stuff that has pushed it, but we hadn't seen this more recently. And I wonder if this is a beginning of a move for oil, or is this just an opportunity to sell a little bit of vol, a little vol pop? And I think it might. I think it might be more of the latter. I would play it for more of the latter, but you could easily see one of those situations where this could kind of climb throughout the week, and then you get into the weekend, and then they actually do say something about supply cuts, and then boom, oil's trading 75. So I bring all that up to say, even though it's a sell vol situation right now because it's 22 IVR, I'm just going to wait until it's actually higher. Maybe it's 30 or 40 or maybe even 50, and then I'll get a little bit more interested. But right now, not going to do anything. Leftovers. Google is nothing more than a fringe player in the smartphone game. Let's move to the next slide. This is a slide for Japan. Is leading the way, as you can see here when you're talking about this is share of respondents who use the Google phone as their primary smartphone over the past year. So in Japan, it's 9.8%. What are they smoking? Canada, 6.8% using the Google smartphone. United States, only 5% penetration in the smartphone market. It's really interesting, right? UK, basically the same, 5%. Germany, 4.2%. India, 3.9%. I kind of would expect a little bit more in India, I would think. France, 3.4%. And Spain, 1.7%. So Japan is showing you the largest penetration in the market for Google Phone, but I think it's just not interesting to a lot of people. And I wonder if their phone efforts are going to fall flat with all this stuff that's coming forward. I mean, if you're not going to have your own browser, if they're going to be forced to sell their own browser. But I think they came out with that. I think that's been ruled positively in their favor recently, right? On Friday? Maybe that news came out? I don't remember. I thought it came out on Friday. So they might not have to sell Google Chrome, but that's a huge part of what they, that's their main thing on their phone probably, right? And so if they don't have that for some reason, that could change things. But I don't imagine this is going to be more than a fringe player ever, you would think. Apple's got the dominance. It's really going to have to be somebody else to eventually take that dominance away from them. Let's move to the next slide. So yeah, we got a little bit of all pops today. We got one in silver. We got one in gold. We got one in SPY a little bit. And this makes sense. You can always see that silver is always trading a little bit more than gold here, a little bit higher as implied vol level, flat implied vol level. Right now, looking at around 30 for SLV. And again, this is what I always talk about. This is one of the reasons why I'm not really that interested in selling gold at times, because even a vol pop in gold takes it from 15 to 20. I mean, that's not nothing, but yeah, you want higher levels, I guess. When I sell something, when I sell vol, I want to be able to at least make like 10 points on it. You know what I mean? Like, that's kind of how I feel about it. So that's why I typically wait until vol's a little more exaggerated. And when it's in the 20s, to go from 20 to 15, I feel it's just a lot longer versus something that's at 50 to go to 55. Like 55 to 50, like it just seems like it's a lot faster. Maybe it's just in my head. My point is like things that are like 50 vol, they actually ebb and flow vol faster versus something that's 20 vol. That's really what I'm trying to get at. Let's move to the next slide. I tell you, it's a little interesting today to look at the Bitcoin being up versus stocks being down. The correlation in here has been about 0.5 or higher for a while. And I think this is the one thing that's actually working well and saving the day from not being down 150 is the fact that there are some positive green shoots out there. And I think this is one of them. The fact that Bitcoin is holding up well today means people just funneled their money into that today versus, everybody selling out of everything equities wise, which is not the case because there are some positive names in the equity space today. But this is just an interesting factoid to me. Bitcoin and stocks moving in a different direction for a change. Let's move to the next slide. So what we got going forward? This is basically the month right here. I probably don't have everything, but I have the crucial stuff. Non-farm payrolls are on Friday. It'll be we'll see if they can keep it positive for the fourth month in a row as far as jobs created. PPI is the week after, and then CPI seems to be a little more meaningful, also the week after. There's a little bump there on that Friday. I'm not exactly sure what that is. Friday, September, what's today? Wait, when is that Friday? Friday, September, not the 19th, but the 12th. I'm not really sure what that little bump is there, unless there's something I'm not thinking of. I don't know. FOMC is the week after. That's going to be a big one, man. That's going to be a big one. I really do think so. Because we're getting rate cuts, and then you're going to wonder if they're going to signal for more rate cut. But at least right now, you're expected to get a rate cut, and over 90% chance that we get a rate cut. Options expiration in September. It should be a big one. That should be a quadruple riching one, I think, because it's a quarterly one. And then that'll be the end of the, not the end of the quarter, but there will be the end of the quarter or the end of this month at some point. You can see that following week, though, with PCE fairly flat, not a whole lot happening there. It's typically what you would expect, basically towards the very end of the month. But that's kind of most of the month. And then, of course, at the end of this month, like I said, is the end of the quarter. How about that? Right? September, October, November, December. Yeah, exactly. Let's move to the last slide. Earnings today. I'm kind of done with earnings, but still, interested. I would say I don't think I want to trade any of these, but I'm just interested in the stories around Dollar Tree. Are they dealing with tariffs? Is that going to be an issue for them? Zscaler, what's the deal there? Macy's, are they still going to have parades? I mean, something like that. Campbell's is another one of those type of. You talk about Kraft Heinz. This is another one of those consumer staples type names that have been fairly quiet and kind of sold off quite a bit. These used to be people just these stocks didn't really move much. And people just collected dividends in these, and now these stocks are just like, ooh, this one's really been sold off big time. I tell you, I don't really know. You wonder if somebody's going to buy this stock, and take it private or something, and like revamp it, rechange it. I don't really know, but JOLTS report is on Wednesday, and like we said, non-farm payrolls on Friday. The number of S&P 500 stocks above the 50-day moving average is 282. It is, it is not that much. We lost 40 soldiers from the previous trading day. Let's move to the platform. See what I'm saying? Campbell's Soup. Look at that. Look what that stock used to be. I mean, just a year ago, it was 50. Now it's 31. What's going on there? Is it not the soup that eats like a meal anymore or something? Like, I don't understand. It's kind of crazy. SPX expected move for the week here, Friday. It's 80 points. 80-point expected move. I feel like that was the move expected for the week of, it was somewhere around there, like 70-something points by Thursday for the week of Jackson Hole, where Powell was going to speak, where Powell essentially delivered the speech that launched the real thoughts that people now can expect a rate cut. So you wonder if this move is underpriced for the jobs report. I think it could be. I mean, I'm not going to trade it. I got enough going on here overall. It's not a good day for the good guys, but, these things happen. CoreWeave, the one thing you got to try to hold on to in a day like this is if I'm losing and I have directional plays, which a lot of these are based off of that, how much time do I have to recoup it? CoreWeave, for example, my main position in core weave is I got a couple of leftover positions from a while ago, some calendar call spreads here and there. But the main position is this zebra spread, 2x1 in November, far out, 80 days. So we're good there. I'm losing $800 on the day, but we're good there. And a lot of this P&L from the open is based off of like I said, I have some calendar calls. These September 19 calendar calls had some other short components to them. So it doesn't reflect all of the wins on those. But again, I know I'm still down on that. But my main concern is just in the day's P&L. That's from the zebra, and that is the most important thing. But again, it's in November. I'm not going to freak out over it. This is another zebra. I told you I've gone zebra crazy lately a little bit. FI in Fiserv, again, that's a name that's in a lot of I think it's in the S&P for sure, and that's just one of my strategies. I was looking at names that are down over 50% on the year. I thought it was pretty interesting, so I'm in that one. I'm going to hold on to that for a minute. Some of the crux of my portfolio is this NQ's call spread. Again, further out, got time. 25,000, 25.5. It's a little bit of pipe dream, but not really. It could be another 10% from here. Do I want to roll down? I don't want to roll down as of yet. What if we have another big down day later this week, or whether it's a jobs report? Then, maybe not. I will wait. I will wait in the meantime and see if we have more downside, and then maybe I'll think about rolling. But for now, we're holding 23,000. That's a good sign. Same thing with the Russell. Got a call spread out there, October 31st. Again, I got it so that we're going to capture a couple of jobs reports and at least one Fed meeting, maybe two. Let me see. Yeah, we're going to capture the second Fed meeting, which is October 29th. So, this could work out for me in my favor. We'll see, as long as everything is said the right way and marked by Powell and crew. Let's talk about the people. Let's look at this. We started off with gold, so let's start off with looking at gold here. I put on a call spread in gold on Friday. I actually tweeted out that I felt like gold was about to take off again because it just looked like it. And it's not like I'm a rocket scientist. I just looked at the last several trading days. You could see it was turning in a strong upswing here. And so I decided to get in on Friday. Lo and behold, we had this big move yesterday into today, which I will certainly accept. What's the exit plan? Well, I don't know yet, honestly. Do I want to sell it? 3650, 3700. I should get credit for that. I mean, I could leg this thing right now if I wanted. I'm up, what am I up? I'm up 900. This is one of those things where I have to look and decide here. Do I really want to do that? No, not FI. GC. If I were to, in this case, I don't get destroyed. I've locked in a profit to the upside. If it were to really smash hard to the upside, if it were to, and again, this is just showing me my portion of it. I have, I need my whole position, guys. I don't know if I want to, I don't really feel like I want to do that. I feel like gold has a way of really starting to move much higher. Maybe if it gets to a little bit over 3,600, 3,650, maybe I sell a little bit higher upside, but I really think we could see 3,700 in fairly short order. So for now, I'm just going to hold on to the spread. I'm not going to do anything to take away from it. Why is it showing me this? I'm not going to do anything to take away from it. I'm just going to hold on to the call spread for now. But at some point or another, it could get interesting to maybe find a way to offset this big upside move. But again, I think I want to wait a little bit longer before I do it, because essentially, I mean, this is, then I'll be, if I go further out, and it's so much further out right now, I don't want to necessarily try to pick a a square to put this gold in, meaning like it's just going, I don't think it's going to sit within this range. I think it's going to really either jump higher or jump that much lower. Now, I could sort of guarantee myself $200 on either side, but I don't really love that idea as of right now. You know, I didn't get into this gold play just to do that. Silver, I probably got a little more too advantageous on here. The reason why is because I missed the trade. So again, I tried to get in silver on Friday, did not happen. Well, we saw the obviously big moves yesterday and the one still today. And so I decided, I put on the trade yesterday during the day. And at this point, I didn't want to pay too much, right? Like I wanted to pay somewhere around $1,500 to $1,600, which is essentially what I did for the gold play. And then, but by that time, for me to pay that much premium, it was basically I had to go with the 45.47. I was looking today at the 45.46. If for some reason there's if this falls a little bit more, I might change those strikes. I'm going to have to take a loss on this 45.47, but I might just put it at 45.46. I think that's a little bit more attainable, especially if gold and silver ends up getting to the 45 strike. Just want to show you what we're looking at here overall when you're looking at this trade. Back to 2011 is really the kind of move that we're seeing right now. And on the way up, it eclipsed 49. On this particular month, I mean, you could see it basically the low was 37, the high was 49, so I had a $12 move. We'll see what happens here, but I do think right now this is a good environment for silver and gold, so we'll see how it goes. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody. You know, I remember back in the 90s when I started Profit, we sent out our first holiday card, which said, "May your shorts fall and your longs rise." And, you know, that sentiment's still very true. And it's one of those days where that is really working, because I keep talking about this general thesis of mine, which is bullish, precious, bearish equities. And today that's working especially well. We're red pretty much across the board in equity land, and we're very green in precious metals land. And that's a winning combination. So it's a very, very good day. We've got a lot of charts, so we might as well jump in because we're already 3.5 minutes in. So let's do it. I'm pleased not to be uttering the words lifetime highs, which I had to do on a daily basis for, 10, 20 years. We're starting to back away some. We got a nice gap down today. And, you know, some might say it's the tariffs, and some people might say, why tariffs going away sounds good. It doesn't matter. Just focus on the charts. Don't overthink this. We've gapped down. That's the important part. So that's progress. The diamonds also down. And we need, what would really help is to crack below this line right here. This was a big moment back a couple of Fridays ago to vault above that line. We've undone it largely, but getting below that level would really be nice, because it would constitute a failed bullish breakout. IWM, the small caps, are off about 2/3%, pulling back away from that dashed red line. I came into the day pretty aggressive, about 200% committed. That is to say, kind of pedal to the metal. I've backed up a little, about 172% right now, but on the whole, still pretty aggressively out there, because it's September, and historically, this is a good month for the bears, maybe the only good month for the bears. The cubes are down over 1%, and same deal. We've got a nice gap there. Lifetime highs were back on August 13, and we did not best that or even match it last week, and we have fallen nicely down here. So we're grinding around now where we were actually back in July at this point, even though we're in September now. And old Kathy, she's also down about 2/3%. Kathy D. Woods had a very good run with the ARK Innovation ETF, but it seems to have peaked out around here, and we're starting to burn some of that off. The market is utterly at the mercy of AI fever. If and when that ever breaks, God help the bulls. Actually, don't. The bulls are on their own. But that is absolutely, that is gore holding this freak show up. And SMH, which of course is very dependent upon that, the semiconductor index is down about 1 2/3. We had our lifetime high on this, also back on the 13th. We have sunk back down to where we were way back on July 13, 2024. So we've got 13.5 months with bupkis. And if we should crack below that, that would be extra juicy to get below that high of the 13th. You would think with all this blood and equities that bonds would be at least rallying as kind of a safe haven. No. Here's TLT slipping. And I confess, it is the first business day of the month, so I don't know if a bunch of this is, not taking into account the dividend issuance and so forth. That'll adjust itself in due time, but nominally we're down 1.2% on the TLT right now. Impatient soul that I am, I just went ahead and bagged on IEF. As far as my long positions goes, I'm more committed than ever to precious metals. IEF is not really broken. I mean, if it gets below this level here, yeah, it's pretty damaged. As it is now, it's easing off somewhat. It's still a very good looking pattern. I may well regret getting out of it, but I don't want to bother. I like my precious metals too much. Speaking of, miners are doing great. GDX, another lifetime high, blasting up 2.27%. The juniors, a much even bigger percentage gain, 3.33% roundabout. Very, very strong rally there. One specific miner in particular that's been highlighted on this segment many times is DRD, which is up about 7%. So that's pretty cool. Gold itself, GLD, very good day. Another lifetime high. This triangle that I've been yammering on endlessly about, we sneaked above it just a teeny weeny little bit on Friday, and I said that this is going to be a good week for gold coming up. And that's what's going on. We have achieved a gap. I have moved this higher, anchored to Friday's high. It is totally okay if we sell off back to this gap. Absolutely. It'd be nice if it just went up every day, but it won't. It'll burn off at some point. But that gap is vitally important now. So the triangle is complete, and that's terrific. Silver, getting closer and closer to our target. So about 2 2/3% gain for SLV. And OUNZ, OUNZ, which is an amalgam of those two, obviously a good day there as well. About 2.4% pop on that. And likewise, I've dragged that anchor point to with the high on Friday as the gap anchor. Of course, my own obsession is I've got a lot of gold, but palladium is what I'm all goofy about. It was actually up over 4% in futures trading yesterday. It burned some of that off, but it's still a nice gain. PALL is up over 2.5%, comparable to what gold's doing. Long term, I believe the percentage increase with palladium will beat, maybe by a lot, what's going on with gold. So yay, palladium, going the right way. I'm not in platinum, but it too seems to be doing all right. Here's PPLT up over 2%. So just across the board, people realizing that equities are insanely overvalued, the highest in human history. It makes the internet bubble look like a bargain. I mean, you know, the internet bubble was sensible and stoic, and your grandfather smoking a pipe, nodding his head about how wise it was compared to where we are right now. Metals, on the other hand, even though they're lifetime highs in some cases, they're a bargain. I think they're going to have a great time. Some of the odds and ends I've got over in Bearland, Accenture, ACN, and these charts, as usual, should pretty much speak for themselves. Abercrombie and Fitch, A&F down over 2.5%. Here's Peabody, BTU, down nicely, about 4.25%. Salesforce, CRM, down about 1.5%. Here's CrowdStrike, about 2.5% negative on this one. IonQ, off just a little, but I want to have some participation in this whole quantum nuttiness on the short side. On Semiconductor, down again, about 2.4%. Carvana, very richly valued, off about 1.25%. Royal Caribbean, down 2.6%, having come off of a lifetime high just on Friday. And one more, Schlumberger, SLB, about 2.75% down on SLB. And, you know, as you can see here, beneath that little blue reversal pattern, I think plenty of good potential for lower prices. I went too fast. I got a few more symbols to go, but I better slow down. Maybe I can talk about my childhood or something. But turning our attention to our handful of symbols left, I will say that, you know, as I look at the IPOs out there that have come out recently, they are just, I think, representative of just how overpriced things are. Here's Circle Internet, which I believe is the stable coin outfit, ironically. So this has moved from around 300 to, we could be in double digits soon. It looks like it's burned off about 60% so far, just glancing at this real quick. Yeah, it's still above the IPO. If you want to argue that, well, if you bought on this day and held on, yes, you're absolutely right. You're very, very right. My goodness. But this is quite the slog down and quite consistent too. There's not many stocks that look like that. Be nice, but it's kind of rare. But what's happening, I think, is that we are starting to see the sort of apotheosis of asset mania, which is crypto, starting to look a little frayed around the edges. And so here with Bitcoin, it had peaked around about $800,000 just recently, back about a couple of weeks back. And yesterday we had gotten down to around $18,000 below that. Now we're rallying now. It's up about $2,300 or so. But this is a pretty interesting break. We have failed this trend line. We've broken below this breakout level. And so even with this kind of dead cat bounce going on, it's looking pretty raspy. In addition, and this has nothing to do with crypto, here's another widely celebrated IPO, Figma, FIG, lifetime low on this one, having gone from 142 down to around 65. So whatever percentage that is, 60, 70%, something like that. And, just as lifetime highs beget new highs, because everybody's a winner, and really it's just like kind of the greatest fool who buys at the top, who knows where that'll be. It's inverse here. Everybody's a loser. Everyone who's bought, no matter what price, is in the red. And the lower it goes, the more sweat is going to appear on their brow. And so it kind of feeds on itself, just in the opposite direction. One last tidbit. I did last week during the Cracker Barrel logo brouhaha, shorted Uncle Herschel, and that's going well. We're down over 9% on CBRL, and I'm hanging on to that sucker. So all in all, a good day. And the big event this week, of course, will be Friday. I'm not talking about the San Francisco event, which I'll be hanging out somewhere in the balconies probably, but I'm talking about the jobs report, which is going to be an hour before the open. That should be a very big deal. So, hope you're doing all right. Glad we're done with holidays. Thank God for a while. Not until Thanksgiving do we have to take a day off. So it's going to be solid trading until then, almost 3 months. Huzzah. So I'll see you tomorrow. Thanks for coming by.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call.
Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, with the closing bell. Oh, he's alive, Sadnoff. I know you were worried. Trump is alive. At the press conference, he is alive. He was out playing a little bit of golf this week. Everything is fine.
Thank God. Praise the Lord.
Yep. Even the S&P is down 57.25. Sounds like a lot because it is a little less than 1%, but not nearly as low as they were. Down almost 100 this morning. And obviously, as you can see here from the highs, about 80 handles higher than that. NASDAQ down 2 and change. That's 210 and change. But you could see there the lows were just flirting with 23,000. We're 23,240. Russell down 15 and the Dow down 300. They're all down around the same. Maybe even the S&Ps and NASDAQ a little bit weaker. Volatility up 72 cents, a big 4% move. Nothing like the almost 8% move we had when volatility was 1870. Bonds down 27. They've been kind of complacent really on this market today. Been down all day, down 27. Bitcoin's been high, up all day, up 2,400 now to 111.2. Ethereum is down $76 back near its lows. Bitcoin holding up, Ethereum going back down. Oil up $1.62, although it's off of 66. It's 65.64. You remember when I quoted earlier this morning, it was about 50, 70 cents lower. It was under 65. Gold continues to rally on its highs, up $84. Look at this move over the last week or more. Gold just being, that's a big cup and saucer size. Is that what that is?
I couldn't tell you. You should ask a cup and saucer expert.
I couldn't tell you either, although I do like a good cup of coffee. What's leading us a little bit lower? Well, Crowd down 10 and change, Affirm down 6 and change, Reddit down 6. But you notice that some of these stocks I'm mentioning has significantly changed. Amazon was down big earlier. It's not as much anymore. Tesla was down big. It's still down 4 and change. Nvidia's down $3.50, but Nvidia traded all the way down to 167 and change, so about $3 low. And so we're off of the lows, I'll say, on a lot of these stocks. To the upside is Ulta up $35 on the rumor that Sosnoff might be coming out with his own line of makeup a la the Kardashians. Netflix up $5, McDonald's up $4, and Baba up $3. That's all I got, Thomas.
Well, when they were down just about 98 or 99, I turned to Jamal and I said, no chance of they rallying back today.
Shark Jeeve at the same exact time sent me a nice text message saying, I am checking all of my short puts right now, and I think I need to cover because things can only get worse from here. So yeah, you're in a good group.
I figured at that point when they were down 99, it was about, I think it was about 11 o'clock in the morning, maybe 10:45, 11
It was early.
Central Time. And I'm thinking to myself, no way are they rallying back today. No freaking way. And they did rally back about 50 handles, 45 handles.
And a creeper too, right? I mean, there was no real velocity to it.
Yeah, I was doing a webinar that I had promised to do in Italy, and we were talking about with a group
You flew back already? Wow.
Flew back.
Did you take the Concorde?
Yeah. So I was talking with a bunch of Italian traders, and they're talking about zero DTs. And we did this at about 1:30. So at about 1:45, they said, help us set up a zero DT trade. So I go, well, I set up my trade at the expected move. So with an hour and 15 minutes left to go in the day, what do you think the expected move was in the SPX?
How much time?
1 hour and 15 minutes.
Expected move in the SPX. I $25. I mean, I don't know. It's
8.
Okay, so that makes very little sense to me.
No. What it meant to me was, the first thing I said was, well, the expected move for the next hour and 15 minutes is $8. That's so little that somehow this market knows that wherever we are right now, this is where we're closing. I don't know how it knows, but it knows. And now it is an hour later, literally an hour later, and we are within 3 handles of where we were at the time. And
when it works, 68% of the time it works, 100% of the time.
No. The zero DT trade it was nothing. It was a tiny little winner. It was nothing. It was a scratch, let's say, small winner. But the funny part about it was that with an hour and 15 minutes left, the expected move was $8. I have seen the expected move with 5 minutes to go be as high as $25. And here the expected move with an hour and 15 minutes left was $8. So I'm like, okay, it's just amazing to me how this market can, price certain things and price them out. I think the real story of the day was, gold trading 3,600. I don't like to talk about gold. I almost never do. I don't even have
I don't even trade anymore, although I did get into the gold miners and it's kicking my ass, but sure.
I don't have a GLD position on. I have a GDX position, which is a loser day, but I don't have a GLD or a GC position because they kicked my butt too. So up 84 today doesn't mean anything to me, but 3,600 is a number that I probably didn't think they were going to get there. I don't know if I'm going to put something on, not today for sure. But I think that's the big story, is that there was a lot of
IB finally upticked in there too. IB ranked as 41. So
yeah, well, it
should,
when you break out to the upside, it should uptick in there.
Yeah.
But there was a bunch of stuff today that I thought natural gas was down, it closed up. Crude oil was down. I'm sorry, crude oil was up all day. Gold was up all day. Silver was up all day. Bitcoin was up all day. I think that the US dollar was strong all day. I think that it was just a weird day in that they came for commodities, they sold off stocks, and then it's almost like the sellers got a little tired. They didn't go anywhere. I mean, not 100-point rally or any of that kind of stuff, but the sellers got a little tired, and it turned out to be a nothing day, a mishmash.
Yeah, I mean, September starting like August. If you remember, beginning of August was kind of a little bit of a sell off too, and then we quickly retraced back the next day or two, right back to the highs.
Well, I think the weirdest thing about August was that a lot of people remembered August of 2024, and August of 2024 was the most violent sell-off we've had in a long time. I mean, August 4th or August 5th, whatever day that, I think it was August 4th, but or August 5th, whatever day that was.
Sure.
And then let's see, maybe it was the 4th on a Friday, and then 5th, 6th, maybe it was the 7th on a Monday or something like that. But whatever that situation was in August of 2024, that was the most violent down move we've had in a long, long time. And I think that people thought, okay,
this is how it ends.
Yeah, maybe this is, maybe we're in for a little repeat. And I think this August, when that didn't happen, the market just, it got green lighted. I feel like, listen, the way our research showed today is that after a 3-day weekend, they tend to be a little soft, which I guess, none of us could figure out why they were so soft this morning, but down 100 was a pretty big move.
Yes.
And then they tend to grind their way back already. Maybe they already started the grind.
No, please. I would like a little bit more two-sided action.
I'm going to stay.
It's actually been some decent action between down 80 and down 60 or so. We made 2 or 3 retracements, but that was about it.
Yeah. I'm going to stay a little bit short here. I think that everybody is buying the dip, and I don't love it. I don't love this market. I am very nervous about why that certain things like bonds can't get out of their own way. At one point, they rallied up this morning and they couldn't hold that rally. They didn't rally up. They just rallied back to like 22 or something, and now they're 14, 15. Bonds look like duty.
Bonds do look weak. I mean, really weak. I mean, if everybody knows they're cutting rates allegedly, why are bonds acting so weak? I don't know. Crowded field? What's the deal?
I don't know. Your guess is, I mean, I don't know. But anyway, I think the when I was trading today, I was like, the futures volume on the way down, it can be very heavy. It's funny. Futures volumes on the way down now are very heavy. On the way up, they're dead. Futures have become essentially, a measure of downward pressure, and it never used to be like that. So I think that's kind of interesting. Index futures, at least. But other than that, I don't have a lot of takeaways from today's the way they're kind of closing today. I don't have a ton of takeaways from this. If you had asked me earlier today, can they rally back to only be down 50? I would have said no chance. No chance. I really would have. I said no chance. I would have said there's a better chance they're down 100.
When the expected move was under 70 handles, right? I mean, for the week, pretty much. It was a big move.
Yeah, no, big move. But if you had asked me earlier today, where are we going to close today? I would have said down 130 is a way better chance than down 50. Now I think they've taken a little bit of the wind out of the
definitely taking the juice out. Even the S&Ps are down 53, but volatility is only up 67 cents. I mean, it is a 4% move, but it's 67 cents when it was up a full $1.67 earlier this morning. So they've definitely taken some volatility out of here by half at least from today's move.
No question about it. So
you got a couple of earnings before I do forget, so I can tell them to you. Are you ready for them?
Sure.
Dollar Tree, do you care?
I don't.
Macy's, that's an M.
Macy's.
I don't think you're going to care. Macy's is a $14 stock that doesn't move.
Is it really a $14 stock now?
Well, it's $13.40. With a 90 cents expected move over the next 3 days. I mean, for crying out loud. I mean,
I don't care about Macy's. What else you got?
Thank you. ZS, you've traded it before.
Yeah, I'm gonna Zscaler.
$272 stock, down $4.
Nope.
It's got an IV rank.
Nope, no volume, not worth it. No volume in
5 million shares, yeah. Mhm.
Do you say DT?
I did not.
Oh. What stock did you say?
Should I have said that?
I don't know. I can't remember what you said. I thought you said Dollar Tree, but I don't know.
I did. I said DLTR, Dollar Tree.
No, not enough volume. Go ahead. What else?
That's it. Those three.
Nope, we're going to pass. Any other earnings this week that look interesting at least?
I think CRM comes later. It comes tomorrow after the close, if I remember correctly. CRM is tomorrow after the close. Yes.
I think we have a small position in CRM existing. Maybe let's see. Yeah, that's going to be the one that has at least enough volume to trade. We have a setback diagonal on in there, but I don't think we'll keep that tomorrow. But at least when you get up to the 7-10 million, it'll probably trade 10 million shares tomorrow. I think CRM will be tradable, but it's still a $250 stock with an expected move of only $20.
I think the 57 is pretty good. Expected move by $18. I guess that's it's not that great.
I've had CRM positions on that move 50.
Then you shouldn't have put those on. If you knew that was going to happen, you shouldn't have put those on.
I gotcha.
We had cherry picks today? Did we have cherry picks today?
We did. We had a cherry picks today, and we covered the correlation. I don't know if you have it. You can pull it up.
Yeah, there we go. Our card's there.
Yeah, we do some really good newsletters.
Is gold a safe haven, Sosnoff?
Well, you might want to think that it is, but the reality is you couldn't figure out what it's a safe haven for. That's basically what that chart there shows, is that you could think gold's a safe haven for the stock market, but the reality is there's zero correlation between gold and any safe haven. The key to gold is you just had to buy
it. Key to the market, you just had to buy it.
That's right. Like you didn't have to do. There's no safe haven in gold. Yeah, gold. Yeah, the basic bottom line in gold is that based on our research is that there's not a big correlation to other products, and we also did kind of the 5 ways to get short. We threw that in there as well. Mm-hmm. So there's some good. There's some good newsletter classics today. All right, Pat. Well, after seeing this little, came back about half the move today for sure. Down 100, down 50 now.
I hope you bought the dip, Sosnoff.
I definitely did not. But I also didn't sell it.
Which is good.
Yeah, I didn't get shorter today.
My Taiwanese sources, a doctor friend of mine wants to remind us both that AVGO comes out with earnings on the 4th after the market closes. So another market leader.
AVGO, my worst performing stock of 2025.
And why it's a fan favorite of Tasty.
So it's a fan favorite of whose? It's not my fan favorite.
Tasty Trade and Tasty Live. I mean,
it is not my fan favorite. It traded 15 million shares, so it's definitely tradable. But at $298, you can have all the AVGO you'd like. But I'm going to stay away from that pig. That thing has cost me the entire year. It cost me on the way up. It cost me on the way down. Now I guess it's on the way back up to the stratosphere.
It's up today on a day when the rest of the market is lower. Yeah, you are correct.
Yeah. I mean, AVGO, where did it bottomed out at about 140 or a little over that, maybe or maybe a little under that in April, and it's 200 and 300 right now, so it's more than doubled.
Yeah, like every other stock, it's just doing its thing.
Yeah. So I'm gonna take a hard pass on AVGO.
Pass on that. Admit your weakness.
I will admit it's part of my kryptonite. No question about it.
No, you're maturing. This is good.
Yeah, I usually wait a year. When I have a worst stock of the year, I usually wait a year and come back next year and then consider it, tradable for me. This year, I think I'm done with AVGO. I'll come back in 2026 and I'll add it to my repertoire. But at $300, it's all yours, dude.
I understand. AVGO's been a market leader is all I meant. That's really all we have.
It's all yours. You
Yeah.
can lead that. You can ride that thing into the sunset if you want, but it's all yours.
Fair enough. Fair enough.
Yeah, as I go through most of the stocks on my board today, yeah, I mean, you're right. This was a crazy buy the dip day, but who the hell knew? You buy him down 100 today, you got some
Cuyones?
You got balls of steel. Because I did not like them down 100 today. Not at all.
Yeah, I mean, they didn't look good. I'll give you that. I'll give you that. But as soon as I got the tweet from Shark and you getting a little nervous.
You didn't get a tweet from me.
Well, I mean, Jamal told me Sadnov put in the
Jamal did not tell you anything. You didn't even talk to him. Okay, don't give me your crap. But no, not buying it.
I don't think, now that I've mentioned Shark 4 times on calling the bottom, I don't think he's going to text me much anymore this week.
Good. You don't deserve him.
He is a better person than I am.
Worst stock performer today, Nike for me. Worst performing Nike. Stock is down $2.50. Kind of ugly.
And you got a little bit of long delta in there too, right?
Yeah, I got a little bit of long delta in Nike.
Mhm.
That was my worst performer. Best performer, I don't know. Everything else is pretty good.
Earnings at the end of September. Yeah, you had some short delta coming in today. You were
Yeah, today was better on the opening though than it is now.
Yeah, you were a little puffy chested early. I'll give you that.
Yeah. Yep. I haven't bought any more bonds today. Just bought a couple of notes. I'm gonna probably wait. Notes had a little bounce back. We'll see what happens.
Net gas had a nice rally today, back over $3 too. So
It did. It rallied from down 11 to all the way up. I rolled up 4 times today in Nat gas. Nat gas is tough, man. You got to be short way bigger puts than calls to stay neutral delta in there. There's so much call skew in natural gas. You got to be aggressive with your put sales and conservative with your call sales. But in general, kind of not the day I was expecting after the opening. I thought there'd be a lot more to do. I did roll. I don't know if you've rolled all your positions, but I rolled all my positions today.
Yeah, you're a little late on your rolls. I mean,
I was busy Friday, so I got them all done.
I call baloney, but whatever.
Baloney. Well, I got them all done today, so one day does not mean anything.
Yes, you did.
But that's about it. I'm kind of like, I'm gonna wait and see what happens tomorrow. I think they're gonna try to rally them after this rally today, and I don't think they're gonna go anywhere.
Okie dokie. What do you? So tomorrow you're expecting a higher opening?
I just said I don't think they're going to go anywhere.
Okay. What do you think the expected move is for tomorrow?
Tomorrow, I'm going to say $30.
In ES?
I'm going to say 32. I'm not looking.
33. You're right there.
It was 37 or 38 earlier today. That's the only reason I know that. But I am looking for market to, based on this rally, I think they're going to try to continue it tomorrow. We'll get a little bit of an up move early on, and then later in the day, we were down 50 on Friday. We're down 50 today again. So back-to-back 50-point down days. We're probably poised for a little bit of a rally tomorrow, and then do we whack them in now? We need them to be sharply lower by Friday so we can have some fun in San Francisco.
Let's hope so. Let's hope we have some fun. That would be good.
Yeah, I don't want them at 40. I thought they'd trade 4,600 6,400 this week. They did. They traded under it. I think they will hover around 6,400 for a while. But the real question is now, can they break them here down to 6,300, or do they just stick around? And I don't know.
Well,
I think they break
it's anybody's guess, right, Sadnov? But I mean,
I think they can break them.
Yeah. We haven't seen this big of a sell-off in quite some time, Sadnov. Back-to-back, almost 50 handle sell-offs. Is this the start of something?
I don't know. I hope so. I just want to get some action. I want to get some two-sided action, have a little fun.
Yeah, I'll give you that.
Yeah, I hate
dead markets where the expected move for the week is $70. I like the expected move for the week to be, 140.
Well, the expected move, yeah, you're right. It's you're right. That's it. $74. You're ever so slightly higher. Yeah, you're right.
Yeah, that's with the pop and ball today. So we'll see. It was just one of those, one of those days where I thought we were going to get something going on. Not much happened, but I got a couple people that wrote to me and they said, they were long a few deltas in gold and they were all happy, which is cool. There are a lot of gold bugs out there. There are a lot of silver bugs out there. I think both those camps were very happy. There were a lot of shorts, and I think that was, that made some people give them a chance to get out today for, 6,400 is probably a profit for most people. I got a chance to roll, so that was good, but I didn't take any profits today.
Yeah, and you had some to take too, but that's okay.
I'm not taking profits here. I can't take profits.
But that's the problem. Like shorts have to take profits for us to go lower.
Yeah, I know, but I'm not taking profits. Every time I take profits on shorts, then they crash.
Well, maybe you're the catalyst.
Maybe I'm the KOD.
Maybe you're the KOD.
I could be.
Yes.
Could be. Anyway, it's weird. It feels like a Monday, but it's Tuesday. And so I'm a little thrown off today.
Okay, I think everybody is. That's okay.
I'm a little thrown off. I'm not going to lie. I'm a little thrown off today. It feels like a Monday, but I know it's Tuesday, and I don't know.
And you're a little spent. I thought you'd be happy with a 48 handle move on the E-mini S&Ps.
If normally I'd be really ecstatic with a 48 handle move, but a 49 handle move. But I would, since they were down 100, now I'm less happy.
We got down to 64 and change, or just under 4 times. Sound enough? Is there a 4-time bottom, or there's no such thing?
No such thing.
No such thing. That's what I thought. Ooh, yes, San Francisco. Come see us Friday, September 5th, Sosnoff. That's correct. It is waitlisted at the moment, but we always make room for you. At least we're always going to try to. So please sign up. Somebody always drops off. We release tickets to you. That's how it works. We would love to see you. The show, the show starts at 9, but we'll be there at 8. Sosnoff, I'm going to bring you a nice iced tea so you can talk to the people. Right?
Talk to the people. Oh my God.
Press the flesh. Well, Sosnoff, we closed. Is this closing on the highs?
Yeah, pretty much.
Closing on the intraday highs, down 45 or 46 handles. NASDAQ down 176. Nothing to see here, Sosnoff. Russell down 12. Dow down 240. If you weren't watching the press conference, Trump is alive. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Sos?
What comes up?
That's right. The Overtime Boys. Peace. Good work out of you, Tom.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes. So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh, yeah. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like, I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I don't know how to do magic, but I do have a sense of how to use magic to steal money from the taxpayer. First, you need to take off anything that makes you look like a magician. That's key, Alex. The critical thing is to look like you're just a man in a suit trying to make a living. Goldman Sachs pulled off the amazing trick of making $3 billion in 3 months' time while the entire financial system collapses, foreclosures are at a record, and unemployment skyrockets, and the US dollar collapses. Shall we begin? The Facebook.com. Mark, if somebody was to put the question to you about the magnitude of what you think you've launched, how big do you think your product or your service is?
Well, it's impossible to tell.
You said something interesting, which is not within their economic means. I don't know that their economic means should take precedent over public interest. Welcome back. Here's a story to add to your bailout rage. It turns out we weren't told the entire truth about the banks. Honestly, you're probably not even hugely surprised by that. That's your plan for financial reform: printing presses and accounting fraud. And it's happening at the expense of you, me, and every future person in this country because of the money machine that the bankers have running to pay off our politicians. As long as you can risk as much money as you want and pay yourself for all the upside and stick the downside with the taxpayer, human nature will just leave them to screw everybody in America for as long as it's legal to do so. Remember, it got so bad in Egypt that there was a direct correlation between the growth in the GDP and the deterioration in the quality of life of the people, because the people at the top were making their money at the expense of everybody else. It's connected. I'm not here to talk about plans to deal with this till 2017. I'm saying we've got a real problem, and I'm tired of Republicans and Democrats who either want Republicans who want to burn the place to the ground, and Democrats, with all due respect, who want to offer a plan that gets it through their end of their second term of their presidency and then screws me and my kids when it's over. And until we do that, we have to deal with the extraction that is at foot. It is the reason the financial markets are behaving the way they're behaving. That is a mathematical fact. This is not some opinion. This is a mathematical fact.
Stocks were down, surging here after hours. It's Tuesday, September 2nd, 2025. This is Overtime. I'm your host, Chris Veio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. The three of us back together to take you through the rest of this hour. Futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com. Welcome. Tell us what you're trading today. Did you buy the dip? Did you get all bared up and think that the end was nigh simply because it's September? S&P 500 only down by 0.5%, now 64.40 here in the after hours. Mark the close at 64.25, so the bounce continues, off by nearly 1.5% in the NASDAQ, now only down by 0.44. It's that indigestion after the end of summer. Volumes are finally back. 1.7 million contracts traded in the S&P 500 today, which is pretty nice if you can get it. Bond yield, the curve twist, but ultimately Treasury's a touch weaker. Is Trump alive or dead? Is China, Russia, Iran forming a new trifecta, a new alliance?
Yes.
Cool. Gold prices surged to a new all-time high. Silver prices have a nice day for themselves as well. Finally, we take a look at crude oil, which is bouncing. New geopolitical regime coming into play. Dollar firm, which is perhaps the most notable assessment of this all. Gold, silver, and oil up on a day when yields in the US dollar are pining higher. In any event, gentlemen, what was looking like a pretty ugly start to September, only about 3.6 Rudkins, not great, not terrible. Dylan, hats off to you last week, by the way. Saw those interviews that you had with Guy Adami and Bill Fleckenstein. Very nice. I'd encourage everyone to go back and watch last Wednesday and Thursday's episodes if you haven't had a chance.
Thank you for lending me the real estate for the discussions. I appreciate it.
It was
great discussions.
Difficult, trust me. I was sitting by the pool and I was saying, this hurts. I can't believe I have to do this to let Dylan have the real estate, but I will do what's necessary for the company.
Ilya allowed me the real estate, and he was generous. You were lazy, and God knows what you were doing.
It was so terrible to do no heavy lifting, but merely to consume these interviews with a nice cup of coffee and a lean back in the chair.
Yeah. Well, yeah, that was great. Hopefully we'll do a few more of them. There's lots of folks we can rope in, I'm sure.
Looking forward to it. But for now, you're stuck with the two of us, Dylan. So let's just start here. Stocks off the lows. Meek Mills is starting an AI company, but your response to that information was, of course, just to buy them up. So are we buying them up here in a spooky September?
Yes, absolutely. Yes. Take advantage of the dip. Call your friends, call your uncle, call your aunt. Get some money wherever you go, look under the couch. Get in there and get after it, my friends. This is everything that you're going to get. All this spook is going to just open the doors to glory. So make your shopping list. Number one on my list, Google, by the way. I'm now a mad Google lover. Gone full Googler. But anyway, yours.
We'll get to the individual equities in a second here, but Ilya, this Monday reversal in stocks, there's some damage. It's a bounce from the 50-day moving average in both ES and NQ. Is this the market doing what it did in August, where it sold off around a weak non-farm payrolls report? Are we positioning for a weak jobs report on Friday and getting it out of the way now?
I mean, maybe. Certainly, this is the first of September that the markets get to have, at least on Wall Street, that the markets get to have a cash equity open. So there's probably some laying out of positioning for the month. Lately, and this is a weather vein I check often, the comments in my YouTube have been, oh, well, markets are always down in August and September. Well, they weren't down in August, and over the past 10 years, it's about 50-50. So I wouldn't necessarily say that this is seasonality again and again and again, but September is historically a weaker month on average. Obviously, it depends when you take the average. If it's a 20-year average, yeah. If it's a 10-year average, less so. So it varies, but we are starting a new month, and there is seemingly a desire to reposition here. Now, is it for the non-farm payrolls report? Doubtful. The sort of dynamics we've seen really since mid-August, and if you want to go even earlier, really the beginning of August. We start August with, oh my God, these meta earnings are incredible. And they fade. And of course, leading into that, the Magnificent Six, excluding NVIDIA, fade. Then we get into August. CPI gives us...
Is Meta going down because of their earnings or because we found out that they have a chatbot that talks about sex with underage kids?
Well, that was later. That was later.
It feels materially important.
Meta surged 12% in a day on those earnings, and the markets couldn't make hay of it. It's not like the market didn't like the earnings. It loved the earnings, and the market couldn't make hay of it. For that matter, they couldn't make hay of Amazon or Google or Tesla or any of the other Magnificent Six. They faded all of them. Then the markets faded CPI after one day of gains. Then they faded Jackson Hole after one day of gains. Last week, they faded NVIDIA after one day of gains on Friday. And we'll see what they do this week. But the dynamics seem to have been the markets. It's like that Simpsons episode with the flying pig. They get one piece of data or one piece of news and go, it's just a little airborne. It's still good. It's still good. And that's for one day. And then they can't make hay of anything else. There's no follow through. There's no trend development. We keep getting stuck. It's as though we can survive a piece of event risk, unless it's objectively awful, and we haven't seen one of those since the last jobs report. And outside of that, the markets go, oh, well, this could have been worse. And you get 1 day of rally. But if you look at, nothing has really gone anywhere. The S&P 500 hasn't really gone anywhere. The NASDAQ hasn't really gone anywhere for the better part of a month. So chances are we're looking at this jobs report and going, okay, well, we'll either survive it or we don't. But do we really have a reaction function here beyond a day? Maybe not.
And Dylan, looking back on some of the data for the month of August, it was a record month for zero DTE options trading, where on a daily basis, we averaged 2.4 million contracts a day, which makes up now 62.4% of overall SPX volume. It's basically an even split between retail traders and institutions, though retail traders have the edge with about 53% of that volume. What does it say to you, generally speaking, about the market overall and the health of the market when we are increasingly short-term focused? Is this making us more fragile or anti-fragile, as Nassim Taleb might put it?
You're asking me?
I am asking you.
Yeah, we are anti-fragile. I mean, there's no question. The market has trained the world to buy the dip at a level that I've never seen before. I mean, the amount of destruction that is required in the sell-off for it not to provoke immediate dip buying has to be so big so that any sort of surface weakness, 1%, 2%, 3% sell-offs, I mean, the level of resilience just from sentiment. I mean, so it's going to take a real trend of inflation data, not just a one hot number, but like an ongoing trend, or some sort of real, major change in economic policy, like we saw in April with Trump, and even that was short-lived. But absent some real material exogenous force in the labor market, in inflation expectations, or in basic economic structure for the United States. And without one of those three things, I mean, not just happening one bad number, one bad comment, one big miss, whatever, but a pattern therein or thereof, every single time this thing backs off, it's a buying opportunity. And that's something I would not have, a younger, stupider version of myself who was subject to thought and thinking would not have said this. But now that I'm older and think less, I offer my opinion very clearly, which is buy them when this thing goes. You buy them. I mean, I don't know how a man like Ilya, to his credit, maintains a healthy level of skepticism and has all sorts of thought-based rationale. But good luck to you.
Well, one of the more remarkable things about today's market, if we're going to think about the seasonality, and we'll go into that momentarily, it's how gold and silver held up and rallied so significantly throughout the course of the day. Even as equities, the bid in the safe havens, so to speak, doesn't drop or fall away. So gold here now up at 35.99.5. Thinner markets after hours. It's not the spot market, but nonetheless, the push higher continues. There's a really interesting note out from Dr. Data for today's cherry picks. I'd encourage people to go check that out. But is gold a safe haven in the market? He looked at a study showing the various thresholds, decline thresholds in the S&P 500. So over the past 3 years, when when the S&P 500's been down by 1% or more, gold's only been up 36% of the time. So gold and stocks have by and large traded together for the most part. If stocks are down big, gold's going to be down big.
This is my favorite thing to poo-poo over the years. This idea that gold is some kind of a safe haven.
Safe haven from something specific, not necessarily a sell-off in equities, but something else that's happening in the economy or the market. In any event, it's $3,600 an ounce. This is an all-time closing high here. I was able to take off some gold calls today, which had been struggling mightily for the past several weeks with a few days to expiration. So I'm not going to, look the gift horse in the mouth. But Ilya, this seems now like something important is happening if gold's able to do what it did today at the start of September.
Right. I mean, and I've flipped over my position. So I was basically looking to have exposure short premium either through calls or puts, depending on where we were on the bounds of this 5-month range. I mean, basically, gold hadn't gone anywhere since second half of April, and if we were near the top of the range, I was selling premium by selling puts or selling calls, and if we were at the bottom, going the other way. So the latest kind of version of this was selling calls near the top, and ultimately, obviously, we've had a breakout here, so I've flipped this over and I'm selling puts again. In fact, the trade managed to run so hard today that it gave me a chance to even make a little money by the close. I'm not going anywhere. This looks like a breakout, but it just speaks to, you wake up here on the West Coast, you go, oh, this thing is probably breaking out. I got to flip over this position before it eats away all the premium that I've received. And thankfully, I was able to get out still in the green and flip it over and make a little bit of money on the other side. That's how much conviction this move had. It's very interesting, by the way, that we get this conviction at a time when the bond market is across the board lower, and you get the sense that the dollar had a great day on haven grounds, not on yield grounds, because the likelihood of a Fed cut in September has only increased. It's 91% now. So all of this now starts to look a little spooky. And you sort of wonder if on the first day of September, everybody went, wait. So we finished August with a Supreme Court case on whether the Fed governor or a Fed governor can be fired by the administration. That's now going to the Supreme Court, most likely, the curious case of Lisa Cook. And then you get, apparently now, the tariffs going to the Supreme Court as well, because you get a court ruling last week saying they're illegal, or at least the tariffs contingent on there being an emergency.
Well, hold on a second. How funny is that, Dylan, that the tariffs were made illegal and the Cantor Fitzgerald boys were selling those contracts about the tariff reimbursements.
Seems like it might have
coincidence.
been some kind of it's an odd coincidence, Dr. Vecchio. Peculiar and odd.
Crazy that the Commerce Secretary's former company decided to make markets and insurance for tariffs that would be overturned. And they're the only company smart enough to do so.
Here's another interesting little tidbit for you that's adjacent. FinViz,
must be a coincidence,
a wonderful data provider, compiles data on insider buying and selling, because of course you have to report these things when people inside companies buy or sell. This data has to be reported lest there be some sort of shenanigans. Well, at the end of last week, the entire board for insider buying and selling was red. Out of 200 transactions, not a one was a buy.
Are you suggesting that there is an internal dialogue within the Trump administration to arrange transactions that are financially beneficial to the individuals involved with the administration of said policies?
I suspect this could be what's going on. I don't want to point fingers.
Okay, we wouldn't want to point fingers.
People are saying.
Well, can we talk about I think the biggest thing, even though I know it's sort of market distant, but I personally I actually believe that the China, Russia, India meeting, which was well publicized, was actually quite significant. I don't think that was nothing.
Well, can we get into that for a quick second here? Because
I would love to, because I definitely have the opposite side of this perspective.
Of course you do. The Reuters report today said that India has started to sell U.S. treasuries and replacing them with gold in their FX reserves as a response to Trump's tariffs. So we see weakness at the long end of the curve today. You see that gold is going up. Dylan, this India, China, Iran, North Korea realignment. Russia's in there. Why do we care about this? What's the big deal for the global, new world order that's coming?
There's a foreign policy theory that has been around for a hell of a long time, which is that you really just want to keep any sort of adverse counterparties at odds with one another. So as long as the various adverse counterparties are not aligned together, they're grossly ineffective in terms of coordinating anything. And I'm imagining what Ilya's counterpoint to me is, not to try to neutralize him or even speculate as to what your answer might be, is that they're not really going to be capable of working together because they have such divergent interests. However, I do think that they recognize a material opportunity to exploit the apparent fragility of the coherence of American leadership and have an incentive to align in a way that they've never had before. And while they have many issues, they don't have a currency that they can really use. There's no threat to the dollar, obviously, but they do have an incentive to accelerate their trading within the group. In a way, it just accelerates the momentum of the formation of a better organized counterbalance to the United States at a level that I don't think has existed ever in the past. And I think it adds, I think it reflects on the risk of having, such a long history of what I think as incompetent leadership in the United States, going back to Trump 1 through Biden and now Trump 2. You're looking at a decade-ish of, subpar, if not way subpar, leadership in the United States in a way that in the short term is irrelevant, but over time starts to present meaningful opportunity for counterparties. And the most meaningful counterparty in the mix is obviously China. And if China can enroll India in Russia, Russia is less relevant. Obviously, Russia's more optics, in my opinion, and more sort of like a historical, like political status, but there's really no.
Well, I mean, they have nukes, so there is that.
They have nukes, but it's a paper tiger, relatively speaking, economically, et cetera. But economically, India and China are not nothing, even though they, even if it's only 5% of the country that is involved in the economy, when your population is 1.4 billion, 5% of the population there is 1/3 of the American, it's 150 million people, represents 5% of the Chinese or the Indian population, which is nearly half of the number of people in America. And so again, there's all sorts of reasons why this won't take on the momentum necessarily, but I do believe it is a incremental, but not insignificant negative for the United States.
I mean, I agree with that assessment almost totally. I guess where I am looking at this is at the capability of this alignment. I do think that despite the fact that for example, India and China don't get along, they do have now a joint interest in exploiting the apparent strategic weakness of decision-making and positioning in the United States in a way that neither one could hope to exploit until relatively recently. And this is a very powerful unifying force. There's no question. I completely agree with Dylan there. Russia is a paper tiger. They can't even manage to win a war against Ukraine. So not exactly the most capable, and economically a tiny fraction of a thing. So not exactly.
But they're window dressing.
But they do have nukes.
And they have the largest landmass, which is a breadbasket for China.
They do. And so, to some extent, yes. What's the most sort of interesting here isn't that the U.S. is so well positioned as to resist a formidable challenge. The U.S. is not well positioned. In fact, that's why the challenge seems to be occurring, because there's been a smelling of blood in the water.
But you're telling me that enraging all of our closest allies and trading partners, and then pushing together all of the people philosophically and economically against us together to work together.
Not a recipe for our strength, no.
That wasn't a good idea.
Well, it's not a recipe for our geostrategic strength. If the recipe was for our geostrategic weakness, then it's succeeding. But not a recipe for geostrategic strength.
Oh, so you kind of triggered me there. Dylan, if the goal here was to push India and China closer together to make our allies less certain in our ability to lead the world, what would Trump be doing differently?
He would never have retracted first, there's a couple things. One, and it's a biggie, even though people didn't think much of it or whatever. I don't know what people thought about it, but the United States' moral position in the world as the beneficent rich uncle providing investment in Africa, investment in South America, for relative pennies, but America's sort of extension of goodwill via minimal but significant educational, healthcare, and infrastructure resources around the world, which Trump has basically come back and withdrawn as much of as possible and said, well, they're not paying for it if you don't,
USAID was shut down this weekend completely. State Department killed it.
That function was, I believe, the most persuasive thing that existed for the United States as a moral that it was basically you're paying pennies to have the ability to influence the world. So one, I think the retraction of global goodwill because of the withdrawal of that investment is catastrophic and opens a massive door, especially for China, that's already been marching through that door for decades. If you go to the Barbados, all the medical equipment is Chinese. You go to South America, all the medical equipment is Chinese. You go to Africa, all the medical equipment is Chinese. That is just utterly an incredible self-inflicted injury for the United States that's going to be difficult, if not impossible, to recover from. And then the tariffs send a message of, we don't want foreign things coming to our country. We would like to do less business with the rest of the world. And so I would say the commercial signaling is stay out. The social signaling is we don't care about you. And the rhetorical signaling is you're on your own. You look at the J.D. Vance speech, the NATO stuff, all that jazz. And so I think you put together the rhetoric on from the executive branch on international relations with the tariff, with the withdrawal of the goodwill investment. You put those three things together and you basically create an isolationist view of the United States, which ultimately all of North and South America in the scope of the world is basically a frontier backwater. The entirety of the world lives between, London and Beijing. And they look at North and South America like some sort of frontier ranch. And if it wasn't for the US reserve currency and the robustness of the US economy, which is obviously hyper dominant, no one would even care about North and South America. And so doing anything to diminish the relevance of the United States when the United States is the only thing that that balances out the centralization of all power between New Delhi and Beijing is idiotic. And it's very difficult. It's almost impossible to acquire power like that. It takes, world wars and decades and currency games and all this, a lot of things. But once it's gone, you kind of lose it incrementally and then you lose it all at once. I think what people worry about the dollar, I actually think the dollar will be the last thing to go. Like the dollar won't actually, the dollar won't be the first thing to roll over in the sort of decay of American global relevance. It'll be the last thing to roll over. But this is where I'll take
the other side, is despite the fact that we're obviously doing things that are telling geostrategic adversaries that we are weak and ripe for a challenge, I think actually we are neither so weak as to be ripe for a challenge, nor so weak as to extrapolate the current episode in the long term. And that's not because we're strong. It's because, to Dylan's point, the major sort of pole of power on this other side is China. And they are not the pole of power that they appeared perhaps before COVID even. Because what they don't have at this point is an economic model that works. And without that economic model, they have nothing. So the problem in China, besides the fact that their economy continues to be built on a premise of cheap labor, they have, first of all, an aging population whereby that cheap labor is going away and is not big and is no longer cheap. In fact, the population is going away at such a clip as to make their economy basically inoperable demographically before much longer, give it 5 to 10 years. Moreover, they've been in a deflationary state for 2 years running now. And it's, in fact, a bit more. And it's because at this point, there's no demand. So China cannot hazard a conflict with the US because the only way that economy still does anything at all is because it sells things to the US.
So, yeah, they've been in deflation for 2 years.
More. 9 quarters.
3 years. Dylan, the rates of home ownership among Chinese millennials has gone through the roof. Something like 71% of Chinese millennials own their homes. In the United States, that number's less than 35%.
Yep.
So we've avoided deflation. They haven't.
Well, there's been a housing crisis. Those homes cost nothing, and the government is giving away money so people would buy them, and the economy is still in deflation for 9 quarters.
Sure, but I guess the point is that
What is the point, Chris?
In China, you can change, right? In China, you can change the policies. You can't change the party. In the United States, you can change the parties, but the policies don't change. China aren't they doing a better job addressing some of these things than the United States is that arguably leaves them better positioned for the long term?
No, because they don't have the people to run that economy. There is absolutely nothing about Chinese home ownership that says absolutely anything at all about their ability to counter the
If we continue to pursue our own immigration policies here, will we have the population required to keep the punch bowl filled?
Oh, well, that's a separate thing, and this is exactly what I'm saying. I don't think the challenge is doomed to fail because we're strong. We're weaker than we've been possibly since before World War II in relative standing. But the challenge is insurmountable for a player like China. They're just too far behind. They did not get rich and powerful fast enough. The demographics are stacked against them in a way where the challenge seems doomed to fail. And that's not a statement about our strength. It's a statement about their inadequate firepower for the challenge.
But I do find...
Okay, so they fix things with India.
Sorry, go ahead.
Go ahead.
No, I'm just saying,
no.
You're ignoring India in this entire conversation, which is actually the largest nation on earth. And I know...
Well, that's what I'm saying. So they fix things with India. Yeah. They get the they maybe get some immigration going on.
Interesting.
On a little ping pong between Delhi and Beijing and Bombay, throw some Tata Motors here and a little
interesting. India is a very interesting layer to all of this. If we are successful in driving India away thoroughly,
we have not.
You could make the argument, address their demographic shortcomings by essentially setting up factories in India, and they'll be Chinese run, but in India, and you could maybe see something there.
The Japan model.
India is notoriously incoherent. India has a very hard time actually marshaling all of its resources because of how fractious and difficult their regulatory state is, their politics are, and were you to find some unification there, this would be a different conversation. But at least for the moment, India is very difficult to harness as a single power node.
I mean, I guess the question is Dylan, are you buying India, China, Russia on these news? I can't really buy Russia these days, but when it opens up and the sanctions end, do you buy the foreign equity still? Because China did a lot better than the U.S. did over the summer. China.
I don't think you are. I think politically it's relevant. I think financially the United States is the center of the world and will remain the center of the world for a long time to come. I think that the political shift can be decades before the economic shift.
Yes.
I think the economic shift is the last thing to happen, and it may never happen. But I don't think the economic shift happens early or quickly. I believe it happens later. And I think, if anything, the chart you're showing, if you're going to do anything, own gold.
I totally.
That's
agree.
really where I'm landing on
totally
this, Dylan.
agree.
Dylan, this is really
totally agree.
We land here because the thesis that we've worked on for the past year and a half, 2 years plus, really going back to October 7th, 2023, right? Gold gets its pop right after non-farm payrolls because of Hamas's attack on Israel. And it really hasn't looked back since then. You sprinkle in the tariffs, Ilya, what have we been saying since April? If you're a country, and why do you have all these US dollars and treasuries to begin with? Because you trade with the United States.
Yep.
You want to recycle your dollars somewhere. And so at the margin, if you see less trade on the horizon, you still need to have something for your reserves. Maybe you're not going to add the dollars, but you're not adding British pounds. You're not adding euros. You're not adding anything else except for gold or Bitcoin at this point in time. And then you get this headline today, India selling treasuries to buy gold for their FX reserves. What more evidence do we need that this is like the predominant theme?
The writing's on the wall. I mean, clearly.
This is still the trade. This is the trade. If you are thinking that India, Russia, this is all a new world order.
If you think that
gold is still the trade.
Right. And my point, I guess, is that you don't have to even think that. I don't think that. I don't think that India and Russia and China can mount a meaningful challenge. I think they'll try. But the very fact that there is a level of speculation and that there is a try and that price action is responding is good enough reason. Because frankly, it doesn't have to be about the meaningfulness of the challenge. The very fact that the US has been so enfeebled internally from the inside out that this challenge is even a point of conversation is enough to say, well, you know what? Let's get some insurance for this is going to have to be a show and prove kind of challenge rather than it's pointless to even attempt this. Why bother? The U.S. is an impregnable fortress. I mean, obviously, the challenge is significant enough that it is being mounted at all. And that already is a reason, and the price action is responding. So I don't think you even have to believe in the validity of the challenge or the capacity for it to be successful to look at gold and go, okay, yeah, we're going to have a speculative period here where this is a thing that we're going to talk about, buy gold, as I did.
One of the problems that's coming up recently is about debts in the developed world. In particular, there have been some really odd movements at the long end of some curves in, say, the UK, or if you look to Spain.
Oh, yeah.
And it's pressuring the currencies now. The British pound was up by 0.87% today. We talk about a world where a lot of these countries are seeing increased deficits. The UK just announced that it's going to be delaying its budget. It has not been transmitted over to Parliament yet, so they're behind schedule. Delaying budget's not going to solve any of the problems, but it's one of those just headlines that like the government just can't get a grip on everything. Ilya, your enthusiasm for the US dollar has been well noted. And yesterday on First Call, you argued that the dollar is still in the middle of a bottoming process as it's been since July. Today gives us that bullish outside engulfing bar, even with all this talk of other countries selling their treasuries to buy gold. What do you take away from the dollar's action here on this Tuesday?
I think one of the most interesting things on the board today is you get yields higher, gold higher, and the dollar higher, because one of these things seems like it's wrong. And gold seems like the odd one out because it really shouldn't be rallying if yields are up and the dollar is up. The fact that it's able to rally in that kind of an environment tells you something about how strong gold is. But then you start to look at this in context and go, well, why are yields rallying? Are yields rallying for some sort of positive economic outcome? Is the dollar rallying for some positive economic outcome? And I think the answer clearly is no. The numbers that we got today, the only thing that we got was the manufacturing ISM. It was disappointing a little bit. It actually ate into the dollar's gains for a spell there until the dollar came back. This is not anything that is ostensibly predicated on there being less of a chance for a Fed rate cut. No, the probabilities for September only firmed up. We're at 91.7% now. So this seemed like risk aversion. And it seemed like the kind of risk aversion that's actually worried about, again, interestingly, sovereign risk in the US, which is how bonds didn't pick up a safe haven bid. Instead, it looked like a rising term premium sent yields higher.
And so then you're saying the dollar was tracking the yield bump? Is that your rationale for the dollar move?
Well, I think the yield bump, I think the dollar was not up because yields bumped higher for good reasons. If there was good data and a sense, well, maybe the Fed doesn't need to ease as much, then you'd see, yields are up, dollar is up, but then stocks would be up, and you'd get a general kind of growth positive vibe, and gold would not be doing what it's doing, almost certainly. Instead, bonds sell off because apparently we're injecting a level of uncertainty back into the bond market, and the dollar is gaining as a haven, which is really interesting in this context. It suggests we're not worried about the U.S. sovereign being incoherent. It's not sovereign risk. It's policy uncertainty risk. If it was the U.S. sovereign is being incoherent, we'd see April, late March again, where stocks, bonds, and the dollar go down at the same time. That the dollar is up in this environment is telling you this is not worries about the U.S. becoming a bad borrower, say, or facing a meaningful geopolitical challenge or whatever else. This is about uncertainty. And frankly, these Supreme Court cases and how front and center they've become over the past 24 to 48 hours, that smells like the catalyst du jour here. Any theory is as good as any, but this is not a dollar that's rallying because it's getting yield support. Because that yield support isn't coming from anything growthy. It's coming from a parallel spook. This feels like risk aversion. And you're seeing the dollar capitalize on that really across the board. The yen is down. The Aussie is down, albeit not as bad as it was earlier. Canadian dollar, pound, euro, you name it. Everything across the board.
Are we seeing increased sovereign risk?
I don't think so. The dollar wouldn't be up like this, I think, if we were.
Well, it's certainly not the incoherence that we saw earlier this year. That's right. To your point. I think that makes a ton of sense. But Dylan, there's also a lot of incoherence in this policy still.
Sure.
You're talking about U.S. policy?
I think, U.S. policy. There's a lot of incoherence.
Incoherence.
All kinds of incoherence.
Incoherence it's like the Marshall Plan directive is incoherent policy, like the modern
Did you see what Trump tweeted this weekend?
Is the policy.
Incoherence is the mandate. But Ilya's point is that it goes back to the financial crisis. However incoherent American policy is and however degraded American credibility becomes, the thing that keeps America above water on a relative power scale is the even worse condition of its primary rivals.
Yes.
Which one day might not be true, but it's true right now.
Yes. Yes.
Ilya,
both of those things.
How much money do we get? How much money do we do a year per year in trade? Do you know how much in the United States, in the U.S.?
With who?
Just generally speaking, because I've been trying to wrap my head around this tweet from the White House that Trump's policies have brought $8 trillion in new investment to the U.S.
What? Where?
Well, that's why you have such an incredulous reaction, because the economy itself, like, we have about, what, $4 trillion in trade total? And so his tariffs have produced $8 trillion in investments in economic activity. Dylan, if they're going to just make up
and a
numbers,
bunch of these investments aren't investments. They're plans to do something over the course of a decade plus.
Yeah. So
this stuff
to
isn't
put this
a
in
done
other
deal
terms,
in the best case.
I mean,
it's like when people
ChatGPT says the total value of all U.S. exports and imports is $7 trillion.
$7 trillion. And so Donald Trump's tariffs in just the past 5 months, because Liberation Day was 5 months ago.
And that's, by the way, imports and exports.
It's incredible. $8 trillion.
Unbelievable.
The nice thing
Dylan,
with basically a pretend presidency is you just say things.
Yeah, I mean, like, if they're going to make up numbers, why not go for something even more ridiculous?
I mean,
5 quadrillion.
A million, billion, jillion.
Okay, so this is exactly the kind of crap that took down the Soviet Union, for what it's worth, and I do need to opine on this.
Yes.
When bad information flows upwards, and people are saying like, "Oh, like, we can't tell the boss the real numbers because that's going to piss him off, and I don't want to get shot in the back of the head, so just tell him what he wants to hear." Decision makers can't make the right decisions because they don't have the actual information that's real in front of them. So I don't know who's feeding Trump this load of crap that the economy has had $8 trillion of investment and benefits from these trade deals thus far. But God save us if that's what he's being fed, because it means he's going to turn stocks are near highs, and we just made $8 trillion since April. Dylan, we can turn that dial a bit higher, can't we?
Absolutely.
Think of all the money we're going to make. How much higher can stocks go?
I mean, I would think they could go up to another billion trillion more.
Oh, well, speaking of which, Bank of America released their 2027 forecast today, Dylan. Do you think that they see the S&P 500 above or below 9,100 by the end of next September?
Above.
Above, they do. Correct. Good guess. Bank of America sees a 52% rally in the S&P 500 from now through the end of next September. Ilya, when we're printing S&P 500 9,000 hats, what will have happened to get us there? What's that world we're living in where Bank of America is correct? Something which, by the way, if you go over to the S&P 500 options chain right now, you go out to 381 days. We'll go 393 days, in fact, to the end of September. Yeah. And you were to look at 9,000 calls, they are 1 delta. So 1% chance of happening. In theory, we could sell a call spread up there, risk $50 to make 10,000. So why shouldn't we roll the dice, Ilya? With this one delta.
This looks like the kind of call that tells you that when Jensen Huang tells you that the AI boom is just starting, they're taking that statement at face value. Okay. I mean, assuming this wasn't a typo by an intern somewhere at B of A, I think it tells you that magical thinking continues to prevail. One wonders, obviously, where the magical thinking ends, but there's no telling when. I think another interesting kind of tidbit in this story is that we actually now have more ETFs listed than individual shares.
Wow.
In other words, we have more dishes than we do ingredients. we are so out there. Oh, and by the way, just in case that was not enough, there was some wonderful news coming out from the great Jared Dillion. I'm sure folks out there that are paying attention are aware. He's a great writer, former head of ETF trading at Lehman, and writes an excellent newsletter called The Daily Dirt Nap. And he points out that we've just had 21 new applications that Tuttle filed for income blast ETFs that seek to extract a options income juice out of basically synthetic long exposure. So you get a synthetic long via long call and short put options, and then weekly you sell the near money put option and then attempt to extract income from receiving the premium. Now, these 21 ETFs, agentic AI income blast, crypto treasury income blast, meme stock income blast, robotics income blast.
Dylan, these are all the things that we want to see.
Are we not in a bubble?
We're getting okay. Well, the actual report here. So I use 9,100 as the line in the sand, but for the sake of shock value as we go out the show, the actual Bank of America forecast has the S&P 500 hitting a peak of 9,914 in September 27. What's their rationale, folks? This is why they earn the big bucks. In the last 100 years, the average gain among 14 bull markets has been 177% over 59 months. And based on that data, because stocks are only up about 80% since the October 22 lows, to get to the average return of 177% over 59 months, they'd have to see the S&P go up to 14 by September 2027. So that's why we're going higher, because history demands it. That's as bad of a rationale as any. But you know what? Overtime's out of time for today. We'll be back tomorrow, same time, same place. As always, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Veio in New York. Good luck trading. Brief break. More Tasty Live after this. Ilya's here with Macro Money. See you there.
See you there, everybody.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's as sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, And I realized at that moment that my wife was not a camping gal. Look at
that's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. Let's say we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet. I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. You know, when we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you. Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
oh, here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. They're so nice for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Are stock markets finally feeling a bit weak-kneed? That's what we're going to be asking today on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And we've had some interesting price action here in these financial markets over the past two sessions. Friday, soggy. Today, the weakness continues. And when we start to look at what seems to be the catalyst, the situation gets ever more interesting, because putting a finger on something decidedly negative is not the easiest of missions. It's not like we got an unequivocally bad piece of economic data last week. It's not like we have a situation where there is a situation with the earnings or the geopolitical front where things are going in the wrong direction. But nevertheless, we seem to have the most potent 2 days of selling that we've seen since late March, which was, of course, that lead-in into Liberation Day and the bloodletting that followed. So what we're going to do is we're going to take a look at what seems to be at work here as much as we can make it out, and then take a look at what is expected in the days ahead to give us a little bit more clarity about where things may be going. So first and foremost, let's take a look at how these markets performed last week. And on the whole, things look relatively soggy, but not catastrophic once we take a look at the total results. So the S&P 500 down a little bit when we look at what's actually transpired here. NASDAQ down a little bit as well, but nothing like a huge destructive kind of a breakdown. Certainly not anything that would on net tell you that the markets had a significant amount of bearish conviction. I think when we consider here on the whole the performance across assets, what we end up seeing is a situation where the market, broadly speaking, continues the drive for lower interest rates. That's in the wake of the increasing conviction in the idea that we're going to get this rate cut in September. But when we put everything together here, the overall story looks quite a bit different once we start to unpick where these losses come from. And nowhere is this more interesting than it is in U.S. stocks. And you can see it here looking at the S&P 500. So here's Friday and here's today. So this is really where things start to get a little bit heady. And the reason that this decline is as modest as it is because, of course, leading into it, markets were kind of attempting to drift higher. And this is where things start to extrapolate on the conversation we've been having since last week, where it seems like really since the beginning of August, the markets are struggling to gain any kind of follow-through beyond 24 to 48 hours on any sort of meaningful catalyst, and thereafter they get stuck. And so we start with the markets at the beginning of the month fading what are generally good earnings reports from the first 6 of the Magnificent Seven. So we fade earnings, be they from Amazon or Google, or be they the explosive results from Meta. And in particular, those right here. There's a pop, there's a gap, and ultimately this comes apart. It happens again with CPI data, where we see the next big push. We take out these highs, we're not able to make any headway thereafter. We get another jolt from Chair Powell's speech at Jackson Hole, where he seems to endorse this idea that rate cuts are coming in the near to immediate term. Nevertheless, that fails to find lasting follow-through. We get another nudge higher, courtesy of NVIDIA, which appears to produce at least something of an upside surprise, albeit it is the smallest margin of upside surprise for the company in going on 2 years. We still, at least, managed to come up with results that the market broadly judges are good enough. And so after a day of sogginess for NVIDIA itself, we erase most of its intraday gains and we come up with ultimately a positive response from the market as a whole. Nevertheless, we still have a situation where within just 24 hours, the move fades again. And so it is with this that we enter this week looking at this performance and going, well, it seems like nothing happened, but if we consider the event risk on the board, we have a pattern that's emerging. And the response function seems to be when we get a piece of news that can be rationalized away, we do so, but none of it seems to be giving the markets the kind of impetus that builds upside follow through, even as you continue to see this decline in yields, and ostensibly that the 2-year scores a bigger loss than what we have at the long end tells you there's a level of urgency in rate cuts that's building into the system. In spite of that, incidentally, the US dollar manages gains up against the euro, up against the yen. Bitcoin telling a much more potent risk-off story, the high beta leveraged risk appetite sort of proxy that it is, down 6.9%. So the story last week, soggy in a modest way when looking at the averages, but dig into the internals and the price dynamics look relatively soft. It is with this that we start this week, and of course the performance at the beginning of the week here, this is just today's markets, not exactly encouraging. Stocks down significantly, although likewise significantly off the lows. We were down well in excess of 1% on both of the major indexes here, and clearly we've found a way to claw back quite a bit of lost ground here. Still, we end up with a down close on the S&P that the Nasdaq manages to erase almost all of it after hours. We nevertheless see that weakness prevails, and it prevails in spite of there not being a real meaningful catalyst to inspire it. The dollar only builds on strength, even as yields go higher with gold, which is a little bit incongruous. Typically gold, which yields nothing and is a kind of natural anti-fiat alternative, moves inversely of a strong dollar and of rising yields when that is the path for those. But clearly it still manages a strong increase. And so you get this sense of a kind of risk aversion binary in the markets today, where gold goes up, dollar goes up, stocks go down. Yields are the odd one out here. One would think they would be lower because bonds would catch that same haven bid, but that is not what is on the board. Raising the question about maybe there is an increase in uncertainty, maybe an increase from that in term premium and yields going up, not because of some sort of positive outcome, let's say a growth outcome that would diminish the need for Fed rate cuts, but going up for reasons of elevated uncertainty and a demand for greater compensation for that uncertainty from the markets. You do get a little bit of economic data on the board. The ISM manufacturing sector index comes out. It is a little bit soggier than expected, 48.7 versus 49 median forecast. So as ever, because this is in the logic of PMIs, where 50 is neutral, below 50 is contraction, above 50 is expansion, and the further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. The expectation versus realized result mix here tells you that you got the contraction as expected, but it was a little bit faster than the markets had benchmarked, if only by a hair. When you look at the internals here, you see that we've been running in contraction territory now for 6 consecutive months. Employment continues to shrink. It is well below the 50 line here. And the price structure a little bit better here. And on that basis, perhaps an increase in new orders. As the pricing structure here has cooled, so too new orders have rebounded over recent months, although they are still quite weak in terms of how fast the growth is going. But nevertheless, a little bit better. One wonders if this is happening because, as we've learned in the latest PPI data, companies are now passing through inflation costs to consumers rather than eating them. For the remainder of the week, we still have the service sector side of this equation, and that'll be an important touch point because, of course, services are a much bigger part of the overall economy than is manufacturing. The expectation that we're going to get a little bit of a pop here, a reacceleration, and the markets are going to be, as ever, very keen to see if that reacceleration exacerbates the sort of stagflationary messaging in the mix for employment and inflation within this data. If we take a look at how this has been developing thus far, we have increasingly on the service sector side elevated inflation. The latest numbers for this survey going back from July gave us the fastest pace of service sector inflation since going all the way back to August of 2022, whereas on the employment side, we are in contraction mode, and in fact have been in contraction mode for a while. Employment expected to shrink again this go round, although the forecasts are still modest, and the sample space for them is very small, so take those with a grain of salt. But of the past 5 months, there's only been 1 month of positive employment growth recorded for the service sector, and that was in May. Otherwise, from March through July, employment has been shrinking. And in fact, the pace of contraction in July hit the fastest since March. And so the sort of divergence between employment and inflation is telling us that stagflationary story that the Fed is so afraid of. But of course, the most important piece of economic event risk on the board this week comes from the jobs report. The expectation is that we're going to get 75,000 jobs added in the coming month. That is a hair above the 73,000 in the prior. The unemployment rate seen going up to 4.3% for the first time since mid-2021. So the overall situation here seemingly relatively modest. 4.3 is, of course, high relative to recent history, but certainly nothing like a problem historically speaking. And so we don't really have a major red flag necessarily in that increase, why the Fed might seek to delay rate cuts. And 75K would be weak. We of course, would need to look at the revisions, which have skewed toward aggressive negativity recently to get a more complete picture of the labor market. But of course, the concern becomes that the Fed isn't going to cut fast enough to head off what the markets seem to be worried about as an emerging downturn of significance. We can see here the markets now look at the probability of a rate cut at the September meeting, now only 2 weeks away, at 91.6%. The likelihood at this point, very, very strong, and this almost a foregone conclusion now. But where this data starts to become impactful is in the disparate setting for 2026. We can see that the Fed has been saying since December last year that it wants to do 50 basis points in rate cuts in 2025, and the markets are basically pinned around that and have been going all the way back to essentially May. There's been a little bit of a divergence this way, a little bit of a divergence that way, but the baseline here has held quite firm. The big difference instead has been in what's been going on here in the outlook for 2026. The Fed said as of June, the last time that they updated their forecasting on this, that they're only prepared to commit to 1 rate cut in the forecast for next year. And when we look at what the markets have, clearly they are veering on 3. So the markets are ostensibly concerned that the Fed is not going to ease fast enough, that the Fed is not going to provide enough stimulus, or that at the very least they haven't owned up to the degree of easing that will need to happen. The markets clearly here saying, well, we're prioritizing dealing with a growth scare. We're not worried about an inflation scare, because what the growth scare will do is bring inflation lower. So this much seems like the critical sort of reaction function on this data. And so if we, for example, were to end up with a jobs report that were to deviate significantly in the negative direction, well, then the risk would be that the Fed is not going to commit to all that the markets are showing here. In particular, if we continue to get divergence between the inflation situation and the growth situation. What we've just heard from Fed Chair Powell, in fact, signaled significantly that the committee is more so concerned about the inflation piece than they are about the growth piece, even as they begin to ease. And so this sort of disparity would create the risk that the Fed is not going to deliver enough soon enough for the markets to get the backstop that they want. And this, of course, would be a reason for consternation. We likewise would see a sort of soggy response if the numbers were not as weak, but perhaps closer to in line, or perhaps even a bit stronger than expected, because for how much the markets want these rate cuts, if the probabilities in the wake of this data start to get pulled back a bit, even in relative terms, then perhaps the markets would get a little bit uneasy with that perspective, though that's probably going to require a very fine balance of data that's just a bit warmer, enough to get the Fed thinking, but not so bad that it would convince the markets that actually they don't need the rate cuts that they've been pining for. And that's a more delicate balance. In any case, what seems relatively clear here is that the markets are entering this week on soft footing, and that their capacity here to keep building higher probably, given sort of the pattern that's developed since the beginning of August, will very much depend on event risk going in a tolerable way. And so looking at these ISM figures and looking at these jobs figures ought to be critical, and watching for their capacity to deliver follow-through even more so. Because for going on a month now, we've seen tolerable event risk give us 24 to 48 hours of exuberance, only for that to hit a wall and retrench. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Veio, looking at the Wall Street close and where things may go thereafter. Likewise, writing for the news and insights portion of tastylive.com. Commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
What is going on, everybody, and welcome back to Risk of the Week, or Risk and Reward. We got a new Risk of the Week. Today's Tuesday. We got a couple names we're going to get your guys' thoughts on. But before we get into all of that for today, Gus, my brother, how are we doing today? We had a long weekend.
We did.
It was a little quiet.
We did have a long weekend. I thought it's Monday all day, which is a double whammy. It's a double whammy because you keep doing things that you think you're supposed to do on a Monday, and then you're like, oh, it's not Monday.
Right.
And like streaming, like this is very strange to come in on the first day of the week and be on air with you in our Tuesday, Thursday slot. But the other side of that equation is every time I remember it's not Monday, I'm like, heck yeah, it's not Monday.
Exactly.
So, it's give and take. But red day in the market today. First solid red day we've had in like a while. I mean, which is funny to say, but like it started to feel like, a 0.25%, 0.5% red day is like a pretty substantial red day.
It feels like
in the state of this market. And all of a sudden I see a 0.8% red day, and I'm like, the sky is falling. Are we going to fall apart?
It's funny you mentioned that because we also got bought back up. I mean, we put the low in today just right before 11 o'clock Central Time, and we've been bought back up and closed into the close strong, and we're still heavily down on the day. So with that being said, the market has been taking some aggressive moves to the downside. It was a 3-day weekend. Gus, anybody else that's in here, don't lie, who opened up their platform and recognized that today's not a full regular trading day. Did anybody open their platform on Monday? I think it happens to the best of us.
I definitely didn't myself.
Okay.
I was fully in tune with the fact that this was Labor Day weekend, but I will say that was something that I would do all the time when I was just a trader, like before I started working here.
Yeah.
But now having my trading schedule tied into my work schedule, knowing that if we're closed, the market is closed, that does well for me.
No, 100%.
Bob, Lone Sophos, Emmett, good to see you all in chat. Bob, go Buckeyes is right. I hit the nail on the head with that one. Buckeyes in the under. That was sharp. Happy to hear that you tailed that one.
Oh yeah, what's going on, Emmett? No, I mean, as we get in for today, I see we got the platform right here. We can actually just do a quick tour to market, and then we'll get into some of our risks of the week. As you can see here, we got SPY getting bought up into the close pretty strong, but I mean, we gapped down, sold off even more, put in the low right before 11 o'clock, and just ripped to the upside since. VIX, a little disappointing, but showing a little bit of promise heading in on this Tuesday, right? I mean, we got the spike in volatility over the weekend, and then the market's just ripping into the close, and volatility's collapsing again. But volatility tends to cluster, so maybe volatility picks back up. Hopefully this is a sign hopefully it's a sign that the market is going to offer us lower lows for the sake of a couple of the positions that I have right now. And then maybe we get that pop in VIX. You haven't taken a look at VIX in a little while, right?
No.
It's been a minute.
I mean, it's just, it hasn't really been worthwhile for some time for me to be looking over at VIX too much. But yeah, we got a nice little spike as a result of all this action. It's just, I don't know. It's
been quiet.
It's such an interesting market too, because like I am just so aggressively bullish until proven otherwise at this point that like a day like today is like a pretty freaking bad day for my portfolio.
Yeah.
But I know that you're on the other side where you actually are short and need things to move down, and this like isn't enough for you. So it's just, we have a very interesting dichotomy going on here.
100%. With that being said, I mean, we'll see what we get for the rest of the week. Like, kind of to the point that you made, Gus. I mean, with such a big down move, I'm now just barely break even, right, on the QQQ position. It's like we had a massive down move today, barely break even on that. We got some Apple in there. I did take it. Look, I did get a little bit of long delta on though. Last week when we got the sell-off, I told myself I'm going to take advantage of this dip. I didn't take advantage of it in April when we sold off. So I was like, you know what? Let me get some long delta on an Apple. So we did that when the market sold off last week. Celsius, this was one of the risks of the week that we did, which was pretty fire. Celsius has been selling off a little bit more. put in a little bit better of a day for today. And now we're getting close to 50% of the potential profit on that trade. So maybe we take that one off tomorrow.
Yeah, the Celsius High Noon Corporation, is that?
The Celsius, exactly.
That's what you're talking about? Okay.
That was the headline that we were talking about. Let's quickly see how that panned out.
I don't remember exactly when that was. I'm sure we'd be able to see it. Maybe that gap down.
Let's see.
Yeah, for those unaware, we talked about it on stream some weeks ago, but Celsius had an incident where they're canned in the same factory as the High Noon vodka seltzers are
Something
canned.
light.
And there was one specific Celsius can that had a run where it was a Celsius can, but it had High Noon inside of the can.
Yeah.
On like a specific blue raspberry flavor or something. But anyway, yeah, Celsius. I can't believe this company has survived. I mean, I was like reasonably
Celsius?
certain. I was reasonably certain Celsius was going to go bankrupt like 2-3 years ago.
Really? Why is that?
They had a whole. There was like a whole legal thing where the FDA was involved, and they were like they didn't like what Celsius was putting in the drinks, and maybe they had to change their formula or something. But I remember though at Texas A&M. Celsius was like a big sponsor of all the athletics and everything. And so there was always people like around campus just handing out Celsiuses. Like you'd be walking to class and then there's like, like the Red Bull girls or whatever. Like somebody just gives you a Celsius.
Yeah, I know exactly.
Yeah, but I remember when they were starting to go bankrupt. Did they file bankruptcy? Am I crazy? Can somebody in chat confirm? Did they file bankruptcy or were they just close to bankruptcy? I know that Celsius was about to go under at one point. But when they were about to go under...
There was a massive rebrand.
Is that what it was?
I think there was a rebrand to where they changed most things to for Celsius. Yes, I think you're 100% right. Let me fact check it though.
When all that was going on, for whatever reason, they started like really forcing these Celsius cans on us, like the people around campus. Like they were clearly coached to be more aggressive in getting us to take the drink from them. If you politely decline, they'd be like, no, like take one. And then also if you said yes, they'd be like, you want like 3 or 4? So I don't really know. I never understood the calculus on that. Because how does giving away more free drinks, how is that conducive? Right. It never made any sense. I don't know. Maybe they were just trying to get more aggressive with their marketing.
Okay. I got you. So yes, anybody else can fact check this fact too, right? I'm going kind of quick here. But yes, the energy drink company Celsius almost went bankrupt multiple times in the late 2000s. In early 2010s before it became a success it is today. This happened several years before the crypto.
That's all like 2010s though.
Hold on, guys. let me get to the bottom of this. But I do know Celsius did a rebrand where they were focusing more on like something to where it kind of boosts your metabolism, kind of taking like that fitness category route. And I know they saw a lot more success there. And I think it was a lot of like the marketing department. They made some changes and then took off. I don't even think they made big changes to the product.
Interesting.
I think it was just the marketing. I mean, turned the whole company around. It's crazy.
Yeah, interesting.
Crazy.
Bob, no idea about Celsius. I'll stick with coffee. I'm kind of with you on that one, Bob. I have an energy drink every now and then, but it's never Celsius. I don't know.
I just ordered a 21 or 18 pack of Celsius. It just arrived yesterday. So
interesting.
We're reloaded for the week.
Also at A&M, one time at a basketball game, we were like the Celsius power row or whatever. Like they pick one row of the stadium and they give us all a Celsius and they put us on the Jumbotron.
Right.
And this basketball game was like an 8 p.m. start time. And we would do this power row thing at halftime. So it's like 9 o'clock on like a Tuesday or Wednesday.
Yeah.
In the middle of the week. Then they just come to us and they hand us all Celsius. And they're like, yeah, when the cameras come on, you got to chug these things. Everybody got to go crazy. You can shotgun it if you want. Like, just get amped. And I was like, I'll get amped, but I am not going to shotgun this energy drink at 9 p.m. on a Wednesday right now. I don't know who you think I am.
Yeah.
I feigned a little shotgun. We were on the end of the row from where the camera was, so it was easy to get away with that. And then just stocked those and had them at a later date. But but it was plenty. Everybody on our row, we were in the vast minority. Everybody else was slamming.
I just can't do the shotgun with the energy drinks. I mean, the carbonation it's
the carbonation.
I feel like the carbonation's stronger in energy drinks.
It really varies because I know like Red Bull, even on the cans, it says lightly carbonated. Like that's kind of like part of their pitch.
Have you noticed they're a little lightly carbonated?
I have. I mean, I have Red Bulls around the office sometimes because we have them.
I peep that.
Yeah. I'll whenever I have one, I don't like carbonation at all. So I try to whenever I pour a soda or a Red Bull or anything carbonated, I try to like get it to bubble as much as possible to get some of that carbonation out. So I'll just turn a Red Bull straight upside down over ice, and it has like no head on it at all. But whereas like if you did that with a Coca-Cola, you'd get it like halfway full and then have to stop and let it go down and do that a few times. So it definitely is lighter on the Red Bulls.
I gotcha. We'll get into the risk of the week right here. I don't want to give away what my risk of the week is too much as I'm on the position right now. But
Errol's about to. Let's flip over to slides here.
No, we'll go ahead and shift over to slides. As you can see, the down day was pretty helpful for today. We'll see if the market wants to digest that into the rest of the week, but we can switch on over to the slides here.
Yeah, so as always, risk of the week. Those who know. Every week we put on one high risk, high reward position. Let's dive straight in. Is yours first? Arrows is first. Go.
There we go. So, give me 2 seconds just to load right here on my end. My risk of the week this week is going to be gold. Some might say, well, gold is ripping into the close, and gold is absolutely ripping into the close. Sorry, let me let this load. Gold is trading at, I know. Gold is trading at the highs right now. I wanted to sell an out-of-the-money call spread, just get a little bit of short delta on. I don't feel, right, not that the market cares about our feelings. The market slaughters our feelings, but I feel like the market, there was a little bit of an overreaction today in the gold market at least. So I feel comfortable doing that, pretty decent premium. So I sold it in GLD, not GOLD for anybody that knows. If you know, you know. This was a defined risk position, so I feel comfortable trading a market like gold, especially as it's so volatile to the upside. And we're hoping this is going to be more like a little blow-off top at all-time highs that we're looking at right now. And we're hoping that the Fed cut is priced in. Or whatever the Fed is going to do, we're hoping it's priced in. So hopefully it's an overreaction. Hopefully we cool off a little bit, but it is defined risk. I collected about, I think it was $1.77. It was, collected about $1.77. It was a $5 wide defined risk. So we got a little bit of risk on that trade. And gold at its highs is definitely a risk of the week for me. Gold at its highs, because gold can be a different beast when it catches some momentum.
Yeah, Bob, I'm long-term hodl on gold. That sounds like it's going pretty well for you right now. Then, Errol's taking the contrarian angle here.
Long-term hodl gold is definitely a move. I like that. I like that, Bob.
Gold only go up. In the long term. But I can see this position having some credence to it. And this is kind of a cyclical market. You know, if you catch the right few week span, like you said, I mean, it can really move.
Yeah, no doubt.
Yeah, it's an interesting one. But
what you got? What do you got for us?
Also, it just should be GOLD. By the way,
it's just right.
I've been saying for a long time it should be GOLD, should be the ticker for this, and silver should be SILV, not SLV.
It's SLV, right?
But SILV.
Yeah.
You have the room, especially gold. The word is gold. Like, what if your company was called, like, I don't know.
I mean, we have a gold, but they're on my head every time I trade GOLD instead of GLD or the futures.
I know it. Anyway, all right. Moving forward. My risk of the week, and I actually have not put this on yet because I'm playing a post-earnings trade from earnings that happened today after the close, is Zscaler. Zscaler, had earnings today, reported strong numbers. They're up 3 to 4% in post-market action. I'm going to get short tomorrow morning at open, but this earnings call, I've never seen anything like this, is very, very strangely similar to their last earnings call in May. In May, they beat EPS by 11.64% and beat revenue by 1.74%. And this month, just today, they beat EPS by 11.25% and beat revenue by 1.74% again. Same exact revenue beat to the 100th%, which is very interesting. So after that move after that earnings call in May, which was obviously a very positive one, as was the one today, these are earnings beats, the stock took a gap up and then quickly corrected itself. And it stayed higher at the higher highs, but it corrected itself downward from that all-time high that it made coming off that earnings call. We're in a very similar pattern here where it's shot up almost 4% in post-market action since these earnings came out, and I'm expecting a similar reaction tomorrow morning off the open. So, and I think that the bids tomorrow will come in and prop this up even higher at open, and I'm going to be able to come in and swipe that.
I got you.
I'm going to take a 20 to 30 day bear call spread and take advantage of some of that call side premium. I don't know exactly what I'm going to do yet, but I'm going to be getting short Zscaler.
Nice.
Don't say that, Bob. But anyway, that's my risk of the week.
Yeah, I like it.
All we got for the risks this week.
I like the Zscaler. I think the premium is really solid in there.
This is just my favorite type of trade. Is the earnings overreaction play the other direction? Because it's so. I mean, it's nearly impossible to sustain this kind of momentum, because it's like. Everybody, the earnings numbers come out, and everybody frantically works to price in this new information, as the efficient market does. And then I just think that naturally winds up overextended, because as more and more people see the earnings call, more and more people come to buy, and it's just, usually you find that the momentum gets stepped on just a little bit after an earnings call of this nature. So, I'm just hoping for a slight, even just 1% move back down in the next 20 to 30 days. Probably going to do that closer to 21 DTE, as this is a very short-term sentiment that I have, and I'm kind of just trying to play an intraday correction tomorrow. Maybe I'll do a weekly. I don't know. But, that's where I'm at.
No, I mean, again, I like Zscaler. We'll see where the volatility is kind of sitting.
Oh, the tickers aren't 4 letters because they're on the New York Stock Exchange. That's a good call, Bob.
Yeah.
That makes sense.
Yeah. No, I mean, when it goes down to gold, GLD, whatever those might be, I don't know. It gets really hot in the kitchen sometimes. I know those individual underlyings. usually I'm a little bit more comfortable in, instead of trading those outright futures or some of those commodities sometimes. That's why I like the Zscaler position. I was really debating on choosing something like a gold commodity or a different individual underlying.
I will say too, I hate this company. Not like fundamentally.
Yeah, Zscaler. Why do you hate them?
It just frustrates me because we use it and it constantly keeps me from doing stuff.
Right.
And it frustrates me, yeah. But we use it in our workplace.
Yeah.
Clearly people are using it and getting good use out of it, but then twice a day, I'm like, Zscaler, why? I hate it.
I mean, the shareholders are loving it because, post-market 3 to 4% jump.
Man, screw the shareholders. Let me go on the websites I want to.
Come on, Zscaler. No, I know. We can start to jump over to the platform here. We'll check out Zscaler, see what they've been up to, see some of the market action.
You got gold typed in.
Hey, don't worry about hey, man. Don't worry about my gold over here. Just know me and my gold position are doing just okay. Where we at? $2, that's paying for commissions already. And
free trade. Let's go.
Free trade.
Exit.
Yeah, free trade.
Close it out.
Putting my stop at break even now. We're up a little bit and don't want to lose any on this position. No, Zscaler has been a pretty volatile one. We had that little pop. Now it looks like we might open unched, as Dr. Jim would say.
Good word.
Yeah. But I'm curious to see how this options chain is going to be looking at in the morning. I think that, if IV still propped a little bit and we're still kind of sitting near these highs, I'm not opposed to an out-of-the-money call spread. What is that conviction coming off of? Just the fact that if the risk reward is there, the IV is still high enough for Zscaler. I'm not opposed.
To this Kumu in our TikTok chat, yes, we are coming to San Francisco very soon. That's what?
It's this Friday.
This Friday.
When are they dipping out? I don't know when they're dipping out yet, but I know it's this Friday. They're going to be in San Francisco. It's been a little while since they then replay the morning show this morning if you missed it. They spoke about a few details
this Friday, San Francisco, completely free to attend, live trading event. Come hang out, come network with Tom, Tony, and all of the other wonderful attendees. We had a blast at the Chicago event, and this one will be a similar blast. How about that? Thank you, wonderful production team. Hot damn, we're great. You guys are the best. We pulled that art card out super quick. But anyway, yes, San Francisco on the agenda. We can go back to our scheduled programming.
Yeah, we can go back to the schedule. One thing I will say is Tom is a good public speaker. Man, I feel like there's a skill that you can kind of learn and get better at. But that was my first time seeing him speak in person, and although obviously he's on the network all the time, I was like, dang, bro, there's levels.
No, yeah. He did a great job. I mean, it really was, unbiased opinion, it really was as promised. It is fast-paced, it's high energy, it's great conversations.
It's fast-paced.
It's worth it.
No.
Oh, Bob, you're going to the NYC event? Heck yeah, man. Happy to hear it.
Zscaler right here.
Yeah, Zscaler. So this is the weird price action that I'm talking about. This gigantic green candle that you notice in the middle of the graph here.
The Drake candle.
These are what? What are these time frames here?
Oh, this is a 5 minute.
Oh,
it's a 5 minute Drake candle.
Oh.
And then.
Man, you're screwing me. You're making me make incorrect observations here.
Oh no, there we go. I thought you were talking about the Drake candle.
Now, I need to see the move in May. Show me some long term.
Let's zoom out a little bit. Let's get a little bit of a larger perspective.
Yeah, give me some days, give me some months.
Here we go. This is the last 365.
Perfect. Yeah. So you can see this massive run up that took place in May, and then their earnings call at the end of May, which led to these two big fat green candles that make that gap up. And then you see, we took the gap up, and then we kind of just have slowly worked our way back down as the market prices in the fact that we may have overreacted to that earnings in May.
We may have overreacted.
It's entirely possible that a 25% move on a $250 stock is a bit much for an 11% beat on EPS. Then we just gradually ran back down. So this is sort of also kind of clouding my logic of how I want to attack this. Is that this down move didn't come quick. It took a month or so before we kind of began to get that correction. And this move is a lot less pronounced than that move. So I'm debating. That's why I'm so indeterminate on my time frame here.
Let me pull up the IVR, see where this has been over the course of the last year or two. Kind of get that pump into earnings that we see here with IVR. IVR was sitting around 50s, 60s at some point. We'll see what the vol crush is looking like into tomorrow. It's going to look like we're getting kind of a flat move on Zscaler.
Someone just sent us a gift on TikTok.
Oh yeah?
Thanks, Aaron.
Hey, shout out to Aaron.
Aaron, you a real one.
Yeah, Aaron.
Love you, Aaron.
Appreciate you, Aaron. With that being said, I want to go back to a couple of these positions real quick. RKT was another risk of the week that we had put on. It still has quite a bit of time on it. I think it has 17 days left.
That was short, right?
Yeah, it was. We had bought a put. It was super cheap. It was one that had just popped off that popped off that one day. I think it was going crazy on Reddit. But that one's been really boring lately. It is a cheaper underlying. But just a quick update on that one. And then we got NVIDIA. We had sold an out-of-the-money call spread on NVIDIA. And I will say, I'm not trying to sit up here and glaze Tom, but Tom did have a perfect call out on NVIDIA on CNBC Live, I will say. And it popped back up on my feed the other day, and I was like, oh, I forgot I put on that NVIDIA trade, but I sold the out-of-the-money call, and we kind of got that like unched type move, kind of how much more can NVIDIA take? Like, how much more is it not, all the conversations with NVIDIA. So NVIDIA is starting to roll over a little bit more now here, and maybe we can milk those contracts for a little bit more. Other than that, we got SPY. Sold an out-of-the-money call spread on SPY, 17 days left till expiration. Break even pretty much on that trade right now. And we're going to have to see what the next few days give us before we decide how we want to manage some of these trades over here.
Yeah, it is just going to be very determinant, especially that some of those shorts. We're going to see if this is just like the bearish days that we've had in the past few weeks, where we just get this one day and then
I feel that vol. I feel that vol spike. Just wait on it.
Yeah, I wouldn't mind some vol. It would hurt my portfolio, but like I'm in a position where I can restructure. I mean, like I said, my strategy has always been long until proven otherwise. Right. So if proven otherwise, I am able to pivot. But agreed. Long gold is where it's at. Oh, I see. It's the hill. this goober. Saw that segment on the CNBC segment with Tom and NVIDIA. Played it the same way, hitting on a short call spread.
Hey, good. And I just got to say, making a call like that live on a big platform is like, Tom's used to the lights, but to give your actual opinion, right, that's like one thing people always avoid on something like a CNBC is like, let me just not give my opinion to someone to be like, yeah, this is exactly how I'm playing it. It's like, okay, you're putting your money where your mouth is. I see you. I see you.
But yeah, no, I mean, I agree. Yeah, it's a bold claim, especially on a stock like NVIDIA.
I know, because it could have gone either way. I mean, we could have had like a nasty short squeeze. Not that I feel like we've already seen that multiple times.
I mean, it's something that I've said before with NVIDIA is that like shorting, like why would I short NVIDIA? Like there's so many other things I could short that aren't the greatest company in the world right now. So I just, it's really hard to feel like it's time to get short on NVIDIA. So yeah, that's a bold claim.
I mean, I could play devil's advocate. This thing is way too high.
Oh, Emmett, okay. I didn't want to challenge that because I was pretty sure I wasn't sure that I was right, but I did think there could be some NYSE tickers that were four letters. But NYSE, it's also older. I have no idea how old the gold ETF is. So Oracle's
speaking of Oracle,
not NASDAQ? I'm surprised by that.
Speaking of Oracle, shout out to the trade idea, Emmett. But I mean, okay, Oracle has earnings September 8th. We'll keep an eye on that. I'll just say the IV is standing out relative to the other underlyings we have to look at this week at least. Let me see how these premiums are looking.
Oracle had kind of a run there.
Yeah, no, they did. Oracle's a sleeper.
Whatever happened with Circle?
CRCL.
Stop paying attention to this stock.
What were they doing?
Yeah, this is about what I thought would happen. Oh, man, I shouldn't have looked. I shouldn't have looked. I wanted to short this thing at freaking 300.
Circle, CRCL. Let's see what they're talking about. CRCL.
So that's gross. I knew that thing was going to collapse, and I just did nothing about it.
That IV rank looks
Trust your convictions,
hideous.
people.
The IV rank is hideous. Absolutely. This is what we call basura juice. That's what we call that.
Trash? Trash juice?
Trash juice.
Trash can juice?
Trash can juice. That's what CRCL is right now.
Word?
No, it has absolutely died, though. Sucked all the fun out of it.
Yeah, that was an interesting one. Yeah, when they were rocking it off IPO, I wanted to get short at 300, and then I wanted to get short at 320.
Oh, yeah.
Should have just done it. It's frustrating. I wish I never asked. Wish I never brought it up.
I know we got a few moments left here.
Check my Forex positions.
Yeah, what's up with the shekel right now?
Oh, I forgot I liquidated everything. I got no shekel. I'm up 50% on my Forex portfolio.
Let's go.
Entire portfolio.
Shout out to shekel.
And I do not know what I'm doing, guys. if you've ever wanted to jump into FX and you're worried you don't know how, I don't either, and I just keep winning. You should give it a try and see what happens. My entire strategy is I just go through the watch list of all the biggest currencies against the dollar on a 1 year time frame, and anything that looks close to 1 year lows I buy, and anything that looks close to 1 year highs I sell.
Yeah,
and it works.
You got any shekel right now?
I have no shekel.
No.
Should I put on some shekel? I can check it out.
I just like the name. It's got a nice little ring to it.
I don't. That's like down here somewhere. ILS. I'm looking for it. There it is.
As we take a look at the shekel, still going to be keeping an eye over here.
See, this is right in the middle of a range. I don't know how to do anything when things are in the middle of a range.
Yeah, completely agree there. Just taking a look at NASDAQ as we wrap here. We're trying to rebound a little bit. I'm still feeling pretty bearish, honestly. I mean, if we keep rallying personally, might start to look to get on a little bit more short delta. Even maybe just put on one short contract on MNQ and let it ride if the risk reward is there, especially with how volatile we've been. But I digress. We got a few minutes left. Anything else to touch on before we start to wrap here, Gus?
No, nothing else to add. Bob, great tidbit here. It's just mainly tradition on the NYSE. Nothing's a requirement, but NYSE typically 3 and NASDAQ typically 4. That's a good tidbit. I don't really trade currencies either, but I just put on some short Japanese yen. I'll tell you, Bob.
Nice.
Let's do it. I don't know.
Some short yen?
I don't know what the hell's going on. I'll take some short yen.
Look at these guys flexing on outside of regular market hours.
Oh, yeah, this thing looks way overextended.
Guys, if
sell.
We could get into some futures, guys. Don't let them have their shekel.
I'm still like a little.
Let them have their Japanese yen.
Still a little confused on exactly what a pip is, but I know how to input the trades. All right, $200, controlling 30 grand of Japanese yen.
Okay.
In the account.
We got some yen?
Yep.
Okay. Were we short or long on that?
Short.
Okay, I like it.
We're short the yen.
Okay.
Bob Gospel. That's why.
Bob Gospel.
Yeah, Bob. If Bob doesn't usually trade currencies, but he's on the Japanese, he's short the Japanese yen, then he must be a little bit convicted.
Might be.
At least a little bit.
That opinion came from somewhere.
Trade loses, Bob. I don't care about this Forex thing at all. Actually, now I apparently am Midas with the Forex, so you're welcome. I guess I would say. Congratulations, your position is a winner. I am still undefeated in my lifetime trading Forex without ever having any clue what I'm doing.
Undefeated champ. Anything else?
6-0. Think 6-0. Yeah.
Bro, that's Mike.
6 time.
Some Mike numbers.
Yeah, I gotta get a ring.
6.
Put it on my desk.
6.
6 rings.
6.
Expensive.
Anything else to add? 6-0.
He steered me right on Ohio State. Hope I can reciprocate. Good, Bob. Happy to hear it. Yeah, let's do this. This works. Did he short yen futures or the spot? The spot is the answer. The currency itself on TastyFX. Great platform. You guys should check it out. Anyway, no, I will let Arrow do his outro now. I do not have anything else to add. Arrow, take us home.
What was it? Short Japanese yen. No, we got gold risk of the week. We got some Zscaler. We'll see how the Zscaler earnings pans out, and we'll see how the rest of these underlines are looking by the end of this week. That's going to do it for risk of the week. Thanks for taking the time to hang out with us. We always appreciate you guys. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
welcome, good afternoon after that delay. We are here. Look at this background. So the wall now matches the start of the YouTube. Yes. And who is with me on this